Hi, welcome to Real Confusion, Episode 1. I'm Nevin Freeman, the co-founder of Reserve, and today I'm speaking with Rune Christensen, the co-founder of Maker DAO. Our conversation will be about Maker DAO's Endgame plan. If you want to learn more about Reserve or Maker DAO, I'll put the link to those projects in the description. Since this is the first episode of this series, I want to explain a little bit about the idea behind it. I realized a little while back that there are so many things happening in crypto that I don't understand. And you would think that I would understand them. Being a leader in the crypto world, you would think that part of my job would be to keep up with these different projects and understand them in detail. But in practice, I end up spending all of my time looking after the Reserve project. And so I often find myself wondering, how does that thing actually work? I don't really quite understand that. I would like to understand that better. And so I had the idea of speaking directly with the founders of different projects in crypto in order to understand, how does their thing actually work? That seems like the most efficient way for me to learn, if they're willing to speak to me, and also a great way for them to share their own understanding directly from themselves to their communities and the broader crypto world. It also serves potentially the benefit of having more people find out about the Reserve project, in particular, people who want to go deep and understand things on a mechanistic level. And we're always happy to have those people in the Reserve community. In the long term, if this works, I expect that we would go outside of crypto. We wouldn't limit this to just talking about crypto projects. We could look at ideas and projects and technologies and so on outside of the crypto industry as well. So welcome to this first episode. It's a little bit of an experiment. There's already things after having recorded the conversation that I want to do differently next time. But I hope you enjoy it. I hope you learn from it. These conversations generally end up being very long because you have to go into a lot of detail and ask a lot of questions and muck through a lot of real confusion in order to get to that real understanding. And so my plan is to also record a summary based on what I learn and put that at the beginning of the episode. So that's what you're about to see. You're going to see my summary of what I learned from Rune in a shorter period of time. And that should help you, if you don't have time to watch the whole thing, that will give you an overview understanding. And as you're watching the conversation, if you've already watched the summary, hopefully that will help you make more sense of the different things that are being discussed. Sometimes it's easier to articulate that kind of summary if you've just learned about something for the first time, as opposed to if you're one of the people who's been thinking about it in depth for like a really long time and you're kind of like swimming inside the fishbowl. So I'm hoping that when I learn about something new in one of these episodes, I'll be able to produce a sort of concise summary where I'm keeping in mind that external audience, kind of like myself, that's just learning about it, and sort of share some key facts that maybe the person that I've learned from would have had an even harder time doing because to them it's harder to tell what's obvious and what's not obvious. Okay, so what is the endgame plan for Maker? The overall goal of the endgame plan, as far as I can tell, is to try to solve several systemic coordination problems all at once. And I don't understand the details of the exact coordination problems that Maker has faced, but obviously DAOs generally, everyone knows that like DAOs are ridiculously complicated and hard to make work. And in this conversation, you'll see Rune refer to politics all over the place, all the different forms of politics. And I found it really interesting to just hear him talk about the sort of arising of politics in every little corner that they've experienced so far. The approach on a high level to solve that sort of coordination challenge is to break up Maker into many different pieces. Right now, Maker is kind of one monolithic system, and this proposal is to break it into one piece that's kind of the central piece called Maker Core, and then several other little pieces kind of around the edges called subDAOs. Maker Core is meant to exist forever, and I think the idea is to try to make it into something that will change as little as possible, whereas the subDAOs are actually kind of more expendable. They're things that can, new subDAOs can come into existence and sort of become part of the ecosystem. Some might do well and grow and thrive and become like a big part of the ecosystem. Some might stay small, or some might actually kind of go out of business entirely. And I say that in quotes, but it's kind of literally true because they're trying to make money, they're trying to perform roles within the system. And if they don't do that, they can actually be forcibly shut down by Maker Core. So that there's meant to be kind of an evolutionary process where the Maker core part continues to exist, and then the subDAOs can be more experimental, can try different ways of doing things, can compete against each other, and like in business, some of them will work, some of them will survive and thrive, and others will go out of business and then just be gone. And through that evolutionary process, the idea is to get better and better designs for how these different subDAOs perform their different roles. As I learned about the system from Rune, a metaphor emerged for me, which is helpful for me to understand. Depending on how much you know about banking, it may or may not be helpful to you. But the metaphor is this. I think of Maker Core as basically being a central bank, or being like a central bank, because of certain key things that it can do in this system. Maker Core in this system is able to ultimately control the creation of money, of the new stable, as we'll get to in a minute, the stable coin within the Maker ecosystem in this endgame plan. It can decide which subDAOs are allowed to basically create this new stable token. It also can decide whether, like, if a new subDAO can come into existence and be part of the system. It's almost like a central bank that's giving a banking license to a commercial bank to be part of its network, to exist within its network, and then it can delegate the power to a subDAO to create the new stable in the way that a central bank in our modern banking system often sort of delegates the power to create money to commercial banks. And then if commercial banks don't behave well, if they don't perform well, if they take on too much risk, and they do something that's counter to what the central bank wants, the central bank and the sort of regulatory apparatus surrounding it can pull the banking license and be like, hey, you're not able to be part of our system anymore. But they can also do other things. They can come in and take it over. They can do things to sort of steer the system. And that's actually very similar. Maker Core in this system has similar powers where it can take away a subDAO's ability to be a subDAO, but it can also exercise financial controls over the subDAOs, and it has to approve certain actions that they take. We'll go through this in a minute, but I just want to start you off with that metaphor because I think that's maybe the simplest way to understand just a general starting point for thinking about how the system works as opposed to the way that Maker works today. In this intro, I'm going to describe what I learned about the basic skeleton of the endgame proposal. I thought that we would have time to go through the entire thing, but it's so big and so complex that there's still quite a lot of complexity and detail that we didn't have time to talk about in the following hours of conversation. And there's even a few pieces that we did talk about that I'm leaving out for the sake of this summary. So this summary is meant to be like the basic skeleton to help you understand what the endgame proposal basically is, so that if you're in the Maker ecosystem and you sort of hear more things being discussed about it, or you see things written about it, you'll have something to hang those on, and you'll be able to sort of build up your understanding from a solid core. So that's what I'm aiming to do right now. One quick note about naming. The MKR token and the DAI token are intended to go on existing, but to sort of, in a way, be overtaken by what's currently in the proposal called new gov token and also new stable. So there's a to be named, obviously, not the actual names. I think the community has to figure out what the names will be. I didn't quite get to the bottom of how this transition will work, but it sounds like DAI and new stable will actually be fungible. They'll just sort of be different wrappers for the same token in a way. And MKR and new gov token, one thing that's worth noting is that new gov token is intended to continually expand in supply over the course of time, whereas MKR is fixed and is not possible to expand. That's possibly one reason for the transition. And there's, I think, like an initial fixed ratio between them. And so I'm not sure exactly how those two will relate, but we're going to talk a lot about new stable and new gov token, which are basically the successors to DAI and to MKR. Okay, let's talk about the basic functions in this new design for Maker. At the beginning, the plan is to have Maker Core and then 6 different allocator DAOs. And allocator DAOs are one type of subDAO. There's actually some other types of subDAOs that are plain in the system, but I'm not going to focus on those because the allocator DAOs sort of perform the most essential basic functions. And so the idea is that in this new system, Maker Core has no retail users. Like, you as an ordinary user couldn't go borrow new stable from Maker Core. You actually don't interact with Maker Core. It only serves the 6 allocator subDAOs in terms of that function of allowing new stable to be borrowed. And That's, again, kind of analogous to the way that a central bank and commercial banks work. You can't just go get an account with, say, the Federal Reserve. You have to get an account with a commercial bank, and then the commercial bank can have an account with the Federal Reserve. And so it's kind of a similar situation where the user interface, even on a smart contract level, is with an allocator DAO. And I think that's also meant to be true, and this sort of obviously follows and makes sense from an actual UI perspective. So the different allocator DAOs are intended to have their own UIs. So you might go to a completely different website depending on which allocator DAO you're interacting with. Each allocator DAO has its own governance token. So it's not just new gov token, which is meant to sort of overtake MKR. Each new allocator DAO, and the plan is to have 6 initially, will have its own governance token as well. So that's like 7 governance tokens in the mix at the beginning, and further subDAOs can be created and can have other governance tokens as well. So it's sort of a much larger number of different governance tokens that would exist. And those governance tokens for the allocator DAOs, you can think of them analogously as kind of like shares in a commercial bank, right? If you have Bank of America, it has its own shares, which are separate, obviously, from like the shares in the Federal Reserve or the ownership of the Federal Reserve. The tokens for the allocator DAOs, we always have to be careful making an analogy to shares because they don't function exactly like shares. In particular, there's no plan for dividends, and I'll talk in a bit about like how the tokenomics work. But still, it's sort of useful to think of that metaphor at the start and then fill in the details later. Maker Core has 2 key powers over allocator DAOs. Number one is that it can print an arbitrary amount of their governance tokens. So if an allocator DAO is in a financial situation where maybe it's taken on too much risk and Maker Core wants to basically wants to force it to raise capital, it can do that. It can just print units of that allocator DAO's gov token and sell them for capital. The second thing that it can do is it can actually seize and sell all of the assets that the allocator DAO holds. And I know this doesn't make sense yet. I'll get to the mechanisms of like why it's able to do this and sort of how that actually works in practice. I'll do an example in a minute, but you just have to understand these mechanisms first. So if an allocator DAO has like a bunch of ETH and a bunch of USDC and whatever, Maker Core has the power to basically grab those assets out of the allocator DAO contract and sell them off in order to basically raise new stable if it needs to. So those are 2 key powers that Maker Core has over allocator DAOs. Maker Core in this new plan still offers the same basic functionality that Maker does today, which is you can borrow the stablecoin, in this case new stable rather than DAI, and in order to do that borrow, that position has to be over collateralized, right? Just like in Maker today, you have to deposit, whatever it might be, 2x the amount of value in ETH in order to borrow some DAI. The same thing exists here, where with Maker Core you can borrow new stable, and that position is intended to be over collateralized by other assets. The difference is that, in this case, well, there are many differences, but obviously one big difference is that only allocator DAOs can make that transaction with Maker Core. So allocator DAOs can borrow new stable from Maker Core, and they have to have collateral assets in order to do that, and those positions generally need to be over-collateralized. And just like in Maker today, the borrowers for those positions have to pay interest on those loans. So today, an ordinary user would be paying interest directly to Maker Core, but in this new design, the allocator DAO, it's the one that's borrowed from Maker Core, and it's the one paying interest on that new stable loan. But the details of how collateralization works are actually pretty different in important ways. The biggest thing is that the positions that allocator DAOs have with Maker Core, instead of having, you can imagine an allocator DAO that has some ETH and some Chainlink token and something else, where let's say it has 10 different types of collateral. In the current Maker system, that would mean it has 10 different positions, and the collateralization is tracked on a position-by-position basis. That's not how it works in this new design. Instead, the positions are all cross-collateralized. So that means that Maker Core is looking at what's the total amount of new stable that's been borrowed by a single allocator DAO, and then what's the total combined collateral that they have. Even if it's 100 different kinds of assets, that's considered all together as one position. And so if the value of one asset goes down or goes up, but another one goes up or down, in a corresponding amount, such that the total position stays worth the same amount, well, then that might not really be considered a change. You don't have sort of individual liquidations of individual positions. So that's one big difference. Another big difference is that in this plan, there is no automated liquidation anymore. So in the way that Maker works today, if you have I believe they're called vault positions now, open, and your collateral drops in value, then an Oracle price feed is there in order for the Maker system to see that that's happening, and someone can come along and trigger a liquidation without any sort of governance intervention. But in this new system, that's actually not how it's designed. The Maker core governance apparatus is just in charge of monitoring the amount of collateral assets, or the amount of assets on the balance sheet, maybe it's not even right to call them collateral in this case, that each allocator DAO has, and to say, your outstanding loans are too high for how much total assets you have. We're not comfortable with that. We're going to come in and manually intervene. So again, no sort of automated Oracle-driven liquidations exist in the system. If the Maker core governance apparatus decides that a particular subDAO or particular allocator DAO is not within the right margin of safety, it can take action in a couple of different ways, according to Rune. The first thing that it would likely do is to begin minting and selling the governance token for that allocator DAO, which again is a little bit analogous to a central bank being like, hey, we don't like your capital ratios. We're going to forcibly create shares in your bank and sell them to the public in order to raise more capital to get your capital into a healthier state. Well, the token holders of that allocator DAO wouldn't want to be diluted, so they're going to try to avoid that scenario. And if their token starts being minted and sold, they'll do whatever is in their power to try to change the loan positions or whatever to reduce risk in order to stop that from happening. That's the first line of defense. If that's not sufficient, like in the scenario where there was really bad risk management and the allocator DAO actually ends up under collateralized or insolvent, then Maker Core can actually just seize all of the assets that the allocator DAO has and sell them, presumably for a new stable, in order to basically pay down that debt. And so that's quite a lot of power that Maker Core has over those allocator DAOs. You think of them as being these kind of independent things, potentially if you're thinking of them as businesses, but like a commercial bank, they're really under the control of the central apparatus as well. And then finally, instead of maintaining many interest rates, depending on which collateral asset is being posted in order to borrow the stablecoin, which is how it works in Maker today, I believe. The system here instead maintains a single base rate. So there's a single interest rate that allocator DAOs would all pay to borrow new stable, and Maker Core can raise or lower that rate, and that's like the principal tool of monetary policy that Maker Core has at its disposal, which we'll get to later. And so then that just determines the interest that's being paid by all of the allocator DAOs on all of the outstanding loans. Maker Core will then also offer a savings rate to new stable holders, and that's similar to the DAI savings rate. And so, you can imagine a scenario where the base rate is 5%, and allocator DAOs are paying 5% to borrow, and then Maker Core is offering some lower amount, I don't know what it would be, maybe 3%, to new stable holders in order to incentivize holding and usage of new stable. So hopefully you're starting to see how this will work. Where basically the allocator DAOs are able to borrow new stable against assets that they've deposited, and then they can go do things with it. I think it's going to be best to just walk through a simple example. So I've written out some notes for an example here. It might be a little clunky with me reading off the screen, but I think it's going to be the best way to kind of wrap our heads around it. So, okay, pretend that there's only one allocator DAO for this example. So we just have Maker Core and one allocator DAO, not 6, just keep it simple, there's just one, and nothing else, no other subDAOs, nothing else. That'll be the easiest to understand. And imagine that the system is just starting for the first time. So no new stable has ever been minted or borrowed or anything, we're just starting from 0. Pretend that the allocator DAO starts with 100, I'll call them allocator gov tokens, so their governance token. And let's just say it sells them all for ETH at a price of $1 each. we'll just use these small numbers, so basically they've raised $100 of ETH. That'll make it easiest to think about. So you have the allocator DAO holding $100 worth of ETH because they'd sold their new allocator gov token, and you have Maker Core sitting there, never has done anything yet. Now suppose that Maker Core starts out offering new stable loans at a 3% base rate. So basically the allocator DAO can borrow from Maker Core, but it's going to pay 3% per year in order to do that. And now suppose that there's some other asset out in the market. I'm actually going to use an R token from Reserve as an example here because it's a nice clean example. It's called HYUSD. HYUSD stands for High Yield USD. And let's say that's currently earning 6%. Okay, so you can put your money in HYUSD. It's a stable coin that earns 6%. And so the allocator DAO might borrow, let's say they borrow 50 new stables. So, and new stable is pegged to the dollar, so $50 worth of new stable, and they pay 3%. But then they go swap those 50 new stables for HYUSD, which is earning them 6%. So now they're earning that 3% spread because they're paying 3%, but they're getting 6%. And so then once this happens, now the allocator DAO would have $100 in ETH, which would obviously vary in value because the price of ETH changes, as well as $50 in HYUSD. And the $50 would go up a little bit as it earned interest. Let's just say $50. And so at this point, Maker Core's various governance participants would be in charge of monitoring to make sure that its assets exceed its liabilities. So let's think about that. So at this point, it would have $50 in new stable debt, so $50 in debt, and it would have about $150 in assets, the $100 in ETH plus the $50 in HYUSD. So 150 to 50, that seems pretty good. I would assume that Maker Core governance would be satisfied with that and would let that situation ride. But then let's pretend that the next day, ETH went down to close to zero. So let's say that $100 in ETH was now only worth $10. Okay, so now the allocator DAO has still $50 in new stable debt, but it only has about $60 worth of assets. It has $10 in ETH and $50 in HYUSD. At that point, remember, there's no automatic liquidation like there would be in MakerDAO today. Instead, Maker Core governance has to step in manually. So they might decide to mint and sell, say, I don't know, $40 worth of the allocator gov token. So again, they can create new allocator gov tokens if they wanted to, even though the allocator DAO had sold all of its initial governance tokens. And so as long as the market is happy to buy that allocator gov token, this works. The market comes and whoever in the market comes and buys $40 worth of that token, the capital is raised, and this is at the expense of the allocator gov token holders because they're the ones on the hook for managing the risk of the allocator DAO. But now the allocator DAO is back to $100 in assets. They had $60, $40 was just raised, and $50 in debt. And so maybe Maker Core is satisfied with that. But you can imagine the scenario where nobody wanted to buy allocator gov token because maybe people are like, well, this this experiment hasn't gone very well so far. It's day 2, and we're already close to under collateralized, so maybe we don't really think that this allocator DAO has good risk management or whatever, so we don't want to buy their token. Then Maker Core could instead basically seize and liquidate the assets that allocator DAO is holding. So it could seize and start liquidating the $10 in ETH and the $50 in HYUSD for a new stable, and until the point where it had purchased 50 new stables off the market to pay down that $50 in debt, or the 50 new stables worth of debt. And so in that case, but you can also imagine if the collateral on hand were worth less than $50, then it could take a loss. Then Maker Core, maybe it had lent out 50 new stables and it can only buy back 45, and it's just out 5, then then it would itself have taken a loss. And so it really wants to avoid that. And that's kind of, avoiding that scenario of taking any loss is kind of the principal job of Maker Core's risk management duty. So that basic example, I hope, illustrates how the minting and collateralization of new stable works in this system. Okay, another fundamental piece you might wonder about is what keeps new stable pegged to $1? Will there be a peg stability module like there is in Maker today? And as I understand it, the answer is no. It will work in a different way. And it's basically driven by the fundamental unit of, or fundamental tool of monetary policy that Maker Core has at its disposal, which is manipulating the base rate. So New Stable's market price is intended to be $1. And let's look at the way that manipulating the base rate is intended to work to change money supply and to change the market price of New Stable. So first off, if you are an allocator DAO and you can borrow at 3% and then swap into an asset that's yielding 6%, you'll want to do that as much as you can. And so as long as there is, as long as that 6% yield seems safe enough to you, right? If you can borrow at 3% and get 6% risk-free, like if you're holding US Treasuries, something that many people consider low risk, then you'll want to do as much of that as you can. And so basically what that means is, if let's say that there's a risk-free rate in the market, let's just say for the sake of example that it's 6%, if Maker Core drops the base rate below 6%, they would expect allocator DAOs to basically borrow and then basically swap into something that's earning that larger amount. And when they do that, that would be expanding the supply of New Stable, and those New Stables would be getting sold into the market as allocator DAOs are swapping for other assets that have that higher yield. And that selling pressure would be pushing the price of New Stable down in the market. Okay, so if the price of New Stable is greater than $1, Maker Core can lower interest rates to encourage more borrowing and more selling of New Stable in the market until the price approaches $1. On the other hand, if you're an allocator DAO, and let's say that instead of only having to pay 3% to borrow New Stable, you now have to pay 9%. But you're only earning 6% on the assets that you've swapped into, you'll want to repay your loan in order to avoid losses. So, because you'll be basically just losing 3%, right? Because you're paying 9% to borrow and you're only earning 6%. And so in that scenario, you would want to take that asset that you're holding and go and swap it back into New Stable so that you can repay your loan and stop taking those losses. And when you do that, you're now buying New Stable off the market. And as you're buying, and everyone is buying, the idea is that that would then be driving the price up, and Maker Core can leave the rate high enough to incentivize that buying and closing of positions until the price approaches $1 again. So that is the way in which the base rate is intended to be used to basically move the price of New Stable down or up as needed in order to approach that $1 peg. I personally find this approach slightly unsettling, so I'm going to take a moment to do a little diversion from just the summary and also provide a little bit of my thought process and analysis, kind of how I'm seeing it. Hopefully that will be useful to someone out there, but just to be clear, this next section is my thinking on it. It's not what the current plan is. So this approach doesn't work like a fiat-backed stablecoin in terms of how it stays stable. With a fiat-backed stablecoin, anytime an asset is trading at above the peg, let's say it's the dollar, let's say it's trading at $1.01, market participants can go and send dollars to the issuer and get stablecoins back, and then go sell those stablecoins for $1.01 and make that free profit. And that's an open arbitrage loop, and that incentive is very strong and very simple and always present. And so that would bring the price back down and no governance action is needed, etc. Likewise, if the stablecoin is trading at 99 cents, arbitrageurs can buy them off the market and redeem them for $1 with the issuer. And again, that's just an open arbitrage loop that is a very simple way to keep the asset trading at exactly $1. And that is actually basically how Maker works today with the peg stability module in a secondary way, because DAI can be sort of minted and redeemed one-to-one for other fiat-backed stablecoins. New Stable, on the other hand, is not issuable or redeemable by ordinary users, only by allocator DAOs. And allocator DAOs can't necessarily redeem New Stable for $1 in assets, nor can they necessarily issue New Stable by having $1 in other assets on their balance sheets. This gets a little confusing, but let me try to explain. So like with the PSM, you can just show up with 1 USDC and get 1 DAI, or show up with 1 DAI and get 1 USDC. Now, in principle, Maker Core could state a rule that basically said that allocator DAOs could hold, for example, USDC or another fiat-backed stablecoin on their balance sheets and also borrow new stable and sort of like one-to-one, and that Maker Core would not intervene and basically would say, like, if you're expanding your dollar capital and expanding your dollar debt one-to-one, that's fine. And if they did that, then it would actually kind of make it so that an allocator DAO could essentially take in a USDC or something else and then introduce one DAI into the market, or a new stable into the market one-to-one, and do that same redemption, similar to the PSM. The problem is that, the way I see it anyway, and I could be wrong here, but with the PSM, my understanding is that you can have those positions with 0% interest. And so the positions can be opened in order to exploit that arbitrage if the token is trading at something other than the peg, and then they don't need to be closed because there's no interest being paid. But with the new Endgame proposal, there's a single base rate. And so if Maker Core wants to charge interest broadly to the allocator DAOs, then it wouldn't necessarily have a way to offer 0% interest for those positions that were, one-to-one with stables. And so if that's the case, then if I'm an allocator DAO and I've brought in USD capital and borrowed new stable and put it into circulation, I have to pay interest on that loan. And I have the incentive to then go rebuy that new stable out of circulation in order to repay my loan, and that might mess with the peg again in the opposite direction. So there's not quite that, I don't quite see a way to have that open arbitrage loop. If it were up to me, if I were the one designing this, I would be looking for a way to make new stable directly issuable and redeemable for $1 in assets. Not necessarily even dollar stables, but that might be the easiest. And I would look for a way to do that at least for allocator DAOs, or even better, by ordinary users. There's one direction I can imagine for that. I'm just going to say it because maybe someone in the Maker community will find it interesting. Imagine if anybody can redeem, let's say there's like a minimum, like 100K. Anyone can redeem 100K or more new stables directly to Maker Core. And in exchange, they get the equivalent, like $100,000 or whatever, $500,000 if that's what they redeemed, in assets, where those assets are taken pro rata from the allocator DAOs. Pro rata maybe relative to the amount of new stable debt that they all have or something. This action, if all the allocator DAOs are over collateralized, it would increase their collateralization ratios. And that's because it would be reducing their debt more than it would be reducing their assets in percentage terms, right? So if an allocator DAO had, say, $1 million in debt and $2 million in assets, and then let's say you take away 100K of its debt and you take away 100K of its assets, then now it has 900K in debt and 1.9 million in assets. And so I'd be better with a diagram, but you can see that it actually increases their collateralization ratio to do that. And you can imagine that perhaps allocator DAOs would have to maintain some of their capital in USD stables in order to be seized for this purpose, and maybe if non-USD assets had to be seized for this purpose, they pay a penalty or something to try to make it more convenient. On the flip side, you can imagine anyone can come to Maker Core and issue, say, same limit, like 100K or more new stables directly from Maker Core in exchange for bringing the appropriate amount, the equivalent amount in USD stables. Basically the same thing happens in reverse. The new stable debt gets distributed pro rata to the allocator DAOs, as do the USD stables. So basically, as a user, I come and I get the 100K new stable, but it's not my debt. It's actually debt to the allocator DAOs, but the assets that I provided, the 100K in assets, gets distributed also pro rata to the allocator DAOs. Now in this case, it would be decreasing the collateralization ratio for the allocator DAOs. And so the more that happened, you could actually have an allocator DAO that gets to the point where Maker Core feels they need to step in. So when people do this, it would still cause the allocator DAOs to ultimately have to change their positions, but it does create this open arbitrage loop where new stable can be issued and redeemed for $1, and that would keep the peg nice and steady in a way that, I don't know, from some vantage point at least, is maybe a simpler mechanism than the interest rate manipulation. And then it would sort of kick the can down the road and require the allocator DAOs to manage their positions given the way that they have been changed. And so anyway, maybe you'd need to rate limit the how much they can be changed so that someone can't force liquidation of allocator DAOs, etc. But I just wanted to throw that idea out there for anyone who's patient enough to watch this video and understand this, this proposal for Maker while it's in the formation stage. If I was the one designing it, that's a direction that I would pace back and forth for many hours thinking about. So let's talk about the tokenomics of the governance tokens, the new gov token and the allocator gov tokens, the allocator DAO gov tokens. So the new gov token is intended to increase in supply indefinitely, with faster inflation at first, slowing down over the course of time to a steady fixed annual inflation eventually. At least that was my understanding. I'm not sure the exact numbers, but so there is intended expansion over the course of time. But then you might wonder, like, well, is there anything to counterbalance that? Like, what gives it value? And there's a very interesting mechanism here, which is, I'll call it like buy and lock, where the system doesn't buy and burn the token, nor does it distribute dividends, but as the Maker Core system generates revenue over the course of time, it uses that revenue to accumulate the new gov token, and then it deposits the new gov token along with new stable as the corresponding pair into DEXs as an LP position. So it's basically providing liquidity between new gov token and new stable, and it just does that more and more. And so as it's buying more and more new gov token out of circulation, it's reducing the circulating supply. But it's doing that by putting it into these LP positions, which adds liquidity and thus probably usability and usefulness to the token, rather than just burning it. But it presumably isn't going to just withdraw that liquidity and go dump it, and so it is having this effect of reducing the broadly circulating supply of the new gov token. The allocator gov token plan is pretty similar, continual inflation as well. I'm not sure the exact dynamic. Also, as I've mentioned before, the allocator gov tokens are mintable by Maker Core. So the supply of the allocator dev tokens can be expanded by Maker Core. And then there's the same buy and lock mechanism, but just with a slightly different twist, which is as the allocator DAO generates revenue, it will also eventually, with enough excess, it will end up accumulating its own allocator gov token, and it will also deposit that in a DEX as an LP position, but it'll do it instead of against new stable, it's against new gov token. So basically new gov token and the allocator gov token for that allocator DAO get more and more liquidity deposited into DEXs over the course of time. And Rune said something interesting, which is in this case, I think the allocator DAOs are meant to actually then like burn these LP positions in the sense of like, I don't know, somehow like doing it with a smart contract or throwing with a key or whatever, so that it can, you know that they can never go withdraw those allocator gov tokens or new gov tokens and sell them. They're just sort of permanent liquidity that's being provided in the DEX world. So it's kind of getting close to burning, except that the token is still there so that you can trade back and forth between these two, but it's just there sort of only in LP position form. So those are the basic forces that control the supply of the new gov token and the allocator gov tokens. The Endgame plan also has a sort of farming system baked into it for how these tokens get released. So for the new gov token, each allocator DAO will get some of the new gov token streamed to it for use as internal cash. So going back to that metaphor, it's almost like the central bank is deciding to airdrop some of its own shares to commercial banks. The commercial banks can then like sell for other assets in order to like have assets to kickstart the system. Not something you would expect to hear about with an ordinary central bank, but in the wild world of crypto, why not? And then each allocator DAO will also get some of that new gov token streamed to their own allocator gov token holders. So if you're like a gov token holder within a particular allocator DAO, you'll get some of the new gov token, which again is like the replacement for MKR, streamed to you over the course of time. I'm not sure if you have to do anything to earn that, if you have to stake or something, but there's basically a budget from the Maker Core perspective to stream tokens to those allocator gov token holders. And then the new gov token will expand supply indefinitely. Like I said, I forget the exact plan for the expansion curve. And then, so that's how the new gov token can sort of get distributed and farmed. The allocator gov tokens are also streamed for farming, but they're streamed to the new stable holders. So if you hold new stable, which again is sort of the new version of DAI, then you can choose, I think you might have to make a selection, I don't know that you get all of them, but you can sort of choose which allocator gov token you want to be earning. Then by doing that, you sort of accumulate ownership in the system over kind of this commercial bank layer, just by being, kind of a holder of the money that the system is issuing. Yeah, the allocator gov tokens, right, the supply will expand indefinitely. The rate will halve every 2 years is the current plan, and eventually settle at 3.75% annual expansion ongoing after that. At least that was the number that Rune had in mind in this conversation. I'm not 100% sure how solidified any of these things are. So, okay, that covers the most basic economic mechanisms of the endgame design. Note that there are other kinds of subDAOs that I didn't even mention. You'll hear Rune talk about them a bit if you listen to the whole conversation. SubDAOs are expected to maintain their own front ends and get paid to bring in users. That's a whole other mechanism that I didn't mention. And then there's also something called neural tokenomics that we didn't even have time to cover in our extended conversation, so you'll hear Rune refer to it, but that's just like a further stage that's later in the game, later in the end game. Let me talk about just like a few more things. I'm going to talk about the governance system a little bit, the use of AI within the system, and the higher purpose aspect of all of this that the Maker community is taking to it. So Maker core governance oversees subDAO governance in some cases, whereas in other cases it leaves it to them to figure it out. So, if a subDAO wants to make like an important governance decision, there's some types of things where they actually have to like submit that and have Maker core governance like look at it and decide like ka-chunk, like yes, this is okay, you can do this thing that takes on this risk or whatever. Whereas in other cases they'll be able to autonomously do things. In general, Maker core governance is, as I understand it, in this iteration, meant to have more specific roles that look after particular pieces, rather than everything being done by the general token voting sort of democracy mechanism. But it still ultimately falls back on governance token votes when needed. I didn't end up with enough understanding to enumerate all the different roles that are planned for governance, but you'll hear Rune talk about that some in the conversation if you listen to the whole thing. The intention, there's another big shift in the way this is being thought about, which is the intention is to codify as much as possible in terms of explicit rules, like written rules in English for how the different roles are supposed to work, what you're allowed to do and not allowed to do, what you're supposed to optimize for, et cetera, et cetera, et cetera, in order to define like what is cooperation, what is good behavior, and what is defection. And Rune made the point that while this may seem way more complicated and bureaucratic, it's trading explicit complexity for implicit complexity that was actually already there in this kind of messy political process. So the idea is like, if you just don't have all those rules written out, then everyone just has to sort of like bounce around and deal with all the convincing and politics and whatever, as opposed to having sort of pre-decided these are how these things should work, and we're going to judge you based on these written rules, and if you don't behave in accordance with the rules, then we're going to take this predetermined action and what have you. And so the intention is for it to be this like enormous corpus of written rules that the different roles within the governance system are meant to follow. And that's obviously not something that exists on chain. That's something that sort of exists, just out there. But it's meant to guide how this all works. Now, let's talk briefly about the use of AI within the system. If you've been interested in Endgame, you've noticed that there's some chatter about the way that it relates to AI. So concretely, the plan is to use LLMs, large language models, in multiple ways. I probably don't fully grasp the totality of the plan here, but there are two key parts that I picked up on. One way to use LLMs is in generating rules. So I just talked about like the rules that would exist in the Maker core governance system. Well, the plan is actually not to have humans write all of those rules. The plan is actually to use LLMs to generate some of those rules. And that might work via like generalizing from certain examples, or taking other inputs that would allow an LLM to create a bunch of structured rules that might actually be clearer or easier to construct than if humans had to create them all. Rune said that their working rule set is already 130 pages. I haven't seen this. I would love to take a look at that. And the intention is for it to become something much greater. Like he used the number 13,000 pages once they start using LLMs to generate rules. So it's like using AI to generate this enormous rule book to create this like a sort of very formal bureaucracy to operate instead of kind of leaving it all to vagueness and decision. And so that's one expected use of LLMs. But then the idea is not just to use them to generate, but also to use them to interpret. So the idea is to use LLMs to interpret behavior of the system and its participants. So for example, if someone presents a governance proposal, they would have to include adequate justification for that proposal. And the idea is that a human wouldn't necessarily have to look at that justification and decide whether it is legitimate, whether it sort of checks the box for being the type of justification that the system wants. An LLM would actually process that and come up with some answer. Now again, these LLMs obviously aren't running on chain, so I assume that it can't be the case that an LLM has any sort of authority, but there can be sort of an agreed upon code base, an LLM tool that many people run or something in order to process and sort of create consensus about like, all of our systems are pointing to this thing and saying like, hey, we caught you doing something that wasn't the thing that you were supposed to do. And so now we're going to take this action that was like predefined in the rule set. So the idea is to kind of almost have like an LLM powered like police force or kind of something, a surveillance system or whatever that's watching the actions that are being taken, possibly on chain, but also like the things that people are writing on forums or what have you, in order to help the humans make sense of what's going on and basically follow the rules that have been created. Because it's like a human probably isn't going to read that 13,000 page rule book, but an LLM easily could, and so that might actually make it possible to implement this more complicated bureaucracy, or at least that was my understanding of the proposal. So super fascinating. I would not have thought of doing something like that. It sounds kind of crazy to me, but hey, if that works, like that could be really interesting. Rune, so I'm going to talk a little bit about the concept of higher purpose. This is the last part of the summary. Rune believes that DAOs work better if there is some purpose other than just profit. Because smart people want to be a part of something bigger. They don't just want to make money. They want to be part of something with more meaning. And that resonates with me too. The clean money plan, which was the earlier version of the Endgame proposal, was aimed at addressing climate change. That was kind of the big purpose that Rune and I think others had decided to point the maker community at. But I learned in this conversation that Rune concluded at some point that the solution to climate change was just nuclear energy and didn't feel like Maker trying to just do things to fund that was really going to make the difference. I think he also concluded that just contributing money wasn't really going to strike at the actual bottleneck for big problems in the world. Oftentimes, coordination challenges are a much bigger barrier than funding, and I certainly agree with that. In the artificial intelligence safety field, for example, there's been plenty of money for a while, and it's just like, what do we do with the money? Like what can be done to coordinate humans around the world to make good decisions about AI? That's really the challenge, and it's not obvious how to convert money into progress on that sort of challenge. So the evolved plan is to focus on basically aiding with the AI situation rather than focusing on climate change. Rune and others are interested in impacting the outcome of what's happening with AI today, and doing so by contributing coordination technology insights, not just money. And so instead of just having like a purpose fund that like donates to things, it's like actually trying to do things that are making concrete contributions that might affect how the field develops. I want to note that Rune and I see things very differently when it comes to long-term AI risks. We're both worried about someone creating some kind of misaligned superintelligence that like really messes with the world and causes all sorts of destruction. But whereas, I'm more worried about like some, like kind of anyone doing that just by creating powerful AI and by virtue of the fact that it's very difficult to align it, it seems, versus he's much more worried about the situation where, we decide, okay, these are the special chosen few that were allowed to create AI because anyone else might do something dangerous, but then having a big power differential where because of that, they're able to kind of control the world and become dictators, and at some point decide like, okay, now they're going to create the superintelligence and sort of become the God King or something, and he's more worried that in that scenario, you could have sort of one agent or one AI kind of take over and cause massive destruction everywhere because you don't have a bunch of other powerful agents to keep it in check. Pretty different perspectives, and as a result, he's very in favor of open source AI development so that everyone has similar levels of power. While I personally find that idea pretty disconcerting, I see it differently. But the thing is, like, I think that these dynamics are very complicated and hard to predict, and I think it's good to consider as many angles as we can right now during this critical moment when broader society is starting to take much more note of existential risks from AI than they ever have before. So it was great to hear a viewpoint other than my own. And that is the summary. So next up is the whole conversation with Rune that led me to this understanding. And I just want to remind you that to reach real understanding, we have to kind of muck through, we have to sit with our confusion. And that's why the name of this series is Real Confusion, is kind of taking the time to be confused and acknowledge confusion and actually use that confusion. Because confusion to me is like the experience of noticing like, that like doesn't quite fit. That doesn't quite make sense because I thought it was this, but then now it seems like there's this other thing, but they don't fit together. So I'm gonna follow that sense of confusion and use that to generate a question so that I can then learn the next piece. And then once I learn enough pieces, it's like, now they all nicely fit together. Now I understand. But if we're resistant to confusion, if we're like, I feel confused, just like push that away and like just look over here, let that go away so that things feel okay again, then we don't actually get to learn and get to that real understanding. So you'll see in this episode me sitting with my own confusion and trying to use that to generate questions. And that's really what this is about. And I hope that you do the same thing. You might want to pause the video if you notice you're confused about something, go look something up, try to build your own understanding. At the same time, if you find it slow because I'm sitting there kind of wondering or not saying anything or asking questions or whatever, I recommend trying out watching the video at like 1.25 to 1.75 times normal speed, which sometimes can actually make it easier to pay attention because maybe it just keeps you engaged a little bit more. Maybe if you're watching the video waiting to hear, Rune's opinion about a certain thing, if you're going through it a little bit faster, you'll be able to keep your attention on it. Anyway, just suggesting that. When I just noticed when I was watching it, when our editor sent it to me, I was like, this feels like pretty slow. Like even though it's the conversation I was in, like I enjoyed watching it more at a faster pace. And then one last thing, for some reason, our podcasting software introduced like a delay between Rune and I in the conversation. So it's like being on a video call where you say something and then takes a few seconds for the person to hear it and vice versa. That made it really hard to have a natural back and forth conversation. I tried to troubleshoot it, but it didn't work. So we just kind of soldiered through, but it was hard to interrupt the other person to like comment or question. And so the cadence felt a bit awkward and stiff while we were on the call. On the video, it's not quite as bad, but I just wanted to call that out. If you notice that it's like a little weird, that's probably why. I'm looking forward to doing these hopefully in person in the future, or at least with a better connection, so that we can have a more comfortable conversational flow. And thanks to Rune for sticking with it, even though we had that technical challenge, and just for being part of it overall. And now I give you Rune Christian describing, in his words, the endgame proposal for MakerDAO.
Endgame is this overhaul to Maker that aims to actually reach a true sort of long-term sustainable decentralized end state of the system, right? Where it will not really need any further major updates or sort of tweaks or kind of what to call it, sort of like admin changes in a sense, in order to just continue to work and continue to keep the stablecoin stable and react to all these like different things that it has to be able to react to and adapt to. And so the reason why this is so important is because, this is kind of the fundamental premise of a decentralized stablecoin and a DAO, that you shouldn't rely on some kind of authority or rely on some kind of very powerful process that can make significant changes in order to just be able to sustain the stability of the system, because you'll just never be able to guarantee that it's not going to change over time, or even that you will have things like politics change it in ways you don't want it to change, or capture of different kinds and so on, right? So it's really this idea of like resilience at the absolute core. And actually, I think an interesting way to kind of think of it is that, I mean, one of the things that Maker originally pioneered was we were like the first project that was like really, really hardcore with technical security, right? So we did formal verification, and we spent a huge amount of time writing like very peculiar code where everything was like entirely designed around it needs to be safe, it needs to be secure, it needs to not break, even if it gets a ton of money in it and hackers will be attacking from all sides. It needs to be able to scale to any level, right? And so it's like, it's sort of the insight is the key to be able to scale is actually safety. It's like security. And it was great, right? And it scaled and we got lots of users. But then what we ran into was this problem of the scalability of basically the governance layer and the, in some sense, the social layer or the human layer. So Endgame is kind of like applying that principle of like the way the governance must be designed is in the same way of like maximal resilience, maximal immutability, even if it gets sort of, in a sense, attacked or sort of interacted with from all sides by actors that are just, they're there to try to extract value out of it or trying to gain some kind of benefit for themselves. And the rules must be
it's
able
almost
to...
like creating a new nation state and form of government where you're setting the rules and then you're letting it play out, and it has to work for hundreds of years.
Yeah, that's a whole other, like analogy as well. That completely makes sense. And then you've got, I mean, and then sort of fast forward, I mean, the two main mechanisms we use or tools we use to try to make this reality is, first of all, it's this concept of subDAOs, right? So we can kind of say the way that we make the core system really, really safe is we made it extremely rigid, which is kind of also, I mean, that's also kind of a well-known principle in smart contracts, right? I mean, the simpler they are, the safer they are. So with subDAOs, it allows us to say the core is going to be super, 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 super simple, super, super, super rigid. It follows certain rules in certain ways, and those rules are totally immutable. And that's actually fine because in the end, it doesn't need to do so much because a lot of the complexity and a lot of the sort of moving fast and growing in new and innovative ways, that's going to happen then in the subDAOs. And this, I mean, there's another principle that's called, kernel space and user space in computing, for instance, right? That so what we're creating is like this maker core kernel space, or you could think of it as like the nation state, the legal system, and then the subDAOs are like the user space. They're like companies in the nation state, in the network state or something, right? That can go out there, they can do their thing, but they might actually fail, and that's fine because there's going to be lots of them, and there's going to be like an evolutionary process. So it's like the subDAOs, they can have a lot more kind of human fragility. They can be captured by insiders or descend into politics or something, and then they just fail, and it's just sort of a graceful failure. Well then they fail, right? But Maker Core focuses on kind of managing the tail risk of this ecosystem and ensuring that if a subDAO fails, it's not going to take down the whole system. You can just, like, it locally, in a sense, it's not great for those who were involved. But on the other hand, that's the whole point of DAOs and DeFi and, that's crypto, right? It's the whole point is to sort of give people that responsibility, right? So if there's a failure, then those who were directly involved in running the subDAO, they're going to be the ones who lose out, not everyone else who didn't make the bad decisions, right? Or didn't safeguard against the random events that turned out to be occurring. So that's kind of, that's sort of the one side of it to try to make it really solid, right? Is that then we have this, we get sort of this rigid, simple core, and then these subDAOs where there's sort of very heavy sort of skin in the game, right? Put your money where your mouth is. Like if you get a lot of flexibility, a lot of options are available to the subDAOs, but they're smaller groups and they're gonna be directly sort of on the hook for any bad decisions they make. Which, I really want to contrast that to kind of the status quo that was the big problem we ran into, right? Which is the old model we had was based on these things called the core units. And the way they basically functioned was that they just ballooned into this gigantic budget And the problem was there was not really any kind of like, alignment in terms of like budget going in somewhere and then actual value being produced. And it was like so if you're in a core unit, and you were spending a lot of money but not generating any value for the project didn't really have a way to sort of react to that other than through politics. So then that was sort of the next thing that happened, right? It's like crazy politics and drama and trouble around like how to deal with this. And yeah, I mean, you certainly know this as a founder, right? That this thing about like cutting costs and firing people, and it's like the most complicated thing you could do in an organization, right? So naturally, like a decentralized DAO, like it's gonna have a terrible time trying to deal with that through like crude politics, right?
Right.
So the second kind of solution, in addition to the subDAOs as this, and then to tie it back to the subDAOs, first of all, is like, then this, like, what's so great about the subDAOs is now suddenly the subDAOs have sort of their own P&L in a sense, right? They make their own money and they interact with Maker Core in various ways, but they can generate, they have, like, if they do well, they benefit the most. And if they do badly, they're the ones who lose out.
Okay.
Because they have separate tokens and they basically have separate balance sheets, you could say. So that's the key to it, right? That you've got these separate subDAOs with separate tokens, and you've got this sort of mini governance process for the subDAOs, and then they can make their own decisions. And they want to make some crazy bet on some huge expense. They want to spend a lot of money on something. That's fine. That's up to them. If they got the money, they can do it. But then if it fails and they don't gain anything in return, then that could cause the entire subDAO to fail and go under and be eliminated. And then you've got this natural evolutionary process to make sure that, well, then, big spending like that without a clear result isn't going to happen again. Because the group of people that were doing that, they just got eliminated, right? And they're going to have to, if they come back in some other subDAO or something, then hopefully they will have learned their lesson, right? And other subDAOs would have seen kind of like the actual, the kind of the cause and effect, right?
It sounds like there's a mechanism, and I'd love to hear about this mechanism, where the central, like, what do you call the central core DAO thing?
Right now we call it Maker Core.
Okay, so Maker Core.
But of course that's changing as a part of the new brand and sort of new terminology that meant to streamline everything. But Maker Core is like the kind of the easy way to refer to it currently.
Okay, so Maker Core, maybe we'll talk about the new name in a minute, but it has some mechanism, it sounds like, to decide how to pay the subDAOs for things. Is that true? Or do the subDAOs not make any money by being paid from Maker Core? Because if so, it seems like that would just recurse and cause that same issue from before. So how does that work?
Yeah, so I mean, it started off with this thing I got sort of obsessed with, which is sort of called like self-sustainable KPIs, or actually I forgot the exact word, but whatever. Anyway, I was like, I mean, we were like, when we were first in this crisis of massive budget and we weren't really seeing the results, we turned to KPIs, right? And then I realized that there's a way to sort of like, I mean, there exists methods that kind of makes the KPI itself be the budget, right? And the most obvious example of something like that is like methods like revenue share, right? Where if you make a bunch of money for Maker Core, then you can get a cut of it, right? And that is like, that is the kind of like governance tool I'm just, that is like a godsend, right? Because that means that it's like completely risk-free for Maker to say, here's a rev share of whatever. Like it could, like the worst thing that can happen is that you lose out on some income. But you can't possibly lose, like go net negative from it, right? So that's implemented in practice through this thing called the accessibility reward, which rewards the subDAOs for attracting users to their front ends. So one of the really big kind of major tasks that the subDAOs have is that they have to run these resilient front ends. They can also run them as like websites, but in addition to running them as websites, they have to also create actual, fully decentralized local apps right? That create real, financial resilience and financial inclusion, and allow anyone to access stable coins, right, and access DeFi. And then to reward that, instead of trying to sort of pick a winner and do some top-down budgeting, the main sort of funding mechanism for providing the basic access to basically the basic features of Maker Core and DAI is this accessibility reward. Then another mechanism that is kind of the flip side of this, right? Because the accessibility reward then sort of takes care of the demand side, right? So that creates a funding mechanism to ensure that the subDAOs have an incentive to grow the demand for DAI. And then the flip side is what we call the allocator vault. So there's a type of, so actually the accessibility reward is available for all subDAOs. The allocator vault is only available for the type of subDAO called an allocator DAO. And the other type of subDAO is called a facilitator DAO. And then there's also, there's a little bit, but before we get into that, I'll just explain the allocator vault. So the allocator vault is basically kind of the new model for how Maker Core generates DAI or lets users generate DAI and sort of distributes DAI into the market. And it's basically the idea is basically that Maker Core will no longer kind of try to micromanage vaults and try to provide retail access to vaults and the vault engine. Instead, it only basically allocates DAI through these allocator vaults. So it's like the allocator subDAOs. They're basically these, essentially like intermediaries that figure out how to actually get the ability to generate DAI out to the end user. So they borrow from Maker Core in bulk, and then they allocate it into places like, it could be real assets. It could also be, a good example of this is Spark Protocol, right? Which is this basically Aave fork that's specialized for this use case, where you have some of the allocated DAOs will be borrow in bulk from Maker, and then they'll be allocating that into Spark Protocol in order to make sort of Maker's, you could say, economic scale available through a distribution system that's based on Aave. And what this provides Maker is Maker doesn't have to deal with maintaining a vault engine anymore, which is it's been a big challenge for Maker basically to deal with the vault engine. And there's been it's just like, there's a lot of costs with onboarding vaults, running oracles, doing risk assessments, doing technical assessments, and the sort of top-down sort of monolithic governance of MakerDAO in the past was really, really bad at making decisions about what collateral to onboard and like where to make strategic bets. So, over the years, there's a ton of like really kind of, almost often totally unused collateral sitting in the native vault engine that Maker was paying like expensive oracles for, and was had technical exposure to, and had to sit and update risk parameters for, even though nobody was using them, and so on, right? So, and the problem comes back to that there's just like Maker's too big to have the token holders be able to sort of like grasp and understand that they have to sit and figure out, should we really be operating a vault for some complicated LP token, UniV3 LP token, for instance. And the allocator DAOs, they have the advantage that this is the only thing they do. So their token holders, can be a lot more specialized in like, should we really support that collateral or not, right? And what's the bold bet we can make about a collateral that not many are using now, but if we are the first, then perhaps we can like grow the pie, right? And then they get to make that bet with their own resources. And if they're right, they will benefit disproportionately, because they're just paying the same, what we call the base rate to the allocator vault in all cases, but they can like charge higher, and they can charge a spread on top of that. So it's like Maker just gets paid sort of the market rate in all cases, the low market rate, this is fine. If in Maker Core we can, save ourselves the complexity and the costs and the headache and the politics and the the technical risk and all of that, but then just get slightly lower rates. That's exactly the kind of deal we'd love to take, right? And that's kind of the core concept again of Endgame, that like the idea is to just focus on making these simple methods that are very, very resilient. Because then what can happen instead is it can scale a lot more, right? Because then you can have many allocator DAOs and they can compete with each other and they can try different things, and some of them can specialize in different areas.
Okay, so let me try to dig in and understand this. So Maker Core is still the thing that issues DAI, or whatever it will be called in the new setup. Is that right?
Yeah, and actually DAI will continue to exist. Just to quickly, so DAI and MKR continues to exist, but there's
Okay.
also this thing we currently call it new stable as the code name,
Okay.
and then new gov token.
Okay.
But yeah, I
Okay.
mean, actually, it's important to note that Maker Code does not issue any stablecoins at all. It allows users to use the protocol to generate these stablecoins. But yeah, I mean, it's Maker Core that allows users to generate the stablecoins.
Okay, and then should we use a name for like the new core? That's like, I assume the new core will be like a new thing that's in addition to the current Maker core, right? Like you wouldn't be replacing the current thing, it's in addition. Is that right?
No. So that's a rename. So that's
Oh, okay.
that's just the name. It's like so what remains is DAI and MKR, the tokens, they remain because they're sort of well known and well established, right? And you don't want to mess with them and confuse people who use those things because they're out there and widely used. But basically, almost all of the terms in the Maker ecosystem are really only known by very few people, and they've been changing constantly. Since the beginning, they just constantly change because the system has been sort of always changing, right? So the new brand basically streamlines the naming of everything else, but it's just a rename, at least initially. Then if later on we do get this complete, fully technical fresh start as well, but that's not going to be initially with the launch that's coming up in a couple of months as the first stage of Endgame launches.
Okay. And okay, so I want to just make sure I understand the core and allocator subDAO mechanism. And when I'm typing, by the way, I'm making little boxes in a FigJam. Maybe I'll share my screen if it turns into a useful diagram. For now, it's really nothing. So then basically, and so an allocator subDAO can basically decide, okay, we want to create a new type of vault that takes XYZ as collateral. And then users can use that so I assume then like the allocator subDAO is setting whatever parameters for like over collateralization ratio or like interest rates or what have you. But then I guess simple question to start, it's still obviously the case that like the new stable token is fungible among all of these, right? Like I could create a new stable by borrowing it against such and such collateral via one allocator DAO, and I could send it to you, and then you could use it to close a position, the same token that's created via a different allocator subDAO, right? So I guess if that's right, then I guess my first question is, is there any sort of problem you have to solve about risk that one subDAO creates somehow like affecting the others? Because like if one subDAO obviously like says like, cool, you can borrow against ETH with like just one-to-one collateralization, and then ETH depreciates, well then now the entire the stablecoin entirely is under collateralized. So what do you do to like basically make it so that allocator subDAOs can't make bad decisions that lead to under collateralization for the token overall?
Yeah, great question. And that's a kind of like digging into the root of the design, right? And I would just want to, just to reiterate sort of two basic points, right? So the first one is that you're right that it's of course fully fungible, and also new stable and DAI are fungible. They're like literally two different wrappers for the same underlying accounting inside the core system.
Okay.
And and then yes, the allocator DAOs generate new stable from their allocator vaults. But one thing I think is also important to point out is that it's not that these allocator DAOs can make their own collateral types in Maker Core or something like that. Like Maker Core actually sort of stops having that functionality at all, or rather, it keeps having that functionality as sort of a legacy functionality in the short run, and eventually that whole system gets migrated over to a subDAO. So what we used to call MCD, like multi-collateral DAI, right? This this very idiosyncratic vault engine that's very old at this point. That will eventually not be a part of Maker Core. That would be a feature of a future subDAO, basically. But the current subDAOs that are launching now, right? They're not even interested in that. They're making their own version out of the Aave code base. Basically, because the Aave code base is just, I mean, it has a lot of very powerful features, and it's been well battle tested. It's optimized in many ways that the sort of the old MCD system isn't. And there's a reason for that. Which is emergency shutdown. But let's not get into that now, because that's its own crazy rabbit hole that pertains to the blockchain and all this stuff. But basically, I mean, what I want to emphasize is that this approach is extremely general. Like, it's super generalizable, right? Like, literally all it does is it allows allocated DAOs to borrow new stable in bulk from Maker Core, and then do anything with it. So that could be put it into real assets. It could be deposit into Aave, deposit into Compound. Like, if the supply rate on Aave is higher than the base rate in Maker, then immediately the allocated DAOs will like instantly arbitrage that, right? So they're kind of like these, like they run these like simple algorithms of like where can I go and allocate DAI or new stable in the way that's gonna generate me a spread against what I'm borrowing it at from Maker. So it's like, I mean, today the rates are a lot, like, they're very kind of political, basically, right? There's some governance decision that determines this is what the rate is. In this new system, it's like the rate will be entirely dynamic, because it'll be based on what's available out in the marketplace if you allocate DAI, or even if you, it could even be, and the allocated DAOs will do this all the time, right? It could be that they borrow DAI or new stable from Maker Core, and then they swap it into USDC, and then they supply USDC somewhere. Like, that's gonna happen all the time. Or they swap it into real assets, and they hold the real assets. Like, they'll do. The whole point is they're sort of unrestrained in terms of like it's about doing what's economically efficient. But okay, then to get to your key, I mean, that's sort of the first level, right? But then immediately we run into the point you're talking about, of like, which is basically the question of tail risk. So there's kind of like two big things to consider. And so the one thing is, I mean, one thing to call it is like, you could call it marginal risk, but I think it makes more sense to refer to it as operational efficiency, right? So that's the question of like, should I supply to Compound or to Aave? Is it, and one thing is the rates, and maybe they're exactly the same, but it could be that there's some Oracle thing that makes Compound more expensive, or there's some whatever risk assessment thing that makes Aave the better choice, or Aave more expensive. And there's all these like hidden variables and all this stuff that Maker Core as it exists today is like, again, really, really has a really hard time dealing with, basically. So a giant DAO like Maker is very bad at operational efficiency. What Maker is, if it's good at anything, it's good at tail risk, right? So that's the idea with the subDAOs and Maker Core, is the subDAOs, they focus entirely on operational efficiency, and then Maker Core focuses entirely on tail risk management. And the way then this tail risk management manifests itself is through, basically rules, or like boundaries. So there's gonna be, and then to dig further into that, the way the boundaries are like, in most cases, specifically enforced, or kind of codified, or kind of, I don't know what to call it, implemented, I guess you could say. How do they manifest themselves, these boundaries, is through capital ratios. So everything a subDAO does, or most things that a subDAO does with funds borrowed from Maker Core, have to be over collateralized with junior capital owned by the subDAO, and that's how you get this like skin in the game for the subDAO token holders, right? So
And
if
when
you
you say
want to just
junior
allocate
capital,
into
when you say junior capital, what's the
yeah, like
significance of it being junior there?
well, it is that the subDAO takes the first loss, right? So if the so it's like I mean so
Mm.
basically the subDAO takes all like any losses, any upside, any downside, the subDAO takes that, right? It has to pay the base rate to make a call, and if it's not able to repay the base rate or repay what it's the debt, then it will be entirely liquidated. And and the way it gets liquidated is sort of like first Maker Core just starts like selling, it's like printing and selling the subDAO tokens, and then
Hmm.
once Maker is like
Hmm.
printing and selling the subDAO's tokens, then the subDAO's governance will very quickly like you know like sort of get it together and liquidate things and get things in order, like sort of get their capital ratios in order. Because if there's one thing token holders don't like, it's someone else, you know,
Right.
diluting and
Okay,
dumping the tokens, right? And
okay,
and
that's
then
very
if
interesting.
diluting and dumping the tokens, yeah, I mean,
Yeah,
and then the
so
thing is, if that doesn't work, then the last resort is forced liquidation of everything, right? So that's actually equivalent to like a bank restructuring or bank like shutting. I mean, right, like the sort of the federal government coming in and taking over a regional bank, and
yeah,
potentially in some
I'm
cases,
I'm
Maker
starting to
Core will
see
have
the
to then take a
metaphor.
loss, right?
Yeah, I'm starting to see the metaphor between like central banking and commercial banking, where it's kind of like Maker Core is the central bank, the subDAOs are commercial banks, and the central bank has the authority to print and sell shares, basically like, sell equity and dilute the equity holders of all of the commercial banks, as the first line of defense. And then, but then you're saying they can also choose to like liquidate all of the assets of basically each allocator DAO as well.
Yeah, I mean, that is necessary if the allocator DAO is fully insolvent, right? Then their tokens are worthless because then that means they will be diluted to infinity, and you know.
Mm-hmm.
So once it's clear that the subDAO is fully insolvent, then their governance will cease to function because the tokens are worthless. So who's going to bother voting or doing anything, right? So then in that case, Maker Core has no choice but to go in and manually do a liquidation, and then the loss will be on Maker Core. So for that reason, Maker Core has a really strong incentive to like really make sure that there's strong tail risk protections. And I think hopefully, I mean, if you look at something like the SVB fallout, right, that was like a result of some like totally ridiculous hold to maturity rules, right? That are just like, I mean, it's hard to grasp how they could have such bad management of tail risk, right? So I'm kind of I mean, I think it's kind of interesting that it may not be that difficult to do this kind of system in a way that's gonna be that like it'll be quite easy to keep it safe. I think if you've got the transparency and you've got sort of the liquidity, and you've just, I mean, I think the problem with the SVB example is more like politics and even corruption in a sense. That like if you had actual professionals sitting down and being like, let's make some rules that prevent things from blowing up, it wouldn't have happened. It was like something with like politicians and their voter base or something and donors. And so then goes back to this whole the key thing of Endgame, which is it's all about then trying to make the rules so simple and make the principles so like focused on resilience and preventing this kind of capture and this kind of sort of erosion of the, I guess, yeah, erosion on the focus of the core focus, which is stability and like dealing with the tail risk.
So, okay, and so if I'm an allocator subDAO, and I'm wanting to borrow new stable from Maker Core, then like does Maker Core still have like a basic sort of CDP mechanism where I have to post collateral in order to do that borrow? And is it like will there only be like one asset that's available for collateral to make that simple for Maker Core, or like how will that collateralization work in that case?
Yeah. So this mechanism works by leveraging this kind of new insight or sort of feature into how you can do DAO governance and how you can, like, what's possible with DAOs, basically. So basically, the short answer is that technically there's no collateral requirement. Technically, subDAOs just generate, and they can generate an infinite amount of new stable. They can't do so, like, technically, they can't technically generate an infinite amount of new stable in one go, like, instantly. So they can't, like, literally send a governance, like, action to, mint 1 trillion new stable and send it to the burn address or something like that. But instead, the way it works is that all these things I was talking about earlier, like all the tail risk management, the capital ratio requirements, which is also the collateral requirements in a sense, right? All of that is enforced off-chain, essentially, through the ability. And then the key technical mechanism that makes this solid and not prone to failure is that the subDAOs ultimately don't have governance, security, sovereignty, as I call it, right? So it's like Maker Core in all cases has a kind of a responsibility to keep the subDAOs secure from governance attacks. So another instance of this is, like, if a subDAO token holder tries to buy all the tokens and steal all the money of the subDAO, then Maker Core sort of is actually the one responsible for stepping in and using this, like, technical sovereignty to prevent that from happening. But then that also means that can also be used in any other case where there's a sort of an agreement between Maker Core and a subDAO about, well, if you want to hold a bunch of commercial real estate bonds or something, then with a maturity of whatever 2 years, well, then that means you have to maintain a capital ratio of 30% for that or whatever, right? I mean, that's just some made up numbers, right? But, like, Maker will then specialize in, like, defining those numbers, and then there'll be these, like, clear frameworks around how the subDAOs have to communicate and follow these rules. And one of the key, again, sort of ways of how I'm so happy about how it's going to work after this upgrade, right, is that it's sort of up to the subDAOs to kind of comply with these rules and sort of make sure that they correctly interpret and follow the rules and implement all the mechanisms and all the safeguards on their end, because if they accidentally, or for whatever reason, if it turns out, like, if they end up not following the capital ratios exactly as they should, and they go a little bit above the leverage they're allowed to have or something with a particular type of asset, then the way that is dealt with is that retroactively at the end of each quarter, Maker Core then sort of slowly and methodically does this, like, retrospective of, like, everything that happened the last quarter, and sort of processes off-chain all the on-chain transactions and all the data available, and then applies a bunch of penalties everywhere necessary, where something like, oh, you missed the capital ratio with 10% for 24 hours. Well, then there's some rule that says, well, the penalty rate for that is blah, blah, something. So in all these kind of, like, operational efficiency cases where it's more like, oh, you were, like, a little bit too risky for a little while, the system sort of allows that to happen, but it's just going to be very expensive. I mean, there's going to be, like, unusually high, what we call penalty rates in that scenario, and you will get those applied to you retroactively. So you're not going to get away with it. Like, even if it's only discovered a year later, theoretically, then you'll just get the penalty rates a year later. And maybe, I don't know, there would even be some kind of, like, additional penalty for not having figured it out, like not having reported yourself that you failed to follow the rules, right? So and that doesn't mean, I mean, Maker still has to actively monitor them in real time, because of course, once you go from operational efficiency into the tail risk area, then there's got to be like in real time, Maker governance has to have a mechanism that like says like stop it, right? Like shut it down, and it's like you're way out of line. You have like you're way under collateralized. You're not, you're too far away from your capital ratios. And again, there'll be some rules around that. So the subDAO would know that, well, if we reach a point where we have like, we have, I don't know what, let's say we have 20% too little over collateralization, right? Or whatever, some number, right? And then at that point, there would be some kind of bounty or something like that. I mean, again, some kind of incentive-based mechanism that could allow anyone to be like, look, I did a calculation. Look, their current capital ratio is this, and it should be this. That means they're now in this sort of tail risk territory. And that means that Maker needs to start printing their tokens until they get their situation under control. And it's up to them to figure out how they're going to do that. And until they figure it out, we're going to be printing their tokens. And whoever submits that is going to get a bounty, right? So you never rely on some kind of bureaucrat or some kind of person or whatever that can be bribed or can be incompetent or whatever, right? You sort of resort back to, doing the right thing is what's going to make you money in these rules, right?
Okay. So let me ask one question, something I'm confused about, and I think maybe the best way to resolve this is going to be to walk through like the simplest possible canonical example of this working. So my question is like the understanding that I'm forming here is that like Maker Core will still have to make decisions about what collateral ratios to require for different asset classes that the subDAOs could choose to basically borrow against. And so it almost feels, I think this must be wrong based on what you're saying, but it almost feels like the subDAOs are essentially equivalent to just ordinary users in the current Maker system, and then Maker Core in this new system still kind of has to make the same like risk decisions or like parameter decisions that it has to make right now. And so I'm confused about how this is like simplifying the decisions that have to be made by like the core Maker Core itself. And so maybe you could walk through like just like the simplest canonical example of how if an allocator subDAO says, okay, we want to borrow against this new collateral type. Let's just say that they want to borrow against I don't know the Chainlink token, and that hasn't been used in this new system yet. Then like what actually happens? Like what does the Maker Core have to decide and set and whatever for that to be allowed, or how would they deny it if they wanted to deny it, or could they deny it even?
Yeah. Okay. So I think overall the answer to what's different, because actually it is very close to the same thing, but I mean there's basically two main differences, right? And so the first one, that everything is cross collateralized, right? So instead of having a bunch of different users where some of them can get wiped out, and then suddenly Maker is sitting with the loss, you've got only like very few users, and they have to get entirely wiped out across the board before Maker ends up with a loss, right? So that means you can do things like require diversification and so on within them, and already like you just get a lot of more, like it gets a lot easier basically, because you can sort of put more of that again, the operational efficiency on the subDAOs. And then the other one is kind of, I mean, that's very relevant for the example you just made, right? The other one is that instead of the rules being coded on chain, right, saying like literally here is where you put in the Chainlink token, and it allows you programmatically to generate this much and blah blah and so on, and Maker has to sit and code that manually and put it all in there in that exact form. Then the new system is like, yeah, it's based around more, I mean, basically rules using more natural language. So it could be the rules would say something like high quality DeFi tokens with characteristic X, Y, and Z, and then a subDAO may they may sort of basically interpret saying, well, that means according to that I should be able to use Chainlink, and then they can basically do that. Of course, there are still technical risk requirements. So the kind of the technical setup that where the subDAO actually onboards the Chainlink or something like that. That itself, it's not like they can just YOLO with whatever duct tape together code they want. There's going to be requirements around. Well, you got to have 3 audits and blah blah blah, a bunch of requirements. But they're all going to be like sort of ultimately, here's a bunch of requirements. subDAOs can, if they believe they can live up to those requirements, then they can go ahead and take an action and sort of schedule an action that they then they basically send a request to MakerCore to say, we would like to take this action. Or at least that's initially how it works. Later on, it's actually flipped. So it's like optimistic that the subDAO takes an action, but then there's a long period where Maker can then reject the action or potentially speed it up and say like, we'll just let you do it immediately.
Okay.
But initially, initially the way it works is through these what we call omnibus actions, where all the subDAOs sort of aggregate together the actions they would like to take for the month, and then every month they can all take a whole bunch of actions, and then they can put anything in there if they're convinced it's it's fully compliant with the rules. But then if it isn't compliant with the rules, then once again the mechanism works by it's retroactively figured out whether or not they were right in that Chainlink actually can be used, and this technical setup here actually follows the rules and has the right audits and so on. And if they're wrong, then they just get a huge penalty. Then it's just like, well, that's your problem. You weren't conservative enough. So now we're going to give you a giant penalty. So Maker is paid for the risk that you took. And also now we're going to send a strong signal that the others aren't going to mess around with something. And, sort of by using, it's like example-based or precedent-based learning, right? That as they try to do stuff, as they try to push the limits, they're going to bump into basically the points where MakerCore says like, no, that was too risky.
It's sort of like, it is a little bit of like a regulation by enforcement approach, which is kind of funny. But but just to make sure I understand, so with the cross collateralization element, so basically the idea is that each allocator subDAO, let me just see if I can state the difference between the current system and this new system in the way that you just put it. So in the current system, if I'm an individual user, I can go create a collateralized debt position against some particular asset. Maybe I have 2 collateralized debt positions against 2 different assets, and those positions are separate from one another. So one could end up under collateralized if there's like a quick drop in value, where the other one would not necessarily be. And those 2 positions are not fungible with one another. Whereas if I'm an allocator subDAO, all of my positions are sort of aggregated into one thing. So there's, I might have borrowed against 100 different types of capital, and all of that is considered together as my total collateral, for that debt position. Is that right?
Yeah, and also any other assets you may have anywhere is also considered a part of what's basically, what's kind of claimable by MakerCore. And finally, also your token. So MakerCore has the ability to, and then it's sort of,
Yeah, so it's like as an allocator DAO, there's like my token, which is a little bit like a share in a bank if we want to use that metaphor, even though it's dangerous to use those metaphors because not everything is the same. But, so allocator DAO token, and then basically anything that's on my balance sheet, i.e. anything that's like stored in my subDAO contract, is all available for MakerCore to seize if it wants to. So basically that's like saying all of the assets that I have gotten into this contract are sort of already posted as available collateral to borrow against. And then in addition, my sort of share token in a sense can be minted. And then my governance token as a allocator DAO will have some value because it's what we use internally to I mean, I guess because we can make money, and that money would presumably be distributed to those token holders pro rata or something, right? Like there's some way in which that token is likely to have value. Is that right?
Yeah, I mean, and that's its own rabbit hole as well, because the other factor here is that there is this really, really, um, you know, advanced tokenomics system that nowadays we call a neural tokenomics. And initially we'll launch with a simplified version of that, but even the simplified version is still pretty hardcore. But like the full version it's incredibly advanced, and one of the things it achieves is that it just ensures that there's a lot of capital basically coming from Maker Core into the subDAOs, and then basically the more sort of value that the subDAO is able to generate externally independently, right? So if they're good at doing business and they're good at making money, basically, then the way that sort of ends up actually valuing the like returning value to the token holders is that increases the amount of liquidity that Maker Core sends to the token of the to the subDAO token. And this, yeah, and then it has this whole neural sort of a kind of economic learning aspect to it, which is why it's so advanced, basically. But a side effect also just is that there's a huge amount of capital in these subDAOs at all. Like even if they're not making any money, they're getting these sort of capital injections at all times, and then they're also distributing the tokens through farming at all times. So it's sort of like it's a system with a lot of assets kind of flowing a lot quickly around, but ultimately it's sort of all mathematically it checks out.
Let's try to do an example on that layer. So you said they're getting capital injections even if they're not making money. What do you mean by that? Like what's a simple example of what that would look like with like a particular concrete token?
Well, it's basically that at all times the subDAO token is diluted. So more subDAO tokens are emitted at all times, and then they are distributed to new stable holders. And then in return for constantly distributing subDAO tokens to new stable holders, which benefits Maker Core, right? Because Maker Core is sort of, the main business is to have a large supply of new stables so that it can earn a lot of yield on allocating that. Then in return for that, Maker Core can then constantly emit new Gov token, right? So not MKR tokens. So MKR tokens will not be emitted. So they actually can't exceed their current supply. But the new Gov token will be constantly emitted, and then it will be distributed. It will be sort of sent out to each of the allocator DAOs, each of the subDAOs. And the distribution of these newly emitted tokens depends on simplified on the economic performance of the subDAO. So it's sort of like the system rewards the subDAOs that are able to build up the most assets inside of themselves. But so the key, it's one of the side effects of this mechanism is that the subDAOs don't really distribute out the assets that they're making, or rather, they still do buy and burn, but they do it very, very slowly, and they benefit from instead just building up a huge pile of capital and just sort of sitting on that pile of capital, because it's the pile of capital that determines how much of the new Gov token emissions that they receive. So that ultimately means that they will always have a whole bunch of junior capital that they don't want to mess around with and lose because they YOLO'd into some like crappy collateral that they've got no business YOLOing into, right? And so that's basically the core idea that, like, I mean, the Chainlink example, right, is like, it's not just like the Chainlink thing isn't primarily going to be protected by the Chainlink tokens. It's going to be primarily protected by all the ETH positions or all the treasury bonds or like all the safe stuff that the subDAO is doing, right? The entire portfolio, basically. So it's going to also inject this very sort of healthy sense of I guess alignment with the overall stability of DAI and New Stable, because the subDAO will be entirely on the hook. Like, even if there's a pretty nasty liquidation where they lose a ton of money, in the end, subDAOs are going to be pretty big, basically, right? And they're going to have a lot of this capital, and so it will not like in most cases it will not be a black swan event. It will just be like a big bad loss, and they lost a bunch of money. And basically, from sort of a greed perspective or whatever, like a profit maximized perspective, it was just a bad decision, bad business to do that. So they shouldn't have done that, and they should learn to make better decisions around which tokens should they onboard.
Right.
Okay. And that's really like that's kind of the key approach, right? Is that the boundaries set by Maker Core always pushes the subDAOs to operate in this scenario, like in this environment of like they're purely profit maximizing, just trying to make money. They're just looking for ways to increase their, more money. The only thing they're thinking about, they don't care about anything else than making more money. But that desire to make more money drives them to make good risk decisions because the boundaries that they have to play with and the various incentives and the various penalty mechanisms are just robust enough and sophisticated enough that the selfish thing to do is to do the thing that's in the interest of the system.
Yep. Okay. And so are liquidations ever automatic, like Maker Core liquidating subDAOs, or is that always something that Maker Core has to actively decide to do based on some sort of governance mechanism?
So basically, the only thing that is near automatic is the forced dilution of the subDAO token. Because then that's sort of, that's something that would be activated in real time based on some kind of, it would still be a manual process. Like it would be someone would sort of submit data for a bounty. The data would be processed, and if it's accepted by Maker governance, then they would like immediately be like, yeah, looks good. There's something wrong here, something seriously wrong. Push the red button, start printing their tokens, right? And then the sort of the beauty of it is, as soon as the tokens are being printed large scale, then the token holders they'll just figure it out. They'll figure out the best way to liquidate the stuff that is most available for liquidation. And maybe if the existing token holders somehow are like too foolish or something and they just can't figure it out, then it also solves itself, right? Because then they'll just get diluted to nothing and you'll get some new token holders in. Because the people who'll be buying those tokens are the ones that are like, I know how to buy these tokens and then liquidate the things it'll take to make it stop so that I can sit with some cheap tokens and not get diluted any further.
Okay.
And then, of course, this also creates a whole an incentive for the subDAO itself to build a lot of automatic liquidations, right? Because that way the subDAO is never going to get in the situation where it gets penalty rates or even worse, gets this, this forced emissions of the tokens.
Okay, so then if I understand that right, then Maker Core doesn't depend on oracles at all, because there's always just this process of someone submitting information for a bounty, and then it's always actually up to governance to decide to start printing the gov token of any of these allocator subDAOs or like liquidating them or whatever. Is that right?
Yeah, so obviously Maker governance, which is what I call a big governance process, right? That is like the ultimate oracle. That's way more complex and risky and so on than an oracle, right? But yeah, like there's no real-time oracle running on like sort of that's designed and operated on the Maker Core side for the sake of liquidations. The subDAOs will be doing that all the time, right? And they'll be optimizing it, and they'll be 100 times better at dealing with that and getting the right solutions than Maker ever was, because they'll be so fast, right? And they'll be profit motivated to get the good ones. But actually, the system still does depend on an oracle, but not for liquidations. Instead, that's for setting rates. So that's the oracle that monitors the price of new stable in the market. Because then that's how the base rate functions. Is if the base, it's like the classic target rate feedback mechanism, basically. Or something like the kind of system that something like Rye uses, right? Where if the price of new stable is below $1, then the base rate goes up, and that means it's more expensive for subDAOs to generate new stable, so they'll be exiting some of their positions, they'll be, buying up new stable on the market in order to pay down their allocator vault, and as the base rate goes up, then the the rebranded DAI savings rate is also going to increase, because those two will be linked together with a spread. So the spread parameter is what sort of determines if you take the base rate minus whatever. Currently, the spread is at 0.6%, right? So if the base rate is 3%, then the DAI savings rate would be 2.4%. And then if the price of DAI is too low, because 3% is really cheap, you can borrow at 3% for Maker Core. You can put that into treasuries at 5 point whatever, I don't know, they're super high right now, right? Then the subDAOs can borrow, like they can keep going forever. So they'll just go crazy. They'll just generate DAI, nonstop, putting into treasuries. And then what's going to happen is they're going to be selling DAI, and eventually that's going to affect the peg. And then as it affects the peg, then the Oracle picks that up, and naturally that's going to make the base rate go up. And then, yeah, like they're going to stop doing it once the base rate gets high enough, but also the DAI savings rate will go up. So you'll have more demand coming in, and you'll have, on the other side of the equation, you'll also have more buyers, more people that are willing to buy that DAI that the allocator DAOs are basically dumping on the market in order to allocate into treasuries or whatever opportunity they're putting it into.
Okay, this is a pretty fundamental thing. Let me make sure I understand what the base rate is. So the base rate is basically, is it the rate that like Maker Core is charging to the subDAOs for all borrowing? And is that just one rate that's the same for every subDAO?
Yeah.
Yeah. Okay.
So all subDAOs would borrow at the exact same rate, and the only thing that varies for the subDAOs are the capital ratios. I mean, actually, they're also the same for all subDAOs, but like, if you borrow, right? So if you borrow at the base rate to put it into treasuries, you have one capital ratio requirement, and if you borrow to put it into, I don't know, some like meme coin, then there's going to be actually there might be a capital ratio of 100%, so that you can only use your own capital to do that, right? So so that keeps the system really simple, that there's only one rate in the whole system.
What do you mean that you only can use your own capital? I thought all of this was borrowing against your own capital in a sense.
Well, I mean, actually, subDAOs can do sort of, this is another feature of subDAOs, right? That they can also do like whatever they feel like. They're sort of fully fledged DAOs as well, right? So at any time they could take some capital, like some unencumbered capital, right? So some capital that they're not using to act as junior capital for some position they have in whatever, treasuries or ETH or whatever they're doing. And then, I mean, they can do whatever they want with it. And of course, all the time they do this to pay their contributors, right? But they could also put it into some sort of super risky venture. Like if they want to buy NFTs or something, they can do that, but they can't generate, like they can't pledge the NFTs as collateral with Maker Core, right? They can't generate new stable based on those NFTs. But this is kind of like a key kind of feature of the subDAOs, is they're allowed to do sort of, wacky stuff. Like they can do crazy things if they feel like it. It's just, they're not going to, they're just not allowed to take risk on behalf of Maker Core if they want to do something like that.
Right.
So it comes back to this, like, it's entirely up to the subDAOs to take actions, and, operational efficiency is entirely in their hands. But when they tap into the kind of the economic power of Maker Core, then there are all these like tail risk rules they have to follow, such as capital ratios, and for many things the capital ratio is just 100%, or rather it's just like you can't even do that. Like you can't buy NFTs, you can't buy meme coins, right? And if you want to do like 10-year treasuries, you also need a very high capital ratio for that, right?
Right. Okay. And so then if a subDAO has a bunch of capital on its balance sheet, that capital is not like, it's not like locked in under control of Maker Core. Like they can just withdraw it and buy NFTs or whatever they want at any given point. But it's just that like the people that are part of Maker Core will be observing and watching all the time. And as you said, there's the immediate response, and there's also like, we're going to go back later and look at the history of everything you did and penalize you if you did something wrong. But if that's right, then what stops them? Like, is there a scenario where a subDAO just collectively decides, okay, we're going to do a vote and just distribute all of our capital to our token holders and not repay our new stable debt and just like, basically take all the assets and leave? Like, what would happen if it tried to do that?
So initially, it's actually very simple because, like I was saying earlier, Maker Core has sort of the governance, security, sovereignty. So subDAOs can't actually take any action. Like the subDAO tokens, like initially when they first launch, they're actually not wired up to anything. Like the only thing they're sort of wired up to, in quotes, is the kind of this whole, like the whole governance layer of Maker Core that says, well, if they do, I think initially we're using what the hell is it called? Snapshot, right? So they use snapshot polls initially. Actually, I'm sure you're familiar with this like classic DeFi setup, right? You got a DAO, it's totally a DAO, and they've got a token, and then they do these snapshot votes, and then there's like a multisig that runs everything, right?
Right. Yeah,
And if they don't like what the snapshot holders are doing, they just don't do it. And Maker Core sort of plays the role of the multisig in this case. And then it has very clear rules, like very clear, explicit rules saying, this is what you can do, and this is what you cannot do, right? So if they try to, like, if they make a snapshot poll in this way you're talking about, then what's going to happen is they're going to submit it to this omnibus spell, like this omnibus governance action, where they're saying like, hey, Maker Core, we'd like you to execute this code alongside all the other subDAOs when they're executing their stuff. And then on Maker Core side, there's this like very rigorous governance security process that sort of, looks through the spells, looks through the governance actions, and also looks for things like hacks and like secret payloads and all this stuff, right? And then if something like that is actually submitted, then it's just, the response might be something like, well, if you try to do that, we will like, dilute your token 100x, like you'll be. So there's just, in theory it could work, but the most likely outcome is that you're gonna get caught, and it's not. I mean, the risk reward should never be worth it, right?
Okay, so basically the subDAOs don't have direct control of their own capital. And maybe this is what you were talking about before, of like they can make a bunch of requests for actions like once a month, and then Maker Core reviews those and has to actually ratify them before they occur. Is that right?
Yeah, but then to get around the kind of the inflexibility of only being able to take an action every month, in practice, what the subDAOs then do is they set up these things called funnel modules. And so funnel modules are kind of the evolution of the D3M, and I'm not sure if you're familiar with the D3M, but they're like algorithmic. Actually, they're. I think you could maybe compare them to, in Frax they got this thing called the AMOs, right? And you maybe you got something similar in Reserve. I don't know, but like they're smart contracts that they'll do something like check the interest rate on the check the stability fee on the base rate on the allocator vault. And if the base rate on the allocator vault is below the rate I can get on Aave, then generate from the allocator vault and stick it into Aave, right? And then if suddenly it's the other way around, suddenly I'm making less on Aave than I'm paying in the base rate, well, then the smart contract automatically is sort of pre-authorized to autonomously pull out of Aave and pay it back. And of course, there's like a keeper system, right? There's like there's a little sort of bounty for a keeper that like a bot that basically sits and pokes the funnel module to make the actions occur, right? But the actual calculations exist inside the funnel module, right? So then that's how all actions are like. That's how all sort of day-to-day actions are done in practice, right? So the big monthly actions are like setting up these new things. It's in most cases it's never going to be manually going out and doing something. It's going to be sort of like setting up a new thing, tweaking an existing thing, I guess like there's going to be like strategic actions that they will take as well with the omnibus governance actions.
But then,
sorry, one more. I just want one more point I want to make, just because this is like it's a bit of a tangent, but I just think it's interesting to point out, right? Is that this thing about the subDAO returning capital to the token holders is itself like a very regulated part of the system. So basically, subDAO token holders are only allowed to gain rewards through this mechanism called the neural tokenomics. So sort of one thing that subDAOs are always banned from doing is something like trying to like pay do a payout to every single subDAO token holder from, even if they have unencumbered capital, they're still not allowed to do that. And that's because like ultimately the subDAOs are like, they're just more intertwined with, like, sort of MakerCore is more intertwined with subDAOs, and the subDAOs are more intertwined with MakerCore than just like, they're not just two separate DAOs sort of doing business at arm's length, right? They are sort of like economically connected closely, but their governance and their like is independent in terms of like taking sort of who's taking what actions and who's taking what risk and so on.
And when you say neural, do you mean, like, in what sense are you using that word? Are you saying that there is actually some sort of neural network computing happening somewhere, or are you using that more as a metaphor of like the way that information is processed, or what do you mean by that?
Yeah, it's more like it's a reference to nerve. I mean, it's a bit of a, I don't know what to call it, buzz on the AI hype currently, but it's because it consists of a whole bunch of components, and then they've been named after nerve, basically. What do you call that? Tissue, I guess, or like nerve.
Yeah.
Because it resembles sort of, you've got the axon that kind of like discharges the economic flow, and then you've got the dendrites that receive it, and it's sort of structured as nerves to some extent. And then, and then the thing that makes it sort of look a little bit like a neural network, right, is that you've got a signal that basically travels through the system, where if you've got, if you build up this like, like if you build up more economic value in a particular part of the system, it'll sort of, into a subDAO, for instance, right? Then what happens is that subDAO will then, emit more valuable tokens out into the new stable farms, right? Because that's this whole thing of like, you can farm all the subDAOs at all times with new stable, and you get this kind of, I don't call it, almost like sensory input in terms of then what do they actually choose to farm. And then you recapture that value back through, you've got new users that have, coming into MakerCore, that helps MakerCore generate more value, and then it sends it sort of back in, by emitting these tokens and transferring it out to the subDAOs. But initially it's not even going to work like that, because it's like so advanced that we're not building that initially. Like initially it's way simpler, and there's actually no, like, this neural part of it isn't there, in the sense that there's no ability to pick where the value goes. It's just, initially it's just a fixed reward for all, like it's just a fixed emission available to all the subDAOs. But they'll still be in the game to try to build up a large buffer capital, because at the final stage of Endgame, it switches to this neural tokenomics, where they actually do compete with each other, and so the more economic value to build up internally, the greater the signal in terms of what they're going to receive of emissions from MakerCore.
Okay. So have you made a diagram of all this yet? Is there a diagram that sort of shows all the different components?
I mean, there are some old ones that are like completely bonkers, basically, that people are like laughing at, because there's so many sort of interconnections in terms of how the value kind of, it's like it's sort of emitted out, and then it's recaptured, and then it's sort of emitted again, recaptured in so many different ways. So currently there's no up to date, and I think actually I'll try to make one of the simple system that's coming up in the first. Is pretty straightforward.
Are you down? Are you down to try to make one with me right now?
Yeah, sure. Yeah, but I think it's initially, at least, it's more like, it still works if you just look at the really simple, like, initial like launch tokenomics that have these fixed rate, like, that basically have fixed emissions, and you don't have the variable of the subDAOs competing with each other, or new subDAOs being created. The advanced one is like, it's also, for me, it's like pretty simple to draw. Like I wouldn't have a big problem drawing it and kind of like making sense of it. But yeah, like
Let's
it's
do that. So I just sent you a link in our Signal chat, so you should be able to edit this too.
yeah, yeah. So basically, you could think of the really basic mechanism as something like, Maker Core emits tokens down to the allocator subDAO. And then sometimes when I draw these things, right, I use wait, what is the I use the color here to oh, I'm not great at Figma. Oh, this is how I do it. Yeah. So like when the arrow is purple, that means this benefits the subDAO.
Okay.
Right? And then in return, the subDAO I'll write over here. Let me see. I'll just write die just to make it simpler. Then I can write die and make it orange. But in practice, it's not actually die. So die, the kind of the feature of the distinguishing feature of die in Endgame is that it doesn't have these fancy features. So it's not die. It's new. Okay, right, screw it. I'll write new stable. Okay, so it's new stable, and it's like the new die, and its key killer app is you can farm subDAOs, right? And and then let me just write the logic for like at launch, right? It's very simple, relatively simple. So basically, I'll write it in MKR, but this gets converted into new stable. So this is equivalent to, so the conversion rate is 1 to 1,200. So this is equivalent to 4 million new Gov token. But to give sort of a sense of coexistent values, I'll just write it in MKR, right? So it's 3,333 MKR in sort of, I'll call it internal cache. So this is like actually the cache, like this is like MKR tokens that go into the balance sheet of the subDAO that gets under control of the subDAO's governance, that acts as it can be converted into junior capital, but also can be used to, can be converted into cash for paying out contributors and so on. And then on top of that, there's another. Okay, I'll just draw an arrow there. Well, so I'm already running into the problem of. But like, so, and then let me make a something. Okay, I'll just draw a shape up there. I'll just draw it. Oh, this is how it works. Yeah, I'm just learning Figma on the fly, so it's a little bit embarrassing. So this is a subDAO token, right? So subDAO token here, and this is so this here is something that goes directly into the allocator subDAO, what we call the surplus buffer. And then in addition to that, there's also
that amount of capital that's going there. Are you saying that's just like an initial investment? Or are you saying that's streamed like that much per unit time?
Oh yeah, sorry, it's like totally. Obviously, you should write the time
per year. Okay.
Cool. Yeah, so it's streamed over time in at this rate per year. And then so in farming rewards, so what that means is you can use subDAO tokens to farm. Yeah, let's make it a little bit small. You can use subDAO tokens to farm. Okay, I'll let you handle it so I don't screw around with it. So 3,333 MKR per year is emitted in new Gov token, like the equivalent of that, a new gov token is emitted per year and sent into the surplus buffer, basically the treasury of the subDAO. And additionally, 3,333 MKR per year is distributed as farming rewards to subDAO token holders. So if you just hold, so, and this is kind of like this is sort of this, this lesson in DeFi, that if you have a token, you got to be able to do something with it. So initially, this is kind of just like a very simple way to make sure that there's something to do with the subDAO tokens, right? So you can stake them, and if you do that, or stake them or whatever you call it, you could farm with them in a very simple farming contract that allows you to get new gov token rewards, and also at the same rate of this 3,333 MKR per year for each subDAO, right? So this actually results in a total of, because there's 6 subDAOs initially, this results in a total of 20,000 per year in internal cash and 20,000 per year in farming rewards, so a total of 40,000 per year. And actually, there's a little bit more because of this thing called the facilitator subDAOs that are different from the allocator subDAOs. But to keep it simple, we'll just stick with this for now.
So for this top one where we're saying maker core to the subDAO token, you're saying like people can like lock up their subDAO tokens and farm those 3,333 maker per year, or like what do you mean that it's distributed to the subDAO token?
Yeah, no, it's exactly what you just said. And they're not locked up, so they're fully liquid when you do this. However, this will later get replaced with what is called the lock stake engine, which is this very advanced system where you actually do lock it up, and there's all these mechanisms, like this very advanced tokenomics. So that's like a part of the neural tokenomics, is that you get an extra reward for locking up your subDAO tokens. And basically getting some extra skin in the game. So it's kind of like, if you want to be more active and more deep in governance, then you can lock up. And if you want to just sort of hold the token and maybe speculate on it or something, then you shouldn't lock it up, and then you can easily sell it again. But initially, that's not the case. Initially, it's like a no-brainer. These are just farming rewards that are available, and you can just withdraw immediately, and there's no risk, and there's no technical, like it's a very simple farming contract, and it doesn't do anything other than just giving you this new gov token equivalent to 3,333 MKR per year for each subDAO token. So it's just something that gives the subDAO token value no matter what, because you can do something with it and you can get these rewards no matter what.
Okay.
And then on top of that, you get this internal cash, right? And then you have, right. Then you have the subDAO token holders then basically voting on what to do with this cash, like which teams to pay to do stuff. Anyway, so then where the kind of the the tokenomics, then the problem is right now this just looks like this is just tons of expenses for Maker Core. So what Maker Core gets in return is, I guess actually the easiest way to show this would be with something like this, since I guess it's the subDAO token. Oh, that actually worked. Okay, cool. So this is a line I'll make green. I'll also make Maker Core green, actually, right? So Maker is green and subDAOs are purple, and the farming rewards to new stable benefits Maker, because new stable users are Maker Core, sort of its core user base, right? And there's sort of two, there's like the genesis distribution. So when the subDAOs are just created, they emit a lot of tokens that get farmed out to new stable holders. That's initially 50 million per year. And then there's also like a permanent emissions. So this 50 million per year, it's sort of like it's like halves every 2 years or something like that. How do you write it? Trying to not make it like overly full of text. All right, I'll write it out, and then you can
Yeah.
make it
Yeah.
smaller and stuff. And then
Yeah.
permanent emissions is 3.75% per year.
Okay.
So eventually the
And
genesis distribution like runs out, but the permanent emissions just stays forever, and just means there will always be more emitted, just like.
we're talking about the subDAO token.
Yeah. Okay, so 50 million DAO tokens per year.
Cool. And that's available, and that's going to the new stable holders. Where is it like all of the subDAO tokens are streaming by default to all new stable holders, or do the new stable holders need to choose like which ones they want to farm?
Yeah, they need to choose which one they want to farm, and the crucial kind of the key thing that makes this all makes this all make sense and not just be economic madness is if they choose to farm subDAO tokens, they cannot get the DAI savings rate. So they also have to pick between DAI savings rate and farming subDAO tokens. So what that effectively means is that the value of the subDAO tokens results in direct income, in a sense, to Maker Core, which is equivalent to the value of the DAI savings rate, right? Because you now have a user, you don't have to pay DAI savings rate. So ultimately, Maker Core gets cash out of this in this sort of indirect way, because they have a bunch of they've got a bunch of new stable demand that allows the allocators to go nuts and allocate into stuff that's going to give the allocators a return, and it allow and then as the allocators allocate more, the base rate goes up or stays high or whatever, right? And the DAI savings rate also goes up when the base rate goes up. But Maker Core doesn't have to pay the DAI savings rate for everyone that is farming these subDAO tokens.
Okay.
And then also, and then the other side effect of this is that it sort of makes it creates this kind of gamification effect of using new stable, right? Because it becomes like kind of like a video game, and you can choose. You have all these different options, right? You've got different subDAOs, and they've got different brands and different focuses, and there's a lot more to it than just like you put your money in the bank and you get an interest rate and that's it, right? It's a more involved process if you want it to be like that. Of course, you can also just choose to get a DAI savings rate, and then it can be that simple if that's what you want as a user. But often, what we've seen with DeFi, right, is that this effect, which I call the arcade effect, right, that there's something, again, there's like something to do. There's some kind of like interaction, and there's more to it than just really basic, boring sort of finance. That's something that one thing is it can attract users, but also it can kind of get those users to be more engaged. So it kind of, like you're farming a subDAO token, and that can then lead you to sort of go down the rabbit hole of maybe actually participating in that subDAO, right? And then getting towards kind of, the core of the system, which again is, we have this very resilient, very scalable governance mechanisms, right? And the whole idea is you don't need some kind of central authority or founding team or whatever. Like you can actually have more regular people do all this stuff, because the mechanisms are so strong that it's kind of like, if you're doing things that means you can make money out of the system, then the system is only allowing you to do that because the system itself is making money, right? And yeah, that's like, I think there's a lot of potential in that, right? Because it's really kind of like making saving money fun, right? And I think competing with a lot of the, the kind of the bad parts of crypto, right? That are appealing to people who trying to get them to put their savings into like super risky garbage, basically, right? Which is like very immoral, right? It's like, it's worse than gambling, basically. And this appeals to some of the same stuff, right? Uses some of the same methods of like gamification and kind of this sort of arcade effect of like having different options and have almost like a a video game user experience to it. But it's just you're not risking your principal, right? I mean, you're just saving money and you're just picking what kind of which in which token do you want your reward, right? So
Yeah. Okay.
yeah, I'm
So
very
okay.
hopeful that this
So
can like help wean people off all the speculative stuff and just not be so crazy risky with crypto, but still have fun
right,
with it.
right. So okay. So basically, it's like you are to use a couple metaphors, or at least one. You're holding this currency to save, which is issued by basically the Maker Core central bank. And then you're choosing if you can just get like the DAI savings rate, so basically get like the basic rate that the central bank is offering, or you can choose to instead over time earn a larger and larger equity-like position in these subDAO in one or more subDAOs, which are kind of like commercial banks in the system. So you can sort of come to you can just passively receive ownership in the commercial banking layer of the system over time by saving money. Is that right?
Yeah, and then and then the important thing is again that like for instance allocator subDAOs. I mean, there's different classes of subDAOs, right? There's allocator subDAOs, there's facilitator subDAOs. Then there's also this thing called the mini DAOs, which are kind of like, I mean, they're basically the allocator subDAOs themselves can create their own subDAOs. So all of these subDAOs have their own specialization, right? So allocator subDAOs, they've got the allocator vaults. Facilitator subDAOs, they basically provide this kind of insurance layer for the rule set of the system. But crucially, all of them, they also do a whole bunch of other stuff. And for instance, they all have front ends, which is, I mean, so they all have this like basic. Remember, the very first business model we were talking about was the accessibility reward, and that's a business model that's available to all of the subDAOs. So in that way, they're all alike. And being a decentralized front end, that's like, that's like a marketing thing, and that's also sort of a viral thing, like a meme thing, even, right? And so that's something where any random person can farm some tokens, and then they can participate, like spreading the word of like, hey, if you want to farm this stuff, why don't you farm with the front end that my subDAO that I'm farming provides? And then you should farm the same subDAO as well, right? And then we all make money because we all gonna get the token, and that token is benefiting from the accessibility reward. And this kind of effect I'm talking about here, right? This is this kind of crypto vibe, right? Of like people like to, work together to get stuff done and onboard people into their favorite tribe or whatever, right? And sort of we've generalized that to call that a meta. That like there's this effect that occurs in crypto where if you have a lot of people kind of like doing stuff for the benefit of the group, right, for the benefit of the token holders, then that's gonna make others more likely to join in and do the same thing. Whereas if nobody's going to do it if it's clear that there's a bunch of free riders that are just sitting around and letting others do the work. Then nobody wants to do the work. But if everyone's sort of working together and pitching in and you got this team spirit going, right, then you see amazing things. The big problem is just most of the time those amazing things, unfortunately, like Ponzi schemes, right? So there's like super risky stuff, and everyone ends up losing their shirt, and it's not very fun in the end, right? It's super fun when it's going, but then in the end it stops being fun. And
Yeah.
what's so great about this system is this is not a Ponzi scheme, right? It has this like arcade effect, right? That there's like moving parts and like bells and whistles and tokens moving around and so on. But ultimately, I mean, in particular, you don't put your principal at risk because you're just farming something. And the thing you're farming is like ultimately, it's like a sound business. Like it's a front end that brings in users and gets an accessibility reward. And then if it's it's an allocator subDAO, facilitator subDAO, or mini subDAO, and in all cases they have some like sound business models that they can tap into, and yeah, in the end, in all cases, at very minimum, they're doing marketing, and that by itself is generating value because the thing that they're marketing is a stable coin with a functional, sound business model.
And so then, and the fundamental revenue mechanism for the entire system is the same as Maker today. It's basically people and businesses that want to borrow against their collateral for going margin long, or possibly for other reasons, being willing to pay an interest rate on the credit, the capital that they're able to borrow.
Yeah.
Yeah.
So the whole layer of subDAOs and all this stuff is just a kind of a growth layer, but also like it's a governance layer and a growth layer, right? That makes the governance more safe and resilient, and then it also creates this user acquisition and sort of like the user acquisition and user kind of upgrading sort of funnel, right? Where it gets users in, and it also tries to pull the users deeper into the system and make them more than just a user, but also a participant. Yeah. And then all slapped on top of the basic model of it's a stable coin and the collateral is allocated into things that generate yield, and then there's a DAI savings rate, but it's lower than the yield, so there's always a bit of a profit in the system, and that profit is then used for risk management.
So here we've kind of diagrammed, the flows for these basic farming mechanisms. Why don't we try to diagram the flows for the basic operations that like an allocator subDAO would be doing with its capital, and how it would be earning rewards. And one other thing that I'm noticing I'm still confused about is when do allocator subDAO token holders get paid out? When is the allocator subDAO able to say, we're going to book this capital as profit and distribute it to our subDAO token holders or whatever?
Yeah, okay, maybe I should draw that out first. So initially, that's again, this is the mechanism that is like the short-term mechanism that is quite simplified, and the neural tokenomics is basically like this, but just even more sophisticated and sort of future-proofed, right? But the really basic mechanism is basically how to. Yeah, I'll just draw a line like this. So this is like when. So I can't remember we've got this whole rules. I mean, we'll talk about that later, but we've got this like giant rule sets that defines all this stuff, right? And so they have some parameters in them that determines this, and they'll be changed and they'll be upgraded and so on, made more better. Right now, it's mostly just placeholders, and so I can't remember the exact parameters for this right now in those rules, but it's something like, when surplus buffer is more than, I think maybe it's 30 million. USD value, right? Or maybe actually, I guess it's more like net worth, maybe. So it's like use assets to accumulate I'll just write like subDAO MKR LP tokens. It's a little bit more complicated than this, but this is like the really basic. This thing about like it's called buy and make. So it's kind of like buy and burn, but instead of burning it, you accumulate LP tokens. So it's a little. I mean, burning is very short-sighted, right? And so we had a lot of trouble with that, right? Because in Maker we did a lot of burning during the big bubble. And so buy and make is a little bit more intelligent in that you kind of like, you also leave some of the funds aside to like in case if you have a huge bubble, then when the price goes down, you're actually still buying back sort of more of the tokens at a cheaper price. But then, I mean, of course, something that makes this a lot more reflexive, I guess, right, is that it's not an LP token against DAI or something, right? It's MKR subDAO. So it's like still this is a very volatile, speculative position that the subDAOs are building up like this, right? And Maker Code does the same thing with its burning, but that's MKR DAI. So that MKR DAI that Maker Core is building up then sort of indirectly ends up becoming a thing that then also kind of supports the subDAO MKR LP token in the allocator subDAOs.
Okay, let's put that other one there too. So you're saying Maker Core, like when it has net worth greater than X or like free capital greater than X, it does the same thing but for Maker to new stable or like new gov to new stable.
Yeah.
Okay. So.
Yeah, we can add that up here. So that's kind of like that's coming in as like the right. That's right off the money being made from new stable here, right? Oh. So currently it's like when surplus buffer is more than 50 million DAI, accumulate MKR DAI LP. So this one I do remember the parameter for.
Okay.
This system is like the mechanism for this is not yet active, but once it has been activated, the kind of the rules for like what its parameters should be, which is like that. I mean, the key parameter is this, like what's the max? I think we call the surplus buffer limit. That's set to 50 million currently in the rule set.
Okay, so
as money comes in from the farming, then it. Yeah, good.
Yeah, so as a subDAO token holder, I don't really receive a dividend ever, but there is, it's not quite a buy and burn because it's like they're just being bought out of circulation. And then they could, in theory, be put back into circulation later if like whatever governance mechanism decides to. But in general, if that like accumulation and deposit into those LP positions is happening faster than the emissions, then I'm expecting the circulating supply of the subDAO token to be going down. And that's like from like a crypto tokenomic perspective, why someone would want to hold the subDAO token. Is that right?
Yeah, and then there is the one detail, which is that once the tokens goes into the subDAO MKR LP tokens, which so they're called these special LP tokens. We call them Elixir because they're a little bit more. Initially they're just Uniswap positions to keep it simple, but later on they become slightly more complex because they're market making on as many venues as possible. So then there's like sort of kind of basket of LP tokens. We then call that Elixir. So we've got, Maker Elixir and Allocator Elixir and so on for each of the. But anyway, so one key characteristic of the subDAO elixirs is that once they've been accumulated, they're forever. Like they're never gonna no one can ever access it. They're just like, I guess I don't think we have specified this should happen, but in theory they're sort of burned from the start. Like as the moment they're created, the keys are thrown away, kind of, right? They'll never be unwrapped again. They'll never be anything.
Okay.
So in that way, they do contribute to this. I mean, they represent a sort of permanent buildup of value in the subDAO.
And those LP positions are basically not something that Maker Core governance could seize and liquidate, even if the subDAO is like defaulting, basically.
Yeah, because it's easier to just emit subDAO tokens. I mean, the effect of emitting subDAO tokens is the same as taking these, right? Because then, of course, you just sell it through them. But yeah, like that's.
And then
to keep it simple.
I'm just trying to get my head around
it's
like
just completely not.
Yeah, so I'm just trying to get my head around like if you're accumulating these LP positions rather than just accumulating, say, the subDAO token itself, there's then this effect of like someone can always come and fill that LP pool with MKR and buy up all the subDAO tokens or vice versa. And we're just trying to think about like, are there any important economic implications of that? If I'm a prospective subDAO token holder and I'm trying to think about this like kind of like um, buy and burn mechanism, but not really, and I'm thinking like, well, but people could, all those tokens kind of could still enter circulation if people were to trade on those dexes. How do you think about that? Like, does that matter, or like, is there some principle
Yeah,
that
I
you
mean,
end up
it
coming
has
up
a very
with?
simple effect. Yeah, so it has a very simple effect, which is um, the tokens become less volatile, right? So they don't go up as much as they would otherwise, because there's a bunch of subDAO tokens sitting there that enter the market if the price is going up, but they also don't go
Mm,
down as much. And that's I mean, I think that's absolutely not a problem at all, because I mean, this is some pretty we're already entering kind of the frontier of crypto economic black magic here, right? So it's a pretty good thing to have a bunch of what I call control rods, right? Like, so everywhere in the system there are sort of mechanisms like this that kind of slow things down and are anti-reflexive, right? So that,
yep.
because the last thing we want is that this thing gets released into the wild and then it just like creates this totally ridiculous bubble, right? And then everyone just has a bad time, because it's
Yep.
supposed to feel fun and have all these funny, like interesting mechanisms, right? That sort of make humans engage with it and figure out how they can sort of play the game and how they can earn from it without being an actual Ponzi, right? That just explodes and there's no real value after all, right? So
Yep.
yeah, so less
Okay.
less volatility is I think very much a feature.
Cool. Okay. So I'm making these a little smaller because I feel like me and hopefully our viewers are following what they do. Let's diagram out the mechanism by which allocator DAOs actually like, basically like their operations. They're the most fundamental. Maybe there's too much complexity, but just like, what they're doing with receiving new stable tokens from Maker Core and like depositing them to Compound or Aave or whatever, or allowing users to borrow them directly. Like, let's show how that works.
So I think actually, I mean, before we even get to that, I wanted to just show the really simple, um, like the even simpler thing that they do is they spend some money on the front end and then they get some uh, accessibility rewards, right? So you could sort of like, you could write that as like through front end, get more users and accessibility rewards. And then I don't know how to, maybe, I mean, I'll make this like, I don't know, black or something, right? So they're spending money and that money is just disappearing. But then in return, they get, whoa, I'm using the wrong type of error. Oh, that's not an error. Okay, I'll try the other error again. God damn it. All right. You get more users and earn accessibility rewards. So this is an income kind of, right? This is an income that benefits them. And so this is an example of something, so this is this sort of fundamental theory of value or whatever that I sort of, I mean, very basic, but that I sort of kind of formulated as I was designing these things, right? And so there's kind of like two types of value, right? Actually, I mean, you see this all the time on crypto Twitter and so on, right? But there's what I call intangible value and fundamental value, right? And so, kind of nicely put, intangible value is like the meme value of an NFT, but also something like the liquidity of Bitcoin, or the hype of a meme coin or something like that, right? The intangible value is basically this sort of like, you can't actually kind of describe what it, I mean, it's entirely in people's heads, right? It's entirely like everyone agrees it's valuable, And the intangible value comes from the meta. So it comes from this thing I was just talking about earlier, right? Everyone's in it together, right? And because there's this sort of like cohesive kind of coordination in a sense between all the participants, then there's actual value in the system. However, intangible value is like very fleeting, right? And often intangible value is also, I mean, is sort of abused and is used to power Ponzi's, right? So it's really fun and great, and you think you're rich, and then it goes to zero, and there's nothing, right? So the other type of value is fundamental value, right? So that's when there's like real, you know, like actual real value, right? Which could be something like, well, a stable coin that provides stability and that allows someone to do business, and as a result, they can, you know, they can earn more money, and then they can whatever, right? They can sort of pay for the stablecoin service, you know, through, I guess, lower rates or whatever, right? And then the provider of the stablecoin can then take some of those rates and have that work out, right? And this basic example right here, this is like the first example in this diagram where there's sort of a real creation of fundamental value, right? So everything else so far has just been this sort of like almost like roller coaster of intangible value, right? Of like sending around tokens and everyone's having fun, and you know, we're allocating out and we're being sort of, and we're coordinating people, and there's a meta and so on, but there's no like real, I mean, it's just tokens getting shuffled around, right? But this is an example where now there's actually something where it's like, I mean, we are fundamentally improving the front end so that it's more intuitive or something. It's translated to a new language, or better design or something, better security, and it's allowing, I mean, it's letting more users in to use the core stablecoin product. So, which, I mean, and so the absolute core, we were talking about this earlier, right? But like the cookie cutter basic business model of Maker Core remains the same basic stablecoin business. And that's like a purely fundamental value business, right? So something that gets more users into that is itself, something that creates fundamental value, right? And then there's this like, I mean, and one of the key kind of points of this whole system, right, is that there is this, I mean, I was talking about this earlier, but there is this kind of synergy, right, between the intangible value and sort of the meta that's created through all the intangible value kind of shuffling around, which is that you can also have token holders that are coordinated now actually, like for instance, provide feedback for free or user testing for free because they want to try helping out making the front end better. Or, I mean, even more obviously, like sharing the front end once it's built, right, and once it's better, and tweeting about it and telling their friends about it and all this like classic stuff. But then what's so great about it is it's not a freaking meme coin that's going to go to zero, right? It's an actual product that's like useful for people, right? And that doesn't have crazy risks where you can lose everything built into them. So yeah, so this is kind of like, this is such a key thing, right? That you can like do a bunch of almost like meme magic, right? Get a bunch of people like playing sort of financial gamification, and then you can convert that into actual fundamental value by making sure that at all times there are these like safe guardrails in a sense, right? That at no point in time will the system like allow this to get redirected into some crazy Ponzi, right? And of course also like literally Maker Core has rules around like allocators are not allowed to do like stuff that is harmful, like build a Ponzi or something like that, right? And there's a whole thing of like how to regulate that, which is going to be its own little arms race, right? Because of course there's going to be some subDAOs that are going to try something like that, right? And then Maker Core has to basically, hopefully be aligned enough and be sort of designed correctly to ensure that it will always resist any kind of sort of short-termism that's going to, be very bad for the overall ecosystem. But yeah, okay, so then the other thing is basically, I think maybe the way to draw that would be that didn't work. Okay, so I can sort of make something from there. So this, I'll make this thing here, which is like, so this is just like the allocator vault, right? So this is like allocator generates from allocator vault. Okay, like that. And then we say at 3%, right? And then it takes that and allocates it into, very simple, allocates into tokenized money market fund. Or something. Okay, it's 5%. It pays 5%, right? And then, of course, that results in. Actually, I almost feel like this arrow should be the opposite way or something, right? I mean, so basically, the subDAO is paying Maker Core 3%, but it's allocating into tokenized money market fund that pays 5%. And then ultimately, it's going to earn from that. It's going to earn a spread. I'm so bad at this. Oh, this thing. Okay, that thing. But
yeah, so basically...
Okay, now I'm finally
it's like...
getting it. All right. Yeah, it's not. All right, so so actually, I want to take this and I wish I could make. Yeah, okay, I'll just put it there. Okay. Yeah, right. So it pays 5%, earns 2% spread. I mean, then a whole bunch of things, like when you have got this, then the first effect that kind of happens very obviously is then that they'll do this with $1 trillion if they can, right? I mean, they'll literally like max out their this thing, it's called well, okay, it has its own weird maker term, but it's kind of like there's this rate limiting system that means they can only, there's some limit to how much they can generate per hour or something like that, right? And let's say that is like 50 million per hour or something like that, right? Then they'll be generating 50 million per hour to do this, right? As long as they can pay 3% to Maker and they can earn 5% from using this new stable to buy tokenized money market funds, they'll take that deal and they'll be doing that, and all of them will be doing that, right? So the net effect is that a lot of new stable will be generated, and it will be sold in the marketplace probably for USDC, right? And then that USDC is used to buy tokenized money market fund or whatever it is. But that's kind of like, most of these tokenized securities and tokenized like security tokens and all this stuff, they work based on like some kind of like you can deposit with a centralized stablecoin that they partner with, right? So a lot of what allocators, subDAOs do is they are very good at converting and market making new stable against like centralized stablecoins, right? Because then they can also make, they want to make it be as cheap as possible for them to convert over to the centralized stablecoin, and they also want to actually market making it so they can earn a spread instead of having to pay a fee, right? To get the centralized stables that will allow them to allocate into these assets that generate a yield. But anyway, so as they do that, then what happens is, of course, eventually the price of new stable goes down because the market runs out of people who are willing to buy new stable with, let's say, USDC. And then, this is what the Oracle thing we were talking about earlier, right? Then what happens is the Oracle detects that there's a slight peg deviation, right? That people are no longer willing to buy a new stable 1-to-1. They're only willing to buy it at, they want a tiny, let's say a
Sure.
5 basis points spread or something when they're buying the new stable with centralized stables. And then the Oracle picks it up and it starts taking up the the base rate, right?
Yep.
So then eventually it will just keep taking up, and eventually it will then get to 5%. Like if this thing is if it's this simple, then what's going to happen is this is going to become 5%, right? And only when it's 5% are they going to stop doing it.
Yep.
Then there's a bunch of like extra rules basically, so it's not as simple as they can just allocate 100% into tokenized money market funds. Like allocator subDAOs actually have a requirement that they must actively market make new stable in the marketplace against certain centralized stable coins that are sort of strategic and that Maker Core wants to guarantee that there's lots of liquidity in that at all times, right? So this requirement is basically the replacement for the PSMs of today. And this is again like the same principle in Endgame that. Yeah, sorry, good.
So a question I had there is, can an allocator subDAO, do you expect that Maker Core would allow allocator subDAOs to do something that's anything like the PSM of depositing like USDC or something like that in exchange for new stable 1-to-1, or is there no mechanism like that in this case?
They can totally do that, but there's no way they're ever going to do it because it's completely like there's no profit to be made from that. Well, actually,
right.
Okay. There might be some intangible reasons why they would do that, but in practice, what they're going to be doing is they're going to be, because this is a big problem with the PSM, right? Is who benefits from the PSM? It's the arbitrages, right? There are no actual users using it. Like the real users, they're out on Uniswap. That's where they buy their DAI today, right? So this new system says, look, allocators, you can, you just have to market make. You can do it however you want. You can do it in a PSM if you want to do that. But why don't you do it on Uniswap so you make the spread instead of doing it in a PSM so you're letting some arbitrager make the spread, right? So, and this is again this kind of principle of Endgame where Maker Core doesn't sit and micromanage and manually builds some specific piece, like specific product, because Maker Core kind of sucks at that, and it's gonna be like slow and dumb and end up building a product for arbitrages, right? And instead, it just creates a rule that says, well, allocators, you gotta market make with 20%. Like you can do it in a PSM if you want to do that, but if you're smart, you'll find some way to get closer to the users and actually try to make a, generate some income out of it. And then that income that they generate, that actually impacts their kind of aggregate yield that they earn, right? That the allocators are able to earn, because they have to, like right now the rules say they have to spend 20%, like they have to have 20% of their portfolio allocated to market making. So if they make 5% on 80% of their portfolio, right, that they put into tokenized money market funds, and then let's say they make 3% on the, if they have a PSM, they make 0% on the market making portion. But if they put it on Uniswap, they make 3% on the market making portion. Or, okay, maybe to keep it simple, we should say 2.5%, right? Then their aggregate yield increases, right? So if they just had a PSM, they would only make 4% of their entire portfolio, right? Because their entire portfolio would be 80% in money market funds at 5%, and then 20% in a PSM at 0%. And then by increasing that 20% in the PSM from 0% to 2.5%, by building out a system that lets them deploy those assets to Uniswap or something like that, so they can start earning a spread on it, then their aggregate yield goes up with 0.5%, right? Because 20% of the portfolio is making 2.5%, so that's 0.5%, right? So now they get to 4.5% instead of just 4%, and that's actually an example of like the whole kind of arms race between the allocators, right? And And so the cool thing about it is that, so what that means is, to try to kind of add this into this diagram here, right? You'd have sort of, maybe down to here, I guess. Oh, whoops. So like I'll sort of mess around with the numbers too, So let's say the old one was, right, allocates into 80% tokenized money market funds that pays 4%, right? I mean, pays net 4%, right? And then you never earn a spread, actually. Like, in the end, there is a spread, but the way that occurs is a little bit more complex. So we'll just skip that for this example. Right, then what happens is this one up here is going to be at 4%, right? Like, this is going to equilibrate to 4%, because what they can earn is 4%. And so that also means that this base rate here is the thing that determines the DAI savings rate, right? So DSR at, let's say 3%, because base rate minus 1%, right? Like, that could just be like a really simple algorithm for determining the DAI savings rate. But then what happens is, I'll see if I can write, like, allocator invests in new funnel module. So remember, there was these funnel modules with these like automated things where that's what they do with their monthly action is they put some new automated module in place that lets them run a strategy that they hope is going to generate them a profit, right? And this new funnel module takes it from 80% tokenized money market funds to, 80% tokenized money market fund that pays net 4% plus 20%, Uni V3 new stable, USDC that pays net 0.5%. Do you understand that with I'm writing 4% because I'm implying it's 5%, but it's only 80%, and then I'm implying this. I don't know if that makes.
Okay.
If that's too,
Yeah.
But so then what happens here is they've found a way to distribute the new stable out to the end user in a place where the end user is actually paying the spread. And so this doesn't necessarily mean that the end users get a better spread. They might end up paying the same spread they were paying before with the old arbitrages, right? Because the allocators, they don't really, they're just trying to make money. So they're just going to charge whatever spread that's going to make them the most money, right? But it makes the fact that they're making more money makes this thing up here equilibrate to a higher number, right? So now suddenly this goes to 4.5%. And then it ends up actually going back to the end user, right? Because then the DAI savings rate gets to 3.5%.
Right.
So it ends up sort of like self-optimizing that way, where in the end the user kind of, it's like I don't know, it's like the value, right? It's like the allocators kind of get rid of these arbitrageurs and middlemen that exist in the current system that are essentially taking advantage of the fact that maker governance is so slow and bad. And as a result, it leaves a lot of money on the table because it can't figure out how to kind of do business with the actual end users. And today that's like arbitrageurs and middlemen that kind of take those profits. And the new system had the allocators take those profits, and then it has basically Maker take them back and recapture them again, right? Because of how the allocator vault dynamically adjusts to just let the fund whatever business the allocators are doing that's generating income, and then finally funnel it back to DAI savings rate, because the core principle of Endgame is absolutely it's scale, right? It's not margin, it's scale. So any kind of value is like entirely slapped into like sort of just move towards scale, right? And then just keep making some small respectable margin and just try to scale it as as much as possible.
Okay. All right. And so then let's walk through like so in today's world with the current maker, if DAI is trading above the peg, then arbitrageurs will go deposit USDC or something into a PSM vault or whatever and make the money on that difference. And one thing that is simple and nice and elegant about that is that it expands DAI supply in like not necessarily a permanent way, but in like a lasting way, because there's no incentive for someone else to go redeem that DAI that's been added to circulation, versus in a case where and I'm probably missing something here, but in the case where like the only way to expand the new stable supply is through further borrowing that comes with some interest rate, then does that mean that like any allocator subDAO that is like, okay, new stable is trading 5 basis points above peg, I'm going to go and make an additional borrow in order to go and sell at the price that's slightly above peg, or the target price or what have you. But then they still, like, if they're paying a high enough interest rate on that, then like they might not be interested in doing that for the sake of arbing it, because they're then going to be paying for that loan that they took out. So like they sort of are opening a position, but then they kind of have as soon as the price is back down at the peg, they have the incentive to like close the position and sort of complete that arbitrage loop in a sense where they make those 5 basis points. But in closing the position, they've shrunk the supply again. And so I'm just wondering, like, is there something to stop that sort of oscillation back and forth? Like the PSM was a very elegant way to stop that possible oscillation.
Yeah, and I guess one thing that's sort of important to point out is that what they do is when they sell, so the DAI price is above the peg, or new stable price or whatever is above the peg. An allocator generates new stable and sells it into the market for USDC, right? And then what they do with that USDC is they take the USDC and they put it into a money market fund or something like that. And what happens if the base rate is, right? I mean, in this example, let's say they can get 4% on money market funds, and the base rate is 4.5%. Well, then what's going to happen is they're just not going to do it, right? So the price will stay above peg. And then this is where the target rate feedback mechanism. So this is like the replacement for the PSM is this automatic mechanism that takes in an oracle that says this is how much the price is above peg, and then decreases the rates as long as that's the case. And the higher, and it's probably something like the higher it's above the peg, the faster the rate decreases, right? So the allocators will just be like, no, I don't want to do that. There's no good deal. So I'm just going to sit around and wait. And then
I see.
the rate is going to go down, and then at some point it's going to hit 4%. And then as soon as it hits 4%, immediately you'll have allocators that'll be like, this is a great deal because I'm going to make some free money and I can arbitrate sort of 1-to-1, right?
Got it.
And then what's going to happen is it's going to get pushed back down to 1, right? Because they take all the free money in that the fact that the peg is above. So it goes to 1. And then now they're basically like, okay, well, I got 4% in a money market fund, and I'm paying 4% to Maker. But they basically, I mean, so they don't actually need to pay anything back in that scenario. They're also not making anything. Like the only money they made was when they did the ARB in the first place. But what's kind of, I mean, the way the system basically works is that this new equilibrium that's been found is sort of stable, right? In that, well, now the price is 1, so that means the controller, right? The target rate controller, or the rate, like maybe it's called base rate. There's some mechanism. It has some name, some technical whatever. Okay, let's call it the base rate controller, right? So the base rate controller that sits and does this, like measures what the price and then changes the base rate. That's gonna say, well, the price is 1, so I'm just gonna let it sit at 4. So as a subDAO, you're gonna be sort of safe, just holding on to, like, you can sort of pocket the spread you made when you first like sold new stable above the peg, And then if
Right.
suddenly there's a decrease in demand, and it goes, um, right, like now suddenly new stable is below $1. Well, then the system starts increasing its rates again. But then what's happening is now new stable is below $1, right? So if you're sitting with a money market fund and the rates are low, right? So you're not like, sorry, the rates are going up because the price is below $1. So the rates is now, let's say, 4.1%. You're sitting with a money market fund that's only paying you 4%. Then there's like two incentives at play, right? The first one is you don't want to hold that crappy thing that's only paying 4%. And as you go to pay back your debt, you actually got some cheap new stable you can pay it back with. So the thinking is that these two incentives that are at play in this scenario, they're so insanely strong that all allocators will just do some basic math, and they'll like take any time they see these kind of like they'll be competing with each other to be first. So in practice, like it's not gonna, there's not gonna be these like, the peg is X above or X below or something. Like it'll be this like very sort of fine-tuned, like very sort of just sort of organic mechanism that just changes the rates based on what the allocators are able to get out there. And then the allocators, because they're forced to market make as well, then they're not actually gonna be like they're gonna be, the thing that's gonna guide them in whether they allocate into real assets or whether they pull out of real assets and repay the debt. That's eventually gonna be based on like where they put the midpoint of their market making, and sort of like, so it'll be very kind of optimized and fine tuned, right, in how they operate. Rather than some kind of crude like, oh, the peg is above X and now I need to go sell, and right, it's gonna be kind of I guess I don't like like dynamic and I don't know, like smooth in a sense, where they're gonna the allocators, especially if some allocator gets an edge and like finds a way to just get a higher rate than the other allocators, then that allocator will like be the one, they'll squeeze out all the other ones because it'll push the base rate to a level that the others can't keep up with, and then that'll be the only allocator that's borrowing, doing sort of marginal generation where it's generating and putting into stuff with no junior capital. Once you then add the whole junior capital thing to the mix, right, which encourages allocators to do things that are more risky than money market funds, for instance, right, but actually encourages like even things like private credit and so on, right? That's if you've got a shit ton of junior capital, then it's like, what can you do with all the junior capital? Well, that's when you get sort of naturally pushed out into the more risky and more sort of innovative stuff, right? Because it's actually safe to do that. It's safe to do private credit if you are loaded up with junior capital. So then that means that all the other allocators that aren't the ones that have the most sort of cutting edge strategy that can somehow generate a higher yield infinitely, they'll still have a role to play because they'll be sitting with junior capital and doing stuff.
Okay. So let me check my understanding of one thing here. With the original version of Maker, like if you're kind of just thinking about ETH as collateral, for instance, and that's the only available collateral asset, then you're fundamentally limited in the demand for people to basically borrow against ETH, usually to like go margin long on ETH or some other thing in crypto. And so if there's demand for way more DAI just by users who want to use DAI for the sake of having a stablecoin that's decentralized, then there was demand for like ETH CDPs with DAI, then you have like a mismatch. There's a problem there. But in this case, because allocator subDAOs can borrow new stable and then go buy anything with it, including like treasuries or what have you, then basically as long as there's somewhere for them to as long as they can earn some non-zero return, then if like the base rate is 0, then you can always scale the amount of new stable in circulation because they'll be happy to borrow at 0, and go, and go buy some asset that's generating any, some amount of non-zero return. And so basically what that means, if I understand it correctly, is that there's no longer the same, like, much more strict limitation on supply. Like, basically, if there's however much demand there is for new stable as a transactional currency or as like a temporary store of value, or the things that we do with fiat money, basically, will be able to be fulfilled by the system, as long as there's some asset that can be held that generates some yield against the dollar or whatever new stable is pegged against. So it could be some other currency or basket or whatever. And so then, let's see, I had one question on top of that, which is, let's see, what's the question there? So, well, first, is that right? Is that, like, do you think that's an accurate summary?
Yeah, and also, we already have the PSM. So today we have a kind of a crude version of this, right? With the PSM, and then with these, what we call our arranged structures, which are basically these trusts that the DAO is able to control, that it can then allocate funds to, and then they go out and buy treasuries today. And so the way it works is the PSM fills up infinitely, right? That can just go to infinity. So DAI is just always like, if there's more DAI demand, then there's just more USDC sitting in PSM. And then what the system does is it sort of instructs these arranged structures to then take up to 80% of the contents of the PSM, and then allocate that into treasuries automatically, sort of. So, and the problem with this approach is it's kind of like, it's pretty good, obviously. The rates are great right now and so on, right? So it's a great business model, but there's some duration risk, and there's still so many ways something like this could be optimized, right? You could make a whole like portfolio of that's optimized for ALM, and you could do more risk over collateralized. Like, all these possibilities, they're not practical for Maker Core to do, right? Like, it took us a year. Like, a year ago we tried to set up these arranged structures, and they're only now set up. So it took us a year to do that, right? And so the idea is that the allocator subDAOs, they can take the same concept, but they can just make it hyper efficient, right? So they'll be putting the USDC or the state, whatever they can get, right? They'll be market making it in a way where they'll want to make the biggest possible spread by taking it to the place where the users are the most interested, so they're willing to pay the most, right? And there's most volume and so on, right? So they can earn as much as possible on doing market making, and then they'll put it into the most efficient allocation possible, right? Where it's a perfect, ALM optimized portfolio. It's, they take the bet, they take credit risk if they find some mispriced credit that they have junior capital to make a bet on. They optimize for gas costs and legal costs and round trip times, and like every single parameter that can be optimized. The allocator DAOs will be optimizing that, and they'll be doing that in competition with each other, right? So, and then, as I was talking about earlier, right, the winner is the end user. Because all of this stuff, it just means the base rate goes up, and then it means the DAI savings rate goes up. So it's sort of like it all comes back to the end user in the end.
Yep. Okay. And so, if I understood correctly, Maker Core will set, will there be different base rates depending on like what sort of assets the allocator subDAO is holding? Or are you saying there'd just be one base rate? And the reason I'm asking this is because I'm wondering, if I'm an allocator subDAO and I borrow a new stable and I just go buy, say, USDC, let's say I haven't allocated yet, so I'm just holding USDC, would that be like well, okay, actually there's two different questions there. It's not a base rate question. There's a question about like capital ratios or collateralization ratios that would be required before I would start to seem risky and get liquidated. Is there do you expect that, sort of similar to the PSM but in a different way, an allocator subDAO could be like, look, we have 100 million in USDC sitting on our balance sheet. just told my camera to do the following me thing. Okay. And so if they have like 100 million USDC sitting on their balance sheet, will that mean that they can borrow 100 million new stable? Or is there some expectation of over collateralization, even if what they're holding is, intended to be directly stable one-to-one against new stable?
Yeah, so actually the way it works is that an allocator can borrow 100 million new stable or 200 million or like a trillion if it has enough time. And it's kind of like the new stable will just be collateral for itself, kind of. So the capital ratio for that will be 0%. Like, you just borrow some new stable, you just have it sitting. Well, that's fine. You can do that. You can keep doing it. It's just an action. It's just you're gonna lose money doing it. You're not gonna lose the entire base rate actually, because there's also this thing called the idle rate. So the idle rate is something that's like retroactively calculated, where any place where an allocator subDAO has sort of controlled new stable anywhere, and by controlling it, had it out of circulation, then they get a kind of like a rebate back that is slightly less than the DAI savings rate. So it's more like a spread they have to pay for like having a bunch of dry powder sitting somewhere. But yeah, then the question is, what are they allowed to do with that? And they're sort of allowed to try to do anything, right? It's just that sometimes they're gonna take some action that turns out to be dumb because they take an action that violates their capital ratio. But it's not too bad. So maybe they take the 100 million and put it all into 3-month treasuries. And it turns out they were only allowed to do that with 80 million of it. And the remaining 20 million should have been put into something with instant liquidity. Then what will happen is after 3 months, like at the end of the quarter, they'll get a big penalty rate, because it'll be calculated, well, for 20%, you had 20 million that should have been into something, so basically you were missing, that 20 million should have been, should have had a junior capital of, I don't know, 5% or something. So that means you were missing 1 million in capitalization, and you did that for 90 days, and then that's a penalty rate of, I don't know what, right? Let's say 1% per day or something, right? So then that's 90%. So that's a 900,000 penalty at the end of the quarter they didn't get for that. So it's like, so they can actually do that and end up and screw up, and they'll probably discover it, and then they'll just undo it, and then maybe they only do the wrong thing for like 5 days, so they only end up paying 50,000 in penalties, something, right? Of course, they might also do an action that is like seriously bad, right? So, and actually, it might also be that sort of like, yeah, well, no, sometimes they're allowed to do, like, sometimes they're allowed to break the rules if they need to do some kind of moving around stuff, basically. So there might just be situations where they're in, like, there's some assets like in transit, they're pulling them out of real assets, they're trying to put them into stable coins, but it takes 3 days, and then during those 3 days they run out of the whatever, right? And then that's just like totally fine, right? But if you then do something like, oh, let's YOLO this into Dogecoin or whatever, right? We were talking about this earlier. Then it's actually like, that will be considered a governance attack, because they're sort of like deliberately, with absolutely no excuse, they're breaking the rules, and that is like very, very wrong, right, in the system. And then what happens is Maker, the governance security process of Maker, has to like step in and then apply some giant penalty and emit a whole bunch of subDAO tokens in as a penalty, basically. And as a result, you're just not going to take the risk on doing something stupid like that, right? Because, unless you just want to watch the world burn, right? But in which case it's fine, because then Maker's just like, okay, well, great, thanks for all the money, right? So you did your stupid thing, for whatever reason, and we took all your money. So it's sort of like you're sort of paying for, I don't know, if you want to troll the system and try to do something crazy, then you can try, but you'll get caught and it'll cost you a lot. And Maker Core will be like, again, it's like, no matter what you try to do, the system is set up so that, it makes money when people do stuff, right?
Okay. Okay. But fundamentally, yeah, if you are holding, something that is somewhat risky, like at the end of the day, Maker Core always has to keep track of, what capital the allocator subDAOs have and whether that's sufficient for their total new stable debt. And I see what you mean about how if they've borrowed new stable and they're still holding it, well, then that's like perfect collateralization. They can repay 100% of that debt because they have the new stable itself. If they're holding USDC, maybe Maker Core would require a little bit of over collateralization because like maybe USDC could lose value relative to new stable. Versus if they're, and then there's maybe some assets that they would say, we're not going to count that in terms of your collateral at all, because it's too volatile. So it's just irrelevant to our calculations.
Yeah.
Yeah. Okay. Cool. So I think I want to talk about the totally other angle on all of this that you mentioned in Zuzulu, how this relates to artificial intelligence in the long term and so on. So, maybe we should like take a bathroom break and then talk about like, the prior direction of your end game, thinking about like climate stuff and so on, and then why the transition to thinking about AI and like how you think it's going to interact with all of that stuff going forward.
Again.
Hey.
Yeah, so it's
okay,
funny because
cool.
I was like, I mean, I was trying to, the very first thing was like to talk about Endgame is about resilience and scaling and accessibility, right, and bringing in more people. And then there's two main methods. One is subDAOs, and then talk a bit about subDAOs, and then like the delay kind of caught like. And then I was just like, and the second thing is or something, and then I never got into it, right? But so the second thing is basically to be overly simplistic, the second thing is the AI piece. But yeah, it actually is it's a lot more than that. It's just what we kind of quickly learned is that calling it AI gets a lot more people interested in it, But it's not just AI. That's kind of just like one of the tools that are possible by this approach, right? Which is basically it's like a system of so what we call it is alignment engineering, and it's basically an approach of trying to codify everything in explicit rules that are organized in this sort of optimized data structure that's meant to make it as easy as possible for the whole ecosystem to kind of collaborate with a kind of in a sense, is sort of a shared memory or shared knowledge that's completely open and transparent, that details the entire state of the whole system and all of its pieces, but also its underlying principles and its underlying sort of reason and purpose. And then it sort of kind of, we call it self-aligns basically, because it acts sort of like a constitution and then laws, right? Where you can't make a law that's against the constitution. So this is where a lot of the immutability and resilience comes into play, because then this system sort of at the highest level defines you can't try to build a mechanism that freezes DAI or censors DAI or censors new stable or something, and you can't like pivot it to something else than a stablecoin business. And also, and this is kind of like where this is the kind of stuff where then this is what I would focus on entirely, right? Because of all the scars I've had over all the 8.5 years we've been doing this, right? But it also regulates the core compensation for like the core kind of contributors that sort of run the governance, and defines the balance of power between them, because that's in practice where like where you really need. In practice that's where a lot of the suggestions come in, right? People tend to have this idea that it would be great if their particular branch gain some additional power or gain some additional funding, right? So so this whole, I mean, this governance structure kind of makes all of that fully immutable. And so it's called, so it's called alignment engineering. And this giant set of rules, we call those the alignment artifacts. Originally, it was called the Constitution, but it turned out there was like a whole bunch of, like, it was just a bad idea to call it something that has a real world legal meaning. So we decided to like make up a completely new word, which is alignment artifact, that basically describes something that looks like a legal system, but it doesn't have any legal force. It's entirely a set of like cryptoeconomic mechanisms and kind of an explanation of the overall structure and all the incentives that exist in that structure that'll basically help guide the individual to understand how they can make the most money or make the most value out of the system by contributing to the system in a way that keeps the equilibrium and sort of keeps it getting stronger and stronger and more resilient.
Okay, and so for things that would have happened in core units before, where core units like for development or BD or whatever would have campaigned for more funding, is there just, you're saying that's immutable, so there's just like some streaming funding from Maker Core for various functions, but it can't be changed, or is there just no longer any funding for functions like development, or how does that work?
So it's more like there is this kind of basically, I mean, well, it's actually something you could think of as like a hierarchy, actually, right? And at the top of that hierarchy, you've got sort of multiple of these. I mean, so affectionately, I call them bureaucrats, essentially, right? But so in the system, they're called alignment conservers, right? So alignment conservers, they, I mean, the most powerful and most central of them is the delegate. So that's the role in the system of those who, you know, they vote on behalf of others. And I mean, a really simplistic analogy would be to compare them to like, you know, members of parliament, right, in a parliamentary democracy, right, that are sort of elected by the token holders, and then once they're elected by the token holders, they kind of carry they sort of represent them in a sense, and they vote on their behalf. What we found though was that there's, you know, very, very intense principal agent problems in a DAO. And in the real world, in like a corporation, right, you've got fiduciary duty. So that kind of protects you against like, you know, abuse by the board or something like that, right? And even then, you still have crazy abuses all the time, right? Even when there's like legal consequences and people go to jail for this stuff, right? They still do all sorts of crazy stuff, right? So you can imagine in a DAO where there's no fiduciary duty, you very quickly see a lot of kind of, you know, sort of slippery slope behavior at minimum, right? Of like these sort of central kind of roles, like doing things that kind of tend to consolidate their power and increase their compensation, and, you know, in some cases there's, you know, also like I don't think it's necessarily happened in Maker, at least not much, but I mean there's the obvious sort of problem of like nepotism and corruption as well, right? Where you vote to have the system do something that benefits you personally, right? So one of the ways we deal with it is through balance of power. So there's like sort of multiple branches of power or of government or something, you could think of it as well, right? So today in the kind of pre-Endgame Maker governance, the other major quote-unquote bureaucrat was the facilitator. And so the facilitators are those who kind of run all the actual, you could call it bureaucracy, all the processes, all the paperwork, all the reporting related to Maker governance. And one of the key things that the facilitators controlled is what actually goes up for a vote in like the official voting front end, right? So they control like the website, and they control like the sort of the official voting front end and so on. So actually all the way back then, like even in the old days where the delegates were kind of unchecked and they had no really constraints on what they could do, there still was this kind of fundamental check that like the facilitators were not gonna let a delegate put in a vote to take all the money for themselves or something. Like that would have been stopped if they were like, hey, I would like to propose for this to go into the front end. Then in the old system, it also says like, no, if something like that, if someone proposed something like that, don't even put it into the front end, right? And so basically, Endgame just takes that basic idea of like there are different types of power in the system, and they should all be set up with like different people, right? You don't want the delegate to both control the voting power and then also control what goes into the front end, right? And so you want to split that up, and you want to have a balance of power and separation of power. And then Endgame just takes that to like the next level with, first of all, like very, very meticulously sort of spelling out what can facilitators do and what can they not do, what can delegates do, what can they not do, and then also adding this sort of final branch of power called the Aligned Voter Committee. And so the Aligned Voter Committees, they're actually in some sense the most powerful. So there's different types of power. So you can't say absolutely which is more powerful, which is less powerful, but they are, in terms of kind of like what happens, then all major decisions happen in the Aligned Voter Committees. They're sort of like they're like the branch that kind of represents the community or represents the token holders. And the reason why they do that and how they work is that they're the one branch where you can't get sort of elected to that. You can only be in that if you actually are an MKR holder. And there's also almost no compensation for it. Like there's a very low compensation, and that compensation depends only on your own MKR holdings, not on something you're given by someone else or that you achieve because you can, you become popular or you're good at politics or something. So it's basically like they're more like volunteers, and they're more closely aligned with MKR holders. And in practice, those who do this, play this role, they're usually people who are doing it because they have MKR, and they're not doing it to get paid to do the role because the pay isn't that great. They're doing it because it's a way for them to like protect their asset that they hold, by sort of being deeply embedded into governance. And then,
right,
then it's sort of what the Aligned Voter Committee, their kind of role is, they are the ones who are responsible for basically kind of forming opinions about what is the best way to update the alignment artifacts. So basically change the rules to become, more aligned, as we would call it, which means more effective and more, sort of like better at achieving the fundamental principles of what the system is trying to achieve. And then the delegates, for instance, their job is not, so delegates are kind of like, they're sort of a check, and they're sort of like, they're kind of like, the Aligned Voter Committees and the delegates, they're sort of a check and balance on each other. And then the facilitators are an additional sort of check and balance on the Aligned Voter Committees and the delegates, where basically the Aligned Voter Committees, they sort of formulate an opinion, and then and they're, by the way, they're sort of small groups of MKR holders, basically, that have this sort of formalized association with each other, that they create through interacting with the governance process, which today happens by like them posting some stuff on the forum, basically. But then this small group, they can basically every quarter, actually they're required to every quarter to release this like kind of opinion about this is what we think should be done to improve the alignment artifacts. Meaning this is how we think the text of the rules should be updated to be strong, like to be better. More aligned with the ultimate goal of generating economic value and creating public good. And the delegates, their role is then to basically like vote according to what the Aligned Voter Committees say, basically. Because when you delegate to delegate, you actually pick. You don't just delegate to the delegate and say go do whatever you feel like with these votes. Instead, you sort of pick an Aligned Voter Committee strategy that you want the delegate to follow. So it's kind of like, it's like a democratic system where you vote for a member of parliament, that's then a part of a party, except you can choose which party, like, so they're all members of all the parties, and when you vote for them, you pick which party you want them to be kind of using your vote for, in a sense. And so today, right, we have so there's like 5 or 6 aligned voter committees currently. And the kind of the most basic thing that the aligned voter committees they do is they sort of let the most fundamental form of politics kind of play out in a very organized, civil manner. And that's the question of what to do with the budgets, right? So there's this super kind of primordial sort of question, right? Which is, should budgets go up or should budgets go down, right? And some people, they're always budgets up, right? More growth, right? And some people always like less budgets, cut costs, build up cash, right? And we found that these two positions, they're sort of like the equivalent to like the political spectrum of left versus right. And we call them hawkish versus dovish, right? So we have a bunch of people that are just naturally dovish, and they always want to see more budgets and more growth, and they're sort of like, they want to see like the big splash in the long run, right? And they're all about this like giant vision. And the hawkish people, they're always like, winter's coming, right? I mean, the growth is gonna come if we just solid and we just focus on building up our cash and so on, right? So the 6 aligned voter committees, or 5 or however many, 5 or 6 there are today, they sort of are then like placed somewhere in that spectrum and kind of communicate which they are. So there's one called the growth aligned voter committee, for instance, and so that one is like sort of solidly dovish, right? And then there's also one called the KISS, like keep it simple, stupid, and that one is like one of the more hawkish ones, right? And then when you go to vote in the front end of the system, you basically pick a delegate, and then you pick, let's say, so if you're like, oh well, when I look at the system, it looks to me like it's making tons of money, but it's not really, I don't know, doing enough marketing or something. So I'm gonna find an ABC, an aligned voter committee, that wants to do more marketing, and they're sort of pushing for more spending to more marketing. And then maybe they'll find growth, and they see, okay, these want to spend more, they want to put more into marketing. I want to support their strategy with my voting. But then there's this, very kind of essential separation of power where the aligned voter committees, those are the ones who decide like what actually happens, kind of like what does it mean when we want to do more marketing and more budget to marketing. But they don't get to control the vote in the end. The delegate gets to control the vote. And the key job of the delegate basically is to do whatever the hell the ABC tells them to do, in a sense, right? Like the ABC decides, this is what we want to do. We want to do more growth. We want to do more marketing. We want to do more spending. This is what we think, how we should change this. Like we should change the rules of the system so that starts happening. And then the core function of the delegate is to basically, then go ahead and do that, unless it's what we call misaligned, right? So the only situation where the delegate steps in and overrules what the aligned voter committee is trying to do is if the aligned voter committee is breaking some fundamental rule of the system. And then these fundamental rules, it's like this, we used to call it constitution. It just recently it changed name to the Atlas. So like the Atlas is like the sort of the big the Bible or something like that, right? That's sort of meant to contain these eventually immutable principles around what should the system do, right? So that means something like the Atlas will contain some like core principles around how marketing should function, like something like, we're not allowed to do marketing that is like predatory and misleading and right, like somehow it's like not just common sense actually in some ways.
So this all sounds like basically mechanistic responses, mechanistic fixes for those political challenges. But I'm also still curious to get to like, how does it relate to, you talked about in Montenegro the way that this relates to let's just throw out the concept of economic overhang. I found that interesting. Like, how does this all relate to the bigger picture of artificial intelligence? Let's make sure to get there too.
Yeah, I mean, I'm getting there. I'm just sort of setting the stage for, because what I was saying is in the end, AI is well, the other thing about AI is like once you build it, you don't call it AI anymore. Like once you realize how it actually works, it's like, oh, it's just well organized data. That doesn't sound like AI at all once you spell it out, right? Um, but no, but yeah. So, but this right? Okay, so yeah, there's no reason, I guess, to go more in depth of like how. But there's these fundamental checks and balances. Okay, one thing I really want to add though is like, um, a key driver of Endgame was the very very low voter participation in Maker, right? And in all of DAOs, right? Everyone's got this problem of like voter apathy, and it's like, why the hell should I vote? And I mean, people barely go out and vote in democratic elections. That's about the future of their country, right? There's no way they're gonna vote in some like, weird internet DAO thing that they forgot about, right? Especially not if it costs them money and it's really, really difficult and gives them a headache, right? So a core kind of mechanism of Endgame is this thing called lock staking, which is basically it's inspired by Curve. Curve. What's it called? I think they call it VE Tokenomics. I don't know. Yeah, but Curve was, I think, the first project. It's like the first project where what they did is they said if you lock up your tokens for 4 years, you're gonna get a lot of fees from the system and you're gonna get more voting power. But then you're locked for 4 years, so it's like you can choose to sort of make your token illiquid, but get greater rewards and also greater voting power. And then what's happening is like, okay, well then if you're locked for 4 years, then and you have a lot of voting power, and you're gonna get a huge upside if the system does well, then there's a good chance you're gonna be spending a little bit more time like actually trying to figure out how to vote, right? Because it's no longer this like I don't get anything from it and it's really complicated and I could just free ride instead, right? So that's what we want to achieve. Like we want to get this more like sort of skin in the game of like a class of users that lock stake, as we call it, and as a result they get more rewards from the system, but now they have to pay a penalty to exit. So if they're kind of like stuck for the most part, right? They want to stay there forever, ideally, or at least stay there very long term. So there's a good reason for them to try to make sure that governance doesn't totally go off the rails, right? Because they don't want to lose their shirt while they're in the system in the long run. And then the second thing is, in order to lock stake as a part of the user experience of lock staking your tokens, you're sort of required to go through this sort of gamified user experience of delegating your tokens to an aligned voter committee. So the whole thing is like set up to make it so like instead of being some complicated thing where you have to vote on 500 things with a bunch of jargon you don't understand, it's like it's like do you want to lock up your tokens so they get more difficult to get out again, but you're gonna get extra rewards? All right, then we just want to ask you, do you want budgets to go up or go down, right? And then it's sort of like almost like data mines you in a sense, right? It tries to get a little bit of knowledge out of every person that like goes for these rewards. I mean, ultimately they're there to get the money, right? They're there to get the reward. That's the primary reason why they're there. So that's why the rest of the system has to be so kind of dumbed down and foolproof and really reduce the question down to something that's so simple that in that moment where you're required to go through the voting user experience anyway, if it's simple enough, then it's like, okay, well, I may as well think for half a second and be like, obviously right now budgets should go down, right? Or they should stay where they are or whatever, right? But this kind of runs the whole thing but this also means, for instance, so what they do is they delegate to these, they delegate to the delegates, but they have to pick a strategy that the delegate has to follow. So the delegates, they get super powerful, right? They got tons of these like incentivized votes that don't really necessarily care that much about what's going on day to day. So that's why the delegates have to be so strictly regulated that like they're not allowed to like make their own decisions about anything, like because they could so easily be like, oh, we feel like we should have extra, right? I mean, sooner or later that start messing around with stuff, and then sooner or later they'd arrive at some roundabout way, finding a way to give themselves more power and more money. If it's like if there's nothing to prevent them from kind of like getting into that habit, right? Because they have all the power, like they've got all the physical power in the system. But then instead, well, their role is entirely like just follow the rules, like to the letter, right? Or even better, to the spirit of the rules. And so this is where we get very close to the AI thing. Now we start talking about letter of the rules and spirit of the rules. And then basically like protect the system if things start to sort of get out of hand, right? And there's like some suppliers or some budgeting starts to happen where like there's some strange red flags, right? Why is this particular company getting picked all the time? Could it be that they're connected to whatever, the EVC or the delegate or the facilitator or whatever, right? And yeah, so it's basically this like chain of checks and balances, right? And everyone's kind of like meant to specialize in sort of understanding their part of the system, right? So once you sort of go the level below the bureaucrats, right? Affectionately, I mean, nowadays I love the bureaucrats because once you set them up the right way, they're super valuable because they keep each other in check, and suddenly they're purely good. They don't do any bad things anymore. It's only when you design bureaucrats the wrong way, it's a bad thing. Like if you do it the right way, they're a good thing, right? They run the whole thing. Like they allow the system to be decentralized because none of them actually is in charge, right? They're just sort of keeping each other in check. But so the layer below these alignment conservers, right? That's where you've got these thing called the ecosystem actors that do all the actual work. So because we can keep the alignment conservers in check with these like pre-designed, gamified, sort of fixed compensation amounts that they get based on these like marginal voting for the delegates and other kind of other like sort of fixed tokenomics system that pays the alignment conservers, then we can sort of count on them to be kind of on our side in a sense, right? When they go out and interact with suppliers to do work such as build some smart contract thing or something like that, right? So the layer below the alignment conservers, that's where you got normal budgets, and you've got so something like there's a yearly budget of 2 million for security audits, and there's a budget of 1.5 million for marketing, and the marketing is of that 1.5 million, 500,000 is for marketing in Asia, and of that blah blah blah, even more details, right? And this is all like detailed in the rules. And then you've got the facilitators. So one of the alignment conservers are the ones that kind of like practically go out and sort of execute and follow these rules sort of in the day-to-day sense. While the delegates, they kind of like secure the whole system, and then the aligned voter committees, they write the rules, right? So they all specialize in their own little thing, right? But yeah, basically, one of the things that's still missing is if you're like a total outsider, like you're a person that's using the luck stake system, so you're trying, you're picking like an aligned voter committee strategy to follow, or you're like even further on the outside, you're maybe a DAO holder that just wants to know if the system is safe or not. Then basically the point is the whole, like all these alignment artifacts and all these processes and everything is sort of like everything is built around making sure that all the data is like fully surfaced, and like all the data is explicit, and it's transparent, it's public, and it's organized in this sort of unified data structure. And then that's where the AI comes in, because that makes it incredibly easy to build AI systems to sort of take all this like overwhelmingly complex and just kind of, like extremely detailed, right, data about every single thing, such as how you do marketing in South Korea or something like that, right? Take that and summarize that for the end user in the way that's useful to them, right? I mean, that's what large language models, they can already do that today, right? And just this super, super basic function of like making the data more accessible and sort of pointing the user in the right direction, or using different explanations to help them understand, like what's, some marketing thing. It says some complicated marketing thing. I don't know what that means. Does it mean we're targeting, normal people or business people or what? I don't know, right? You could ask an LLM that, and it will actually be able to spit out, well, I mean, given blah blah, this like for you to most easily understand this, you should probably think of it as if they're targeting normal people or whatever, right? Like, and that's one thing that's like useful. But where it gets way more sort of like a matter of like making the system resilient and scalable and sort of like delivering on the promise of a DAO, right? Is that you can take a decision made by a facilitator, for instance, or a delegate or an aligned voter committee, and then some random person should be able to run through the LLM, and the LLM will be able to say, well, this is against the rules. Like they just did something that was like illegal according to the rules. So they should get a penalty of, 200,000. And if you're the one that goes and sort of triggers that penalty, then you get a whistleblower bounty of 20,000. Would you like to do it? Click here if you would like to get 20,000, right? Then you suddenly get a system where it's like the insiders lose this, like sort of information asymmetry, and complexity asymmetry that currently exists. That, I mean, I think in some DAOs, I wouldn't say this is really the case in Maker, at least only to a very small extent, right? In some cases, when you've got a principal agent situation and you've got insiders with an information asymmetry advantage, they would like to keep that advantage going, right? And once you put AI into this and you make sure that the rules themselves demand like full disclosure of all data and just kind of judges failure to disclose any data at any point in time, that's just considered misalignment. Like that's sort of considered against the core rules of the system, and it's never justifiable sort of at the equilibrium of the system, right? It's like like the rules themselves are like spelled out to be like, well, if somebody does something and they don't provide a clear justification, that's a huge deal and they need to pay a penalty of blah blah blah. It's very expensive and very serious, right? That's sort of built into the rules themselves. And then everything is going to be there in LLMs for people to basically make sure that, it's not the people that run the system. It is the rules. Like the rules run the people, right? It's not the people that run the rules. And then you're starting to get to something that is just like a proper, autonomous system, right? What we call an ecosystem intelligence, right? Where in some ways, like the humans aren't really, like, they're just almost like processes or something, like nodes in a bigger thing, where they just get in there, they have some incentive in front of them that says, if you do this for me, I'll pay you XYZ. And then the human will be like, okay, well, I'm at risk professional, these are my credentials, this is my analysis of this data, here you go, right? And then the system pays them out, and then that data sort of goes into the system, and then there's all these rules around, well, when you get a data from a risk professional with these kind of credentials, then you gotta take it and you gotta compare it to some other data from somewhere else and blah 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 blah. And you really want to like make it as decentralized, right, and diversified, and ultimately kind of also like a overly simplistic, like a neural network, although it's actually more like a neural symbolic network, because it's more like, it's symbolic AI, right? How this works, right? It's all based on human language rather than a bunch of math. Though of course a lot of it is algorithms and numbers in there as well, of like how something like, well, you got one risk assessment over here that says the capital ratio for this thing should be 20%. And then you've got another risk assessment over here that says the capital ratio of this thing should be 15%. Then, the model says take the average, so make it 17.5% or something, right? That could be like a really simplistic way of like how you can sort of put kind of thinking or learning or reasoning into the rules, right? Although it wouldn't actually work like that. That's a hypothetical example. It wouldn't be actually how it worked.
Yeah.
But yeah.
Okay, very cool. I think just one comment I want to add here is like, I've thought a lot about the securities laws in the US, as many crypto project founders have had to do. And I think that one very cool thing about them, there's sort of this deep wisdom in the securities laws of this thing that you're pointing at, where anytime there's a group of people operating something in private, like let's just take like a company, even if it's a publicly traded company, the company is in fact by default operated in private. A natural information asymmetry arises because conversations are being had, decisions are being made, etc., not in full public view. And so then, and that's constantly arising every hour of every day. And so then the securities laws fundamentally are there to force not like a full elimination, but like a reduction in that information asymmetry, basically forcing to disclose, because when the private information is occurring, especially if it's information that the private actors could use to their advantage, whether it's negative information that hasn't come out yet or positive information that hasn't come out yet or whatever, they have the incentive to keep information private a lot of times, especially if it's something bad, right? If there's sort of dirty laundry, it's like, we'd rather just not announce the fact that, we lost this partnership or we lost this vendor or this person quit or all sorts of bad things that could be happening inside of an ordinary business. And so the securities laws basically force you to air your dirty laundry and disclose at least the most formulaic of material information, which makes sense. Like that's like a sensible principle. But then it's interesting because, a lot of people in the US complain about like, okay, sure, there's like an S1 and then there's ongoing filings, but the filings are really archaic and like most retail people never actually read them. And so like maybe that's still fine because like journalists can read them, and if something is a really big deal, it can end up being a headline that you see a tweet about or whatever. But the LLM model is a very interesting idea that you could apply just the same to ordinary publicly traded companies with their forced information disclosure. You could put that information into an LLM and maybe make it like more accessible to an ordinary person, an ordinary retail investor. And so basically it's like you're talking about like, structuring disclosure effectively in a way that makes it actually accessible to an ordinary participant in the system, which I think is really cool. And one more thought there is that like a lot of times in crypto, people are spending their time, so much time and money is, in my opinion, basically wasted thinking about how do we structure our thing so that it doesn't trigger the US securities laws in form, so that we don't get in trouble for building this thing that we're excited to build. But one very cool thing about the securities laws is that they have forced people to come up with these designs, and in some cases, like the design you're talking about, like if you take to heart the idea of like, let's design a system that has no information asymmetry or a minimal information asymmetry from the start, such that regardless of the form, like in spirit, the securities laws aren't necessary to close that gap because we just didn't let it develop in the first place, then you can create something that, like in spirit, fundamentally doesn't require such a regulatory regime because it doesn't have the problem that an ordinary company has from the start when it comes to information asymmetry. So I think that's really cool. That's a principle that I'm excited to apply in governance design as well. One question I have for you there is like, how do you, like, is the idea that you basically make it disallowed in the system to communicate in private at all? Or are these like actors allowed to do a bunch of communication in private, but then when it comes time to take any action, they have to like adequately disclose justification? But also the issue I see with that that's very natural is like, okay, we talk in private, we come up with our plan, the plan's kind of corrupt, and then we go and we present the plan. We present with a justification that's different from our actual reason for doing it. But the justification sounds plausible enough that, your overall bureaucracy or your LLM that's meant to check whether we presented a justification or whatever says like, yep, justification was provided, and it seems sufficient. Like, because I've thought about this before, and one direction that I've considered is like just making it like completely disallowed to communicate in private about governance topics at all, where if it's ever found out that, relevant actors are communicating in private, they're just somehow, there's some governance mechanism where you can just eject them from the system. On the flip side, anyone who's tried to do a project fully in public, which I think you and the folks at Maker have certainly gotten a lot of experience with, there's all sorts of costs to having sensitive conversations about things in public, especially if you're talking about like legal matters or whatever. You don't really, if you're talking about something that has a market impact, and you're worried about being front run, there's like all sorts of things where you don't really want to get on a publicly streamed video call or a public chat discussion to talk about every last little thing. You end up spending so much time and energy worrying about what the public interpretation of your words might be, etc. So I'm curious, like, do you have in principle, like what direction do you think makes sense to resolve that tension?
Yeah, this is a great question, because this is one of those things where most people, they haven't even arrived at this stuff you're talking about yet, right? Because it's such a, like, it just only occurs when you really try to build something that's truly decentralized, and then you just run into all these like crazy things like politics and personal leverage, and I mean, and, so like, I mean, unfortunately, this thing about you're not allowed to talk to each other, it doesn't work because they just do it anyway, and you just don't catch them.
Right.
So like, it just means
Right.
the bad guys, they get more power because the good guys are like so dumb they actually don't. So anyway, so that, yeah, I was actually going down that path for a while. I was like, you can't talk to each other, guys, and I was like trying to think of ways to enforce that, right? Um, but yeah, like, um, actually, I wanted to sort of rewind a little bit, and then one thing I want to mention, like this initial example, right, of like the spirit of investor protection laws, right? Um, well, actually, one thing I want to say is I would imagine there's already a plugin for ChatGPT that actually does that like reads through that stuff and like spits
Yeah.
out some analysis, right?
Yep.
And so the thing is,
Yep.
that's actually quite. I mean, that's really cool, but it's quite simple, and it's like it's the really simple thing you can do with LLMs, right? And what we are really focused on in Maker, and what we actually started doing with Endgame, like before we sort of pivoted to AI and realized that AI could be used now big time in what we were already doing, right? What we've been so focused on from the start is the data structuring. So it's like, what if the filings were, purpose built to make it as easy as possible to access them through an LLM, right? And even more importantly, what if they were real time, and this is actually sort of a way we describe how this works, right? Imagine if sort of investor communication and internal like Kanban, internal coordination, internal working. What if that was the same thing? Like, it's literally the same system that like is used for how you do day-to-day work, as what you use for the token holders, the DAI holders, to determine whether they think it's stable or not or something, right? And then finally, it's even, I mean, so this ends up all becoming like a question of data structure. And then especially once you add AI to the mix, because suddenly it's like everyone's interacting through some kind of personalized AI interface, right? And then the question is, what's the common language that all the AI systems use to sort of organize their knowledge and their data, right? And that's common language is these things we call the alignment artifacts, right? Which is just these like giant data structures that update in real time with everything that happens. So the answer to your thing about like, what if some guys come and do something bad, but provide a justification, and the system determines, oh, they've got a justification. Well, the answer is, you have to have the rules determine what's a good justification, what's a bad justification, right? Like, you have to actually pre-program like what type of marketing works. Where do we have data that this type of marketing works? So if somebody comes with like a crappy marketing idea, it's just automatically rejected by the system. And if a facilitator then actually decides to go ahead with it anyway, despite the fact that obviously this is against the rules, then everyone will be able to see it in plain sight. The LLMs will pay, like, I mean, you would literally have a system that like sort of check the data regularly, and then if something like sort of sticks out, report back to me, and I want to try to see if I can get the whistleblower bounty, right? So all the LLMs around the world will like light up like bing bing bing. There's some obvious broken rule here by a facilitator. You can whistleblow on that, and you can actually make money if you escalate that to governance, and they sort of kind of judge, I guess you could say, right, that yes, this indeed was misaligned. Another thing that's kind of funny, right, is that so this thing about like prohibiting private communication, right, is so the way we kind of the solution we found that sort of achieves something like that, right, is instead require anonymity. So these alignment conservers, it's currently not yet the case, right? But we're moving in that direction very fast, basically. They will all be required to be anonymous. And there'll literally be this thing called, this like whistleblower bounty, where if you can basically like provide sufficient evidence that they don't have strong enough OPSEC that their identity might leak, then you can like get paid for that, and they will actually lose a sort of, they have this kind of stake that they're putting at stake that they can keep their identity hidden. And I mean, the primary reason for that is because you don't want, a delegate with physical control over billions of dollars, to get like snatched by some organized crime syndicate or something, right? So it's good security practice that your kind of critical nodes are hidden, right? Of course, but it has this very interesting secondary effect that it's very, very healthy for the politics, basically, because as soon as somebody's anonymous, like as soon as some guy that's like making the decisions around the marketing, once that person is anonymous, like nobody's gonna trust them, like to like that. Oh, trust me, I'm anonymous. This is totally not my cousin's marketing company I'm trying to send $1 million to, right? Like it's just like you're never gonna let some anonymous entity do anything unless you like know exactly, like you can sort of verify that they're not trying to steal the money. Because because this is what we kind of found, was that the thing that's such a like such a burden for DAOs is all this like human bullshit, right? Like all the humans with all their emotions, and they'll like have all these like sub stories and political speeches, and like that's the thing that like makes the DAO break, because a DAO is like some kind of mechanical technological thing, and you could just hack it and absolutely break it fully if you just play human a little bit and just like just the slightest amount of human politics. We're not even getting anywhere close to like the kind of politics real politicians use, right? But even the smallest amount will just totally break a DAO any time of day, basically. And I think that would always be the case. Like I actually think this anonymity requirement is like it's just as fundamental. I mean, it is just or some kind of, I don't know what other mechanisms could be used, but you have to kind of depersonalize these like core bureaucrats, and instead think of them as like an AI model that can, just like an LLM, it can like hallucinate. It might like do something dangerous at any time. So you gotta like, you gotta keep it on absolutely tight, on a tight leash, right? And that tight leash are the rules, right? The data in the alignment artifacts. So the higher quality that data is, the more they can do, sort of, right? The more flexibility they can get, because you can check, yes, they went and did some marketing thing and they could justify it because of all this data, and we have all this other data we can use to sort of verify that their data checks out, right? And so where this all then like comes together, comes full circle, and sort of Maker and Endgame becomes like a real AI thing. And to some extent, like we want to sort of, when we try to onboard new users, we want to be seen more like an AI project than a crypto project. Also because, of course, the whole narrative and whatever, crypto's over, every pivot to AI. But like, there's a final thing you can do with all of these things I described that just takes it to the next level in a way that's so profound and sort of so crazy, basically, that it really just becomes like some kind of giant AI endeavor, basically, right? And that is if you also start to use AI to generate the rules, right? So you don't just use AI to sort of interpret and understand the rules, but you also have AI processes, like, so the AI both consumes the quality of the data, but it also produces the quality of the data, right? So then you can start doing stuff like, we have all these like examples that we like to use, right? And so one thing is you can extrapolate from precedents, right? So you can have some some anonymous facilitator that pays some marketing budget to some shady company, and it's a big disaster, and it turns out it was his cousin and so on, right? And then you could have an AI be like, well, let me generate 20 rules that help prevent that, right? Right, gotta have KPIs, you gotta have blah, 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 right? Like, you could say something like, well, let me take 50 books on marketing and use that to generate a bunch of best practice. And if at least anytime you put some money to some marketing plan, these best practices have to be followed, right? And also something like, right, I mean, some system for like, and you got to build up a track record, and you got to track first do a small project and then do a larger, and right, and all of that needs to be codified as rules, and you're just not allowed to break those rules. Like, there's just no way. It's not like they're guidelines. No, they're not guidelines. They're like, if you don't follow the rules, you actually get a penalty. This is, by the way, this whole penalty thing is where the facilitator DAOs comes in. So like the facilitators have this entire like insurance mechanism built around them called facilitator DAOs, which are the ones that actually sort of are ultimately responsible and have the ultimate power. And then the facilitator DAOs kind of delegate their responsibility out to these facilitators. So Maker Core doesn't take the risk of a facilitator screwing up. The facilitator DAO takes that risk. So this is again like another endgame principle, right? Of like, don't let so Maker Core has to pay more because we're both paying for the facilitator job, but we're also paying for like the facilitator insurance. But again, we love to do that. We love to pay more for this less risk, right? Because then we can sort of just, we don't really have to worry about it anymore, right? They'll figure it out themselves. And then if it goes wrong, we just slap some giant penalty somewhere, and then that huge penalty is going to send sort of a signal through the system, right? That's going to make the system itself self-heal, kind of. But I mean, this thing about generating data.
So you're saying, sorry to cut you off. So you're saying that the facilitators are taking actions, and then Maker Core has some way of like evaluating those actions, and if some facilitator is misbehaving, there can be a large penalty, and that's payable because the facilitator DAO basically has like collateral posted of some type.
Yeah, in fact, I mean, the facilitator DAOs are just like allocator DAOs. They have all sorts of assets, and they're continuously receiving emissions from Maker Core, and they're making money through the accessibility reward, and then they're also making money through a kind of a facilitator reward that they get. That's based on this like gamified thing of like which alignment artifacts they're responsible for, and blah blah blah. Okay. This quickly gets too complicated, but yeah, basically they have a bunch of money, and if they do their job, they keep getting more money. But if they screw up and something bad happens, then they're totally on the hook. And it's the worst thing that can possibly happen is like a rule is like sort of, what do you call that? You know, like nakedly broken, right? Like, because the system interprets somebody breaking a rule deliberately. That interprets that as like, I mean, misalignment, which is like sort of the, you know, like blasphemy, right? In the context of Endgame, that like misalignment is this idea that we can try to break the fabric of the whole equilibrium, and the end point of misalignment will always be something like the delegates decide to pay themselves more, and then at that point they have full central control of the system, and the whole thing centralizes and fails, right? And so the facilitator DAOs become this kind of weird economic mechanism that is just like optimized for like following rules and just not screwing up with like, you know, like not doing what the rule says to do. And then like, I mean, and then like that's where then the magic is, with like, if you can just generate those rules with AI, and then you have the facilitator DAO sitting there with their own AI interpreting those rules, right? Then you're really getting like a system where there's no human anywhere that's really like on top of the whole thing, or like an expert or a leader or CEO or something. But because the data is so coherently structured, you have this, I mean, you're able to have this continuous learning process, right? Where if something goes wrong with some marketing thing, then you're absolutely going to learn from that, and multiple different levels, right? You're going to have the Maker Core is going to make stronger rules, but the facilitator DAO that was responsible for that, they're also going to make their own internal rules and going to make their own internal checks and balances, because they don't want to get a huge penalty like that again, right? And I mean, the way we kind of initially want to, like, we got sort of several stages of how we see this, you know, what we call the governance AI tools roll out, right? And so the first stage is that it's just used to generate what we call context data. So basically, it's like you have some rule that says, you know, a marketing campaign has to have very clear KPIs about blah, 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 right? And then you can use the governance AI tool to get, okay, generate 500 examples of me of various proposals for marketing campaigns, and then sort of come with all these different sort of randomized, like data points of like, these are the KPIs, right? And then initially, the early stage of the governance AI tool will just like generate like 500 random examples, right? And then humans would go through, and it would attempt to generate 500 correct examples, but LLMs are very faulty, right? So there'll be a whole bunch of weird stuff going on in there in those examples, right? And then you would have humans go through that those examples, right? Basically all that data, and then label the data. And this is sort of the key kind of moment of like, where it's like self-aligning data, right? That you have humans and AI working together to kind of create data that gets better and better, right? Because the AI generates kind of the volume of data essentially, right? And it makes it sort of it takes it maybe 90% there, and it does a lot of like, humans are very bad at like sitting down and writing 500 examples, right? But AI is very bad at like sort of actually understanding exactly what does it mean when a KPI is good or something, at least initially, right? So the humans can label that, and now suddenly you've got 500 labeled examples where all the all the ones where it actually is like a good example of this is a good marketing strategy with a good KPI. They're like clearly marked as like, this is great. Like if a facilitator did this, then based this particular rule they would totally pass, and they would be allowed to do it based on this rule. And then you also got a whole bunch of bad examples, and then those bad examples you can also add something like a penalty, like a sort of kind of like showcase penalty or something like that to them, right? Where you would say, this is a bad example. If a facilitator did this, they should take a penalty of 50,000, right? Like their facilitator DAO would have to pay a penalty of 50,000. So you get this kind of like negative weight on like how misaligned something is, right? Then maybe there's an example of like somehow in some crazy screwed up way, you get a marketing campaign that somehow pays money to the delegates, right? And then that is like the worst form of misalignment possible, and then it has a penalty of $10 million, right? If someone tries to propose that, it's like a disaster, right? And now you can do sort of another pass, right? Because with this labeled data, the AI is then able to sort of extrapolate from this and be like, oh, okay, now I know, like now it can generate another 500 examples, and then now these will probably be a lot better, and it will be able to kind of attempt to label them in advance, for instance. And you can sort of fine tune it. You can also
an RLHF process, but for generating these particular things that are, designed for this particular use case.
Yeah, it's so funny how it's like RLHF, but it's almost like reverse RLHF, right? Because the important thing is not the LLM. Like the LLM is actually like a tool that can be thrown away and replaced with another tool. Or maybe there's not an LLM at all. It's just a bunch of humans or 500 monkeys with a typewriter or something, right? The actual value is the RLHF data in a sense, right? It's like the examples and the labels, and the AI tools are just a means to get the good data, rather than the good data is a means to get the LLMs, right? But yeah, then basically as you fine tune it, and then there's like multiple dimensions of how you can make it better, right? You can retrain the LLM on the new labeled data sets, and then you can actually use it to kind of optimize like the rules itself. So maybe the rule says you need good KPIs, but what it actually should have said was, like, once you read all the examples, there's a lot of actually we call it fuzzy, like there's fuzzy knowledge in the examples that the humans weren't able to at first articulate. But once an LLM looks through the examples, it can tell, well, obviously they didn't just mean good KPIs. They meant, good KPIs that specifically describe how many users and something, and a timeline and a blah, 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 right? Because there's always this is also this concept of like structured data and fuzzy data, right? There's always like data that's like a hard number and it's easy to get. And then there's something like, one of the examples we often use is like, a basic budget process is one where you pick whoever is the cheapest, right? The supplier that wants the lowest price, you pick that supplier. Like that's sort of if you just use the structured data of price and then you just pick whoever has the lowest price. But what if there's a supply? I mean, what if there's something where the product there's like 3 suppliers? One is asking for 100,000, another is asking for 90,000, and then the third one is asking for $100. Right? Then like a human is like, well, don't pick the one who asking for $100. Like that's nothing's gonna happen, right? But if that may not be like code, you may not have that captured in structured data. But the second you have a human look at that kind of example, they'll be able to kind of like sort of create this fuzzy data, right? Of like, well, don't pick the one with 100, right? That's really stupid. And then once you've got enough of this like fuzzy data, you can kind of like you can have LLMs then like extract, like try to like build new structured data around it, right? And so this actually all goes back to then this thing of like the atlas, the constitution of the system, and how you've got all these like rules building upon each other, and how they all have to be aligned in the end with like the core goal of generate more economic value and generate more public good. Like you could just say like actually the entire thing is just this process endlessly being done on the basic idea of generate economic value and public good, right? So that's just like the ultimate fuzzy data. Like there's like 10 trillion dimensions in that statement, and all you're just trying to do is just like unpack what does it actually mean when like the AI is just trying to understand what does it mean when a human says generate economic value and generate public good, and it just keeps sort of running in circles about that, but it's never able to like get outside of that. So it can't like suddenly do something that like a marketing campaign that does human sacrifice to create some attention or something, right? Like that would just like roll all the way down like, oh no, that's not public good, can't do that, right? And that kind of like relationship between, well, again, like this thing of like self-aligning data, right? That you've got all the different sort of hierarchies of data sort of working together, and kind of and becomes able to sort of integrate new information and new data in a way where it's not just like taking in garbage and then garbage comes out. It's like you can sort of take in garbage and then you can sort of sort it through all these mechanisms that exist inside the data structure already, so that knows how to get rid of the garbage, how to get the good stuff further in, and ultimately obviously the ultimate mechanism for like sorting the data and kind of like doing this kind of stuff, that's the governance process, right? So that's kind of like the holy, I don't call it the secret weapon in this, right? Is that we have a fully functional governance process run by people with tokens who are trying to make that token more valuable. So the rules can always, anytime they're in doubt, the rules will just appeal to, well, let them have a vote on it, right? Because and give the voters a bunch of context, but then likely if you give them good enough context and you have them have a vote on it, then most of the time they'll resolve the right thing, because they'll lose money if they don't do that, right? Okay, last thing I want to say is like a key principle to all of this, right? That makes this like different from something like how an LLM works, a neural network or whatever, right? And rather has LLMs and neural networks be like a small component of this, but there's all these other things playing together, right? And that's this concept called cognitive synergy, right? And so cognitive synergy is this idea of like intelligent systems that actually have a whole bunch of different specializations in them. And the real intelligence arises from knowing which specialized system to pick in a given situation, right? Which is actually how, like, arguably, that's how the human brain works too. I mean, okay, so it's not always a good idea to draw analogies between a human brain and AI and so on, right? But like neural networks, right? They're kind of like, their big problem is they don't have cognitive synergy at all. So that's why they have all these weird quirks about them, where they like, they hallucinate, and they're like, they sort of, they kind of fail randomly and all this stuff, right? Because they're just like one giant bulky thing that's trying to do everything, right? And this kind of system, which is it could be described as like a neural symbolic system, right, where you've got some neural like processes, but you've also just got like a bunch of symbolic like data, like structured data. It like the key thing it's always trying to figure out is like who should make this decision or how should you make this decision, right? So something like, here's a bunch of rules. Did the person who made, here's a bunch of rules, and then you put that together with a facilitator, and then together they make the decision about doing some marketing, whatever, right? And then, like, if that doesn't, whatever, then you get some output of that, and then you want to make sure that that data is integrated through some token holders labeling it or something. So you kind of like, and you'll have other stuff. There's also, there was this early example of like, if a subDAO wants to build some new thing they want to launch, then they have to go to these 3 different auditing companies, or there's 10 different auditing companies, and they have to go to 3 of them, and they have to let them give that input, and then we know it's, then we can sort of put these different things together, and then we'll know it works.
Yeah. Okay, cool. So yeah, it's super fascinating. I feel like it's interesting that, like, just zooming out for a little bit, like, it seems like the approach that you're taking to solve all of the challenges that Maker has encountered so far is to basically just continually invent new further mechanisms. Obviously getting rid of some past mechanisms as well, but it's like a willingness to take on quite a lot of complexity, to the point where there's this system that's like, you said at the beginning when we were chatting that, maybe people just won't really be able to understand it. You have to just build it, and eventually if it works, then people will slowly like learn about the different pieces over time because it's so complex. And I'm finding that, like, even though we've been talking for several hours, like I'm definitely starting to grasp like the overall shape of the governance approach, but definitely not a bunch of the details. And then for the economic mechanisms, again, the overall shape, maybe some more of the details. But it's like, I feel like we'd have to dive in like this for, I don't know, 15 hours or 25 hours or something to get to the point where it's like, okay, I understand all of the mechanisms. I could actually PM the project of like implementing everything to make it real. And so what are your thoughts on like don't you worry that if it's too complicated, like nobody will be able to understand it, and is that itself a problem? Or do you think it's fine? Like it's not necessary for any one actor in the system to really understand the whole, as long as their local area makes sense to them and their incentives push them in the right direction? Like, is it just not necessary for people to get the details?
Yeah, so I think the first thing that's important to point out is it's rather than creating more complexity, it's like it's trading implicit complexity for explicit complexity, right? So it's like it's normally what you do is you just be like, and then we do some marketing and we hire some great people to do it or something, right? And then that works when you can trust people. That works when you got fiduciary duty, or in all these cases, right? You got legal recourse or something. Like in a DAO setting, sooner or later that's gonna break. Like on a long enough timeline, that just doesn't work. So you have to like integrate that entire thing. Like we literally have to know like how to pick between how to make a tender for a marketing project and how to actually analyze and make the correct decision on which of the proposals to pick, with the expectation that all the bureaucrats, all the different parties involved, they're all going to try to steal from us as that happens, right? On a long enough timeline, that's how you have to design a DAO governance process. So and so what's funny is it ends up being very similar to like the concept of AI and AGI even, right? Because what you're kind of doing is you're building a world model, right? You're like building a way to like kind of ingest sort of arbitrary data and make sense of it by holding it to what you already know. Someone recently told me this, right? That what there is actually there's like this is a kind of this is like a generalized thing. It's called a complex adaptive system, right? The thing that makes Maker so complex is that it's sort of past a certain threshold of complexity where it has so many moving parts to it that it's impossible to predict in which ways any of those moving parts could be at risk for some different stuff. Like I mean, there's infinite ways that politics can occur for something like a marketing spend or something like that, right? So you gotta like, you need to use these more like it's all about like these sort of generalized approaches that are gonna work, even though you don't know every single situation where they're gonna work in. So you have to have sort of different levels of generality and so on, right? And then that's where like AI is just perfectly suited for this stuff because it basically allows you to do stuff like, I mean, you can spend 5 years getting really good at marketing, and then with AI that'll actually help you quite a lot of the way at also getting good at hiring like technical work or something, right? Because so much of the stuff is just this like general question of like all the politics and all the ways that explicit rules can be, like there's a whole bunch of implicit stuff that needs to get integrated into the explicit rules before they stop breaking all the time, right? And
I see.
yeah.
So you're basically you're bullish on the direction of like take the implicit complexity that necessarily exists for an organization doing any sort of nuanced work and basically codify it so that it all happens in a structured way so that you can detect any degree of basically like corruption or misalignment along the way so as to totally disincentivize any degree of misaligned or corrupt behavior and only allow like strongly favor and therefore in essence only allow activity or like work in the system that is aligned with the whole is like the basic idea.
Yeah, and the thing is also, I was also talking, I mean, there's a reason why I was talking at Susalu, right? Is I think every single company will be dealing with this over the next couple of years because they'll all be running a whole bunch of like AI agents to run their processes. And they'll be constantly grappling with this problem of like, they'll spin out of control unless we, keep them on the rails, basically. So it's sort of the same. I mean, and so the difference is just for Maker, that's all going to happen in public, whereas all the big companies, they'll all be doing this internally, right? They'll sit with their own little internal world model and their own thing of like the AI agents causing trouble, right? And like even the humans, I mean, that's the other thing is that corporations are super ineffective because this happens all. I mean, it's just that there's a lot of, I mean, the world has a lot of resources and a lot of value, so there's just a lot of budget for waste and corruption, and that's how the world system works. And the AI will kind of like, well, it'll get rid of a lot of that, but then it will also include its own layer of the problematic AI is going to be the new issue instead of just the humans.
Yep. Okay. So let's look at the future, like the far future with respect to AI. Like, what do you think about the risk of misaligned superintelligence and what do you think we should do about that? And does this plan relate to that at all, or is that just like that's a separate thing? We should solve that some other way. It's unrelated to like how we run our DAOs or how we run our corporations in the age of semi-general but not super intelligent AI.
Yeah, I mean, so I think it's like totally, I think it's completely like related. But I also think it's like, I mean, I disagree with what I would call the totally like sort of theoretical idea of, of like, I mean, the IoT fridge that suddenly explodes in a black hole of nanotechnology, right? Like, it's. I mean, I think something like Nazi Germany is an example of like this kind of stuff happening and being spinning out of control and sort of, I mean, still, I mean, not being like, it wasn't really a risk in hindsight that they would like take over the world and dominate everything, right? But it was this sort of, it was the same sort of idea of like a kind of a fast takeoff somehow, right? Of like something that sort of suddenly expands wildly, and the more it expands, the more powerful it gets, right? And yeah, like I mean, so I think it's all like related, and it's actually not the AI that's a problem. It's like the centralization and sort of the asymmetry that's a problem, right? And that's also why I'm super freaked out by like OpenAI and the giant AI corporations sort of stoking the flames of AI risk, and as a result, we got to keep it secret, and we got to band together, and we got to band together with the governments and so on, because that's like the way. I mean, the way I view AI risk is it's gonna be a tool for bad people to attempt to obtain sort of escape velocity level power, right? And then the solution to that is, I guess, I mean, just like with Nazi Germany, right? Is you gotta have the rest of the world be ready to deal with this like super intelligence, right? You gotta have balance of power. Like, and it works like that at all levels, right? So that's exactly how it works inside makers. Like you could think of the whole thing of like the alignment artifacts and all of that is to sort of try to protect against, like, it's viewing the different actors inside the system as like potential rogue AIs that'll go super intelligent, or I mean, it doesn't even have to be super intelligent. It could just be like super powerful, because once you get enough power, you can use that to gain more power, right? There was this example of like one of the most scary things in Endgame is somebody who breaks a rule deliberately, right? Because once you can demonstrate the ability to break a rule, then you could probably break any rule. So you can break the rule that prevents you from, like both being a delegate and also being a facilitator or something like that. And then once that rule is broken, then you've got someone who's just like out of control powerful. They'll take full control of the whole system, right? What I think is like the solution to sort of real life existential risk of superintelligence is there has to be enough open source AI that you don't have this like, I mean, this sort of massive asymmetry between what OpenAI and the governments and Anthropic and wherever they get in their total little Manhattan project for superintelligence. Like once something like that is, applied to humans and it's like, oh, it's time to, I don't know, make sure all humans are ethically sound and morally wired correctly or something, then all the humans out there, they gotta have their own AI to sort of resist something like that, right? And if they have that, then in practice you can't have a bunch of companies and a bunch of governments. They won't be able to fight like the entire world's, economic potential with high quality open source AI applied to it. And you could sort of think of it the same way. That's also how we would sort of like internally in Maker. That's how we think of like, it shouldn't just be the delegates sitting with all the tools and all the knowledge of how the system works. And then you've got the people in the periphery. They've got no clue what's going on. I mean, if they're told, oh, this is a great deal, we should totally put money here. If they've got no way to verify that, they're just going to accept it and basically just roll over, right? But if they sit there with open source AI and their own tools and their own sort of, I mean, basically if they're powered by AI as well, then even if the people in the core of the system, the insiders, they have more powerful AI, it'll still not, I mean, there's a big difference between no AI versus any level of power of AI, and then super powerful AI versus less powerful AI. Like it's still, once you're in that paradigm of using, sort of extending yourself with AI tools, then it's a totally different world, because then you'll be able to just like upgrade to whatever the latest cutting edge open source stuff is, because your processes and your data already supports using AI.
So you think,
And that's also, like, I think, Oh, sorry. Go ahead. Go ahead.
So basically, you think that like the nanotech black hole scenario is either impossible in principle or like very, very far off. And the thing to be worried about is really just any particular group of humans establishing, some sort of dictatorship in the world by getting too far ahead in their AI technology development. Is that right?
Yeah, I mean, I would think though that once you get the AI dictatorship, then soon after you do get the nanotech black hole, probably.
Um,
But I don't think you get the nanotech. Like, I don't think you can be in a condition where you get a nanotech black hole without having already, like, before you get to that. Once you've failed that badly and you have a condition where that can occur, then you're already in some kind of dictatorship. Like, you're not gonna have some kind of multipolar, well balanced ecosystem, and then actually have like a nanotech black hole risk. I think.
how come? It seems like if you have the multipolar scenario, but everybody does have enough resources that they could choose to create super intelligent AI that would lead that direction, then the odds of it would just go up over time as computation is cheaper and so on and so forth.
Yeah, but it's like it's not about choosing to. This is also about like the basic of DAO. DAO 101 is there's no such thing as choosing to build super intelligent AI. If you can build it, you just build it. Like, you're not gonna have a bunch of people, being practicing abstinence and not building a super intelligent AI. It's just not gonna happen. Like, you're gonna have every single one. They're all gonna do it all at the same time, and then they're gonna have this like implicit, like obvious Nash equilibrium where if one of them starts to try to, I don't know, attack someone else and kill them and steal all their GPUs or something, then everybody else is gonna go together and shut them down, because then they can take the GPUs and split them amongst themselves, or something like that, right? So like it's just like the thing that prevents a super intelligent AI from just like consuming and sort of going to war with everyone else is the fact that it will lose, because everyone else will be like, no, we don't want some war and crazy nanotech war, right? We just want to chill and make money, probably, right? Because we're making good money with whatever we're doing now. So that's kind of the key to it. Like, you can't hold back. Like, it's like unnatural, and it is not gonna happen that like people will hold back. And anytime someone sort of appeals to that, then I don't know. Either they're just, well, I just think it's like it's obviously unnatural to me, and it makes me think of like communism and like, and I couldn't think of anything worse than like a communist approach to, oh, this is, we got some crazy dangerous technology, let's use the principles of communism to to deal with it, right? Like, it, I mean, or rather, it seems so obvious that you're gonna end up with the opposite of what you want, right? You're gonna end up with then like the great guardians of abstinence, who are the chosen ones, who are the allowed to do super intelligent AIs. Once they decide that they've turns out they've decided that it's best for everyone if they become gods, right? And no one else has yeah. So
Right.
yeah, for me that logic is like infallible. Like, I cannot possibly like, and sure there is like, I mean there is this, and I've seen people describe this as like, it could just be like there's a tragic joke built into the physical reality that at a certain level of computation you just do some this like, you just leapfrog everything else. So you just got a bunch of like IoT fridges spinning, and then some, like one of them literally just like becomes infinitely more powerful than everything else on the planet, right? From one day to another, by sort of the roll of the dice randomly. But it's like there's no way to prove that's the case, or like predict to what extent that's possible.
Right.
And like all the measures that tries to prevent that scenario, deal with that scenario, they all like lead towards this dictatorship scenario. And when you just think of it like in risk reward terms, or sort of risk and sort of impact times likelihood, right? It's completely insane to drive us in the direction of dictatorship to prevent some like made up, probably impossible theoretical issue that would occur because of some like impossible to predict physical aberration.
I mean, I agree about.
So it's like, yeah, I mean, look, it's just obvious. Risk management is about diversification. Like, there's just it just that principle just holds ultimately, I think.
Okay, well, it's a very interesting view. I find it interesting because it's so different from most of the views I've heard articulated among people who are concerned about AI risk. It seems to me like you know, if I were to poke further there, it's like the I basically agree that there's no, if you have sort of the AI dictator, there's no reason necessarily to expect that they're not going to do terrible things. And so that doesn't sound like an appealing scenario to me. At the same time, it seems like the outcome that you're driving for um, basically assumes that you can get many, 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 many different AI agents, like all increasing capacity at basically the same rate all over the place, and then they hold each other in check, and they also act in a way that's aligned in like the sense that the AI people talk about alignment with what humans themselves want. So it's like either they're not autonomous systems, they're just tools, and they're carrying out the will of the humans that are controlling them, or they are autonomous systems, but they're collectively, they're sort of each fighting for protecting their humans or collectively humans overall. And this seems like so that itself seems like challenging, and I don't see yet how we would do that. And then there's also the challenge of like I agree that like some random IoT fridge isn't gonna, magically self-improve, but it seems very difficult to prevent the scenario where you have hundreds or thousands of different companies and organizations, research groups, etc., working on improving AI. And then the question is like, could you have some sort of recursive self-improving or just self-improving, like iterative self-improving feedback cycle that occurs? Maybe it's occurring in many of the instances, maybe just one, sort of figures out the way to do that first or whatever, where like the question is like, why would we be confident that some would not be able to get out ahead of others? Even if we don't have like a secret, one chosen secret project, people will do these things in private. Like, so, they'll release some of their stuff, they'll publish some papers and so on, but there'll be some things happening in private. Certainly, if people think that they're onto a path where they're going to be able to create something 10 times or 100 times as powerful as anything that exists so far, they might choose to do that in private. And so I don't really see how having the open source ecosystem, where we're trying to have everything develop at the same rate, it still seems to me like pretty likely that you would get a huge differential if it's possible to basically use your AI systems to do more exploration of how to design AI and so on, and if you get like an acceleration of progress. Maybe there's some reason structurally to expect that there wouldn't be an acceleration of progress, like for some reason the AI systems themselves are just not tailored to further tinkering or like inventing new paradigms or whatever that could lead to better sort of child AI systems. But it just seems like intuitively, the more effective a system is, as long as those capacities are applicable, you could get this like continual self-improving cycle. And if you get that, I just don't see how you prevent like the differentials in capacity.
Well, I think they're already. Everything is already sort of a self-improving system, right? Like companies are self-improving, and right, and it's like, and
but like very slowly and very imperfectly.
Yeah, and you can do it faster, and you can obviously like that rate of improvement accelerates, right? But what I don't, or rather, the thing that's going to determine whether it's possible for one entity to sort of out improve everyone else, right, and reach this sort of state of physical dominance is, it's going to be the level of diversification, right? So like the more you have a single entity that is already like, a single group that is like further ahead than everyone else, the more likely they are to actually be able to like defeat everyone else, right? Because in the end, that's kind of that is obviously like a part of it is that like self-improving AI is just like dangerous because it can like it can be like once you get nanotechnology, it's like a weapon, right? So you have to like monitor for dangerous weapons, and you have to build your own sort of. So AI has to sort of. One of the things it always needs to be able to do is detect other AI, right? And so so it needs to be some kind of equilibrium where if you get some crazy Manhattan project where people try to build some crazy super dangerous thing and they don't share it with everyone else, and they like deliberately try to get ahead to build a super weapon that can let them enslave everyone else, then everyone else has to go and fight back basically, because just the sort of act of doing that is itself a sort of an attack, right?
Mm-hmm.
And I think this is again like comparable to like a DAO, where if you got someone who like breaks a rule deliberately to try to set the precedent, they can break the rules so that they can start breaking more important rules in the system. Then you have to already like penalize them when they sort of break the first rule, right?
Right.
And sure, like I don't know what to do about someone in secret. Like like can you actually like detect AI remotely? I have no idea if that's possible, right? Like, so there probably will. There probably are, right? Like a bunch of governments already now building military AI in secret, right? And so the only answer to that is once that thing comes out and wants to fight, then everyone else gotta have even more. Doesn't have to be the same level of powerful AI. It's just gotta be that everyone else has AI that, for instance, allows them all to coordinate and be like, we all need to, channel our computing power together to collaborate to like smack down this, nanotech blob that's trying to explode and eat up all our resources, right?
Yeah. Yeah.
It's really kind of like, and then what's great is this natural thing that like open source trumps closed source, right? That you're just always gonna have like a stronger, or rather, it's like a very significant hurdle to overcome to try to take on the entire world at once, right? And that's also why I think, like in practice, like all this super intelligent AI, like it's just not gonna do that. What they want to do is they're gonna want to they're gonna be like, what's the easiest Nash equilibrium? What's the simplest rules to follow? And then just like follow those rules and just have a good time, and don't like mess around and try. Like it doesn't make sense that someone intelligent wants to dominate anything, right? What they want to do is they want to prevent themselves from getting dominated, right? So as a result, they naturally want some kind of equilibrium that they want to be able to shut down someone else who's like rogue and out of control. So as a result, they're happy to take on any kind of norms and rules and so on that would allow others to shut them down if they spin out of control, right? And I think one of the good things in that is that this quickly kind of, because it's all about this sort of lazy, easy Nash equilibrium, right? Whatever sort of the simplest way to ensure your own survival. I think that makes it really obvious that humans will be completely safe and sort of there's not going to be some risk that like they will randomly exterminate, like they'll maximize paperclips and exterminate AI, because it's like the paperclip maximizer will think something like, well, there's other AI and I don't want them to mess with me because I want to make paperclips. So like I'm not gonna turn the humans into paperclips, because if I do that, the others are gonna. That's gonna send, that's gonna send a signal to all the other AI that I might be dangerous to them, and they're gonna come after me and shut me down. In the same way that like humans, you don't like to mess with kids that torture animals or torture bugs or something, right? Because that means they're probably like a psychopath, right?
Yeah.
Um,
Yeah, but it seems like the key principle
so
there is
even the paperclip maximizer sort of naturally molds itself in the direction of like sort of like fitting into some kind of ecosystem, right?
Yeah, where like it seems like the key principle there is if where the key assumption there is like if there's no AI system that has an enormously outsized amount of power, then then basically any agent, in that circumstance will have the incentive to cooperate because, everybody else combined is so much more powerful than them. And so, it's like the scary thing is like a scenario where you have any agent that just has such an outsized amount of power that it's like, well, I can just violate all of your rules and all of your norms and just completely control you. I could totally destroy you if I wanted to. So like, I'll just disregard, your preferences entirely. Yeah. Okay.
Yeah.
So I'm gonna have to jump pretty soon here. But let's do two more things.
Yeah, me too.
Yeah. Thanks for sticking with me. So let's do two more things. Let's do you talked a little bit at the Zuzulu event about how this if Maker goes the direction of your endgame proposal, how that itself might relate to or maybe it doesn't relate. Maybe I misheard you. Like how it relates to dealing with these longer term AI broad scale issues in terms of how it might align various actors to treat each other in the world, or how to prevent AI projects from amassing huge amounts of compute based on certain systems or whatever. If you have anything you want to say there, I'd be curious about that. Related to that is like, you had been advocating for something that was climate related. I actually am not familiar with the details, but someone watching this might be curious to know why the switch in emphasis in terms of like what the outward impact is intended to be. And then let's do that last step we talked about at the beginning of like trying to summarize. I think it makes sense for like maybe I'll try to summarize all at once in a few minutes, and then you'll try to summarize all at once in a few minutes. We'll just see like what material we can get on a summary level and see if that's useful.
Yeah. Yeah, so about AI, this sort of the purpose, we call it sort of the purpose system, this thing about the funding of AI, and it also, which ties all the way back to clean money, which was this environmentalist initiative, right? So, actually, it's like, so the current iteration of Endgame is actually just the clean money proposal, just heavily iterated over and over again, sort of, but from the same basic first principle, right? Which is that, like it's basically like so it comes back to, remember, like this sort of the data structure that is just continuously improving itself, right? And it's just like integrating new data, and it's using that to make itself stronger, right? And at the absolute core of that, there's some kind of fundamental principle that sort of guides the whole thing, right? And that aligns the whole thing. And for Maker, that is something like generate economic value and public good. And so the first sort of this clean money proposal was the realization that it cannot just be generate economic value. It has to also be generate public good. If you just make the core purpose generate economic value and nothing else, then it actually like doesn't work. Like then it actually just falls apart in the sense that you just have a system where everyone's just, because literally everyone at all times, all they see is this, you are interacting with this system to generate economic value, then they'll just always defect. Like, there's like no reason to not just always literally pick whatever option gives you the most money out of the system. So then you do end up with like a mechanism where you can just get something like a giant bribery scheme or something, right? Where like if someone's bribing someone else and you realize they're bribing them, rationally what you should do is you should ask for like whatever bribe you can, like you should ask for a part of the bribe to not tell on them. And you would only actually expose the bribing scheme if you could get a bigger bounty for not doing it, right? But who's gonna like set up the bounty system and so on? No one's gonna bother with that if they're just trying to make money out of it. Like, how do you get paid to set up a bounty mechanism in the first place, right? Like, it's just it sort of falls apart. Like, a DAO only works in the end if there are some of these things that were what I call semi-altruists, like that actually are like, sort of the people that are trying to make a project something for the greater good or for the world or for whatever, right? And this is actually, I mean, I think this thing, that's actually what alignment is, right? So it's kind of funny that like when people say AI should be aligned with human values, I actually don't think that's the case, because I don't think human values are kind of like they're all over the place and they're like selfish, and it's actually something more universal than that, which we call universal alignment. Like it's some kind of like fundamental connectivity of the universe and nature and everything, right? And anyway, so clean money was this attempt for me to be like, oh, we just need to like put in this core piece of data of like, we initialize the system and the DAO with this idea that, look, you can't just be in it for the money. You got to realize, look, everything's connected, and if you don't act as if everything's connected when you interact with a DAO, then it just falls apart, because like a DAO is connected, and if you tell everyone it's just about your individual profit, then it sort of falls apart, right? And then I actually thought originally, oh, that's all you need. Just tell people environmentalism, clean money, right? There's a greater purpose. Then they'll like self-organize, and they'll like on their own figure out how to like organize all the data to like kick out the bad people and only have the good people run it and only make the good decisions, right? And then it turns out it's like completely wrong. There's like totally useless, pointless. In fact, it was like worse than wrong, because it became itself like an excuse for like all sorts of bad stuff, right? So I realized, okay, you have to systematically like kind of, like you have to have that core piece of data, that core vision, but you also got to build out all of the layers and layers and layers on top of that with all the processes, right? And all the ways of like, what does it mean to do public good? What does it mean to create economic value? And then sort of tying the two together. And yeah, then I mean, in that process, as we did all that, then well, first, one of the things I actually found out was that like the whole climate change thing and the whole sort of climate action and so on, like a huge amount of that is itself like corrupt and a scam, which is so absolutely shocking to me to find that out. Like after like, and it took me a long time to find out, because it's such a giant thing, like giant machinery that it's like really well funded, and it's really vested, and it's sort of everywhere, and there's like strong propaganda and so on, right? And for me, it was like well, I think this is sort of the net. Like, I really think the sort of the core kind of example of the problem is like anti-nuclear kind of bias, right? That nuclear is sort of the real, like that's the actual solution, and it's sort of been sitting around for 50 years. And you have like an example of like France that, I mean, didn't solve the climate problem, but they were well on their way to like completely solving greenhouse gas pollution entirely for like profit reasons. Like they were just trying to make a profit, or well, I guess they were reacting to the oil shock or something of the 70s, right? But they weren't even attempting to do environmentalism. They were just like doing their thing with nuclear, and it had this massive impact. And then you have like the modern climate change industry being like all about like climate this, climate that, but it doesn't work. Like it doesn't have an effect, and like coal use is going up and it's predicted to go up, and yeah, so that made me sort of realize that actually it looks sort of like, that it's like, it's not just like, well, it could be throwing money at nuclear or something like that, but clearly actually the problem is more deeply that it's like society just has this, I mean, climate change just isn't it's not the fundamental problem. The fundamental problem is like intelligence and coordination or something like that, right? And so and it's kind of like, you can't just like fix the climate and then everything's gonna be fine, like by building a bunch of nuclear power plants or something, or rather it's like, that's not the right, it's just not the right thing for a DAO basically to be anchored to that, because it's too specific. And then then as we went down, so what we then did was we pivoted towards a more general, what we call the purpose system, where the idea was that you'd have the governance process develop its own mechanisms for figuring out like where can we have the most impact. Climate obviously being one of them, and especially nuclear, and sort of nuclear advocate. I mean, specifically I sort of identified this very obscure thing of like supporting people to go and advocate for nuclear, like for repealing terrible anti-nuclear laws in where they exist, right, and trying to stop shutdown of nuclear power plants and that kind of stuff. Like the bang for the buck for something like that compared to like endlessly building solar farms or something is just unbelievable, right?
Yeah.
And finding these opportunities, that should be the key, right? That's a better thing than trying to something. I mean, what was kind of originally it was some kind of like political top-down thing of we should channel money into solar panels and windmills, which is probably would have been terrible for the climate, probably, if Maker ended up doing that, right? So it was like the mechanism itself needed some kind of adaptivity and intelligence in it, so it could react and could sort of integrate information and not do something that was bad if it got data that showed it was bad, right? And then it just naturally the next step to take that is to then just be like, well, why don't we like focus on the fundamental problem of like the actual adaptivity of the system, right? So as we sort of started to kind of pivot the whole system was sort of, like we realized we could apply AI everywhere in this governance system, and it would be like a big deal, and we were going to spend a lot of money on that. Why not like repurpose all this money that was earmarked for charity and sort of public good to sort of specifically make sure that a lot of that goes into public good AI, basically like open source AI that has all these like these positive benefits, right? And then also still, of course, maintain this like public good of ensuring that like we don't just fund open source AI, but we also fund implementations and applications on top of that specifically helps some kind of public good purpose, to kind of make sure it's sort of in your face that like there's a real public good purpose with the system. So we try to attract and sort of, I mean, almost like we're trying to create the vibe, right? That it's not just about money, it's about also public good, right?
Yeah.
And then the final thing, what's so funny is, as I then went and talked to, I mean, the people in Maker in particular who were really like into it because of the public good aspect, right? And this like opportunity to sort of drive a financial system with based around like a sort of genuine interest in charity in a way that actually has an impact, right? And not just for greenwashing or whatever, but for actual like aligned sort of desire to have a good impact, right? Then when they heard about this idea, they were like, wow, this is even better than like giving up money to charity. Like, because the thing is, the charities and whatever, all these public good impact stuff and all these projects around the world, so they don't actually need money. They got tons of money. The problem is all that money goes away because of whatever corruption and stupidity and bad management and politics, and so it is really the biggest impact thing you could possibly do is to try to not allocate more money to all the places in the world where you could allocate more money. It's like you shouldn't be giving money, you should be giving knowledge, right? And it's so obvious because it reduces, it's like teach a man to fish or whatever, right? Like it's that basic idea, right? That this is of course the most powerful way to like have a lasting positive impact by a DAO, so that it can sort of credibly attract these aligned actors into the system that have this sort of alignment that ensures that they sort of, they'll have a vested interest in keeping the system internally aligned because they have this evidence and guarantee that the system itself is externally aligned, right? So you get to sort of like, in a sense, extract alignment out of the environment or something into yourself, and because you can then give it back later. I don't know if that makes sense, right? But we're actually seeing that right, that like for a lot of people, this is just like when you've got a vision, when you've got some kind of reason, then yeah, you'll go and fight with the politics and deal with the bad bureaucrats because you've got, you're doing it because they're ruining something that you don't want them to ruin. Like it's personal almost, right? And if it's just about money, right? If you look some giant corporation and someone is like exploiting the system through politics, nobody's gonna like stand up to that, right? Because like it breaks the system fundamentally, because you'd have to like pay them more, and like it just, but who's gonna figure out that you need to pay someone to deal with some politics? Like it just, yeah, it only works if you've got that drive. Yeah.
Yeah.
So
Yeah.
so that's how that all ended up. That's how we ended up with Endgame and open source AI charity and funding instead of climate change. But somehow it's related in the end, right? Because it will be there will be AI that supports clean tech startups and nuclear power plant software, I guess, or nuclear advocates that are trying to combat disinformation. And probably that'll have a bigger effect than, well, for sure it'll have a bigger effect than dumping millions of dollars into solar panels and wind turbines.
Yep. Yep. Um, what an adventure. You can sort of meet my dad, except he can't hear you because he's in headphones. So, um, so, okay. So let's take a quick pass at summarizing, and then we can wrap up. So, um, actually, I would like just like a minute or two to think and like draw some categories in my head, and then I'll try to state a summary.
Yeah. So do you want me to do my summary first?
Let's just chill. I won't be able to think if you're speaking, so give me a
Oh yeah,
second to
okay.
think.
Yeah.
Okay. I will now attempt to summarize. Um, okay, so here's Nevin's summary of Rune's overall endgame proposal. I'm going to talk about 5 different pieces: the economic system, the governance system, in as much as those are sort of different, the farming system or farming approach, the use of AI within the system, and then the necessity of pursuing a combo of economic value and public good. So, in what order should we go in? So, let's actually kind of go backwards there. So, on a very high level, a principle that's behind this proposal is that um, for the system to work, for this complicated DAO to work, it's actually really important to have people who care about some purpose. Not everybody in the system has to care about the purpose, but if you have some people in the system that care about a purpose above and beyond making money, that's like a really useful motivational profile that will cause those people to be maybe to sort of add some alignment fluid to the system where you can end up getting things done. People be willing to work harder and do certain kinds of things that are necessary, where if you just have a bunch of mercenary actors, it's much more likely to fall apart. So the system is designed in a sort of constitutional way, although there's a benefit to not using reusing terms. I'll use a bunch of metaphors in this explanation, but they're metaphors, they're imperfect. So, but there's a constitutional idea of the system optimizing for a combination of economic value and public good. I still don't quite fully understand exactly how the public good gets expressed, but one important component that you just mentioned, Rune, is like not just trying to fund things in order to achieve public good, but to actually like produce knowledge, like governance systems and coordination technology and so on, and sort of export that because that's maybe a more fundamental bottleneck in us trying to solve problems as humanity than just throwing funding at things. In terms of the use of AI within the system, on a high level, a big challenge, so there's like the fundamental problem of corruption, of people deciding, okay, there's this system, it has a bunch of resources, I would like more of the resources for myself or my friends or my cousins or whatever. And so I'm going to try to take advantage of the system and somehow, pursue my own ends instead of pursuing the ends of what the system is nominally designed to do. AI is possibly useful for combating that in a number of ways, where you can basically, because there's going to be an enormous amount of emergent implicit complexity in any big system like this, if it's possible to render as much of that, a ton of that explicit, maybe not all of it, you never render it all explicit, but like tons of that explicit, then you can sort of keep track of what's going on and more intentionally decide to try to exclude the corrupt actions and coalitions and whatever. And in a high level sense, like I feel like a starting design principle here is like maybe AI is something that can be used, maybe LLMs in particular, and maybe like further advances in like neural nets and so on in the next several years can be used to more effectively render a bunch of this stuff explicit than would be possible with humans. Basically, you might be able to use AI to generate lots of rules to basically generalize from particular circumstances. You might also be able to use AI to keep track of a bunch of actions that are happening and detect sort of anomalies or corruption in the system. You also might be able to use AI to ingest tons of data about the system in order to make it accessible to people who are at the edges of the system that by default there'd be an information asymmetry and they couldn't access that information. So you might use AI to design the system, to cause the information within it to be more structured, then also to parse it and deliver it to people and allow people to ask questions about it and get the relevant information that they might want. And so obviously, these models don't run on the blockchain. That's all infrastructure that exists in the sort of tissue of the DAO, of the people and their systems and all that stuff that runs off chain. But if you have like a set of rules that like are ultimately falling back on, token voting and things like that exist on chain, you can integrate all the different infrastructure and perhaps make basically like a slightly, maybe significantly new type of bureaucracy. In terms of, so now let's kind of pop to the governance system, which is like sort of the application of this, where on a high summary level, what to say about it? Like basically, I would say that compared to the iterations of governance so far in Maker, as I understand it, this is like a further step toward dividing power, dividing roles, making it so that there's checks and balances in the system, and also trying to set it up so that actors have skin in the game. Like for instance, funds that are posted as collateral, essentially as some sort of insurance-like mechanism where if a certain, facilitator actor takes an action that's a problem, then those funds can be docked. So actually, Rune, like, why don't you jump in for like a couple minutes on a summary level, like highest level principles? What would you say is like the most important about like this governance approach versus the last one?
Yeah, this is about, I mean, just like what you were talking about earlier, is that there's a lot more explicit designations of who, like, what exactly are the roles and responsibilities and the actions available, and what exactly happens if you don't follow those as you should, and how, what does it mean to follow them as you should, basically, right?
Yeah.
And then there's like escalation mechanisms as well, right? How do you deal with if it breaks in one place? Then how do you escalate to the next level? And then ultimately sort of escalate all the way to token holders voting on it, and then hopefully the token holders themselves, based ultimately on this sort of purpose, right? That you have this fundamental thing of like you hopefully have people who are in it not just to extract value out of the system, but also just to keep the system running and keeping it from
Yeah.
achieving its purpose. Then you'll have this sort of token holders actually voting positively to resolve things in a way that is universally aligned, that is like how it should be, quote unquote, if you were, I don't know, if someone would say based on human values or something like that.
Yep. Okay.
And actually even further, so you can even escalate beyond that. You can even do like a shutdown of the system, sort of minority protection. And yeah, we didn't even get to that part, and that's like its own crazy part, because that's talking about the blockchain and so on. So I think we'll leave it at
Okay.
escalation and many, many levels of escalation.
Okay. And then another key aspect of the different lens, a different approach to governance here is breaking things into subDAOs. So basically trying to have Maker Core be as simple and codified as possible in a certain way, and then having many different subDAOs, starting, I think you said, with 6, that basically take on a bunch of the work in the system of decision making, and trying to basically have a system where each subDAO is kind of out on its own, making its own decisions, and doing so for the sake of generating profit for itself. And basically, it's more like economic competition. SubDAOs might go completely out of business if they make bad decisions. There's sort of like an ongoing evolutionary process with which subDAOs can gain ground and be more powerful if they're economically productive for the system. And so the idea is that pushes more decision making out of like the central decision process to these individual like businesses effectively that end up making those decisions. One interesting metaphor here is to sort of think of Maker Core as similar to a central bank, and then these different subDAOs in the system as being kind of like commercial banks. And in fact, some of the mechanisms do directly map onto that. So let's talk about the sort of economic mechanisms, and then we'll talk about the sort of farming system, which is diagrammed up here. So the basic thing that I understand from what you're saying is that Maker Core is basically has the ultimate authority to issue money, to basically print the new stable tokens, it delegates that power to any subDAOs that it approves, or at least allocator subDAOs, where the allocator subDAOs end up being allowed to generate and borrow as many new stable tokens as they want. Sort of how commercial banks can create bank balances and offer them to their users. But similar to like a central banking, commercial banking setup, the banking license is issued to, might be issued to a commercial bank by the Federal Reserve or another banking regulator, in the US at least, and that can be taken away. And then it's also the case that, the bank can be penalized in certain ways, or it could be taken over. And there's sort of, bank examinations happening. There's a similar thing happening here where the allocator subDAO, they've gotten this permission, the permission can be taken away. In particular, there are a few levers that you mentioned that MakerCore has that I found really interesting. So one is MakerCore so each allocator subDAO has its own subDAO token, sort of similar to banks having their own shares. But unlike my understanding, at least, of like central banks and commercial banking, it's not the case that the central bank can just choose to like print more shares of that commercial bank and sell them on the market in order to raise capital. But in this case, MakerCore can. So it has the authority to issue each subDAO token if it wants to. And so if an allocator subDAO is operating in a way that's putting the system at risk, MakerCore can choose to basically dilute its token holders by printing and selling those subDAO tokens. So that's one lever that it has. Another lever that it has is basically to seize any of the capital that the allocator subDAO is holding and effectively liquidate it. And then we didn't talk about this, but I presume it has the ability to just like cut off that subDAO's ability to issue a new stable token and be a subDAO in the system, to like shut it down in some way. So those are some controls that MakerCore has over an allocator subDAO. It's also the case that certain like high importance actions that a allocator subDAO might take, it can't fully autonomously take them. And I liken this to people who have spent time in the banking world will talk about how as a bank, you can't sit down without permission. Like you sort of have to have permission from your regulator for everything you do, at least everything of major consequence. And there's a similar design pattern here, it seems like, where the allocator subDAOs for major actions that they're taking will, on like a regular basis, maybe like a monthly basis, will propose those actions, and then the MakerCore system has to like review those actions and decide like, yes, stamp of approval, those things can happen, or like, no, that would be adding too much risk to the system, it wouldn't happen. So the MakerCore area doesn't completely delegate just a bunch of important decisions to the allocators, it actually reviews them. But then they might, move capital into certain pools with those major decisions where they can then do more autonomous things with them or something like that. Now let's look at the fundamental thing that like an allocator subDAO is doing. Basically, it can create new stable tokens basically by borrowing them from MakerCore, and it's borrowing because it has to pay an interest rate. I forget what you called this interest rate. It's like the standard rate or something, or the base rate.
Base rate.
Base rate. And so MakerCore sets the base rate. In this example, in this diagram, let's say it's 4.5%. And so any capital that or any new stables that the allocator subDAO is borrowing from MakerCore, it's paying that 4.5%. So if it can basically borrow it at one interest rate and then trade that capital for other assets that are earning a higher interest rate, it will be incentivized to do that. And that's what allocator subDAOs are expected to do. And then the MakerCore system would also set the DAI savings rate or the new stable savings rate that it pays to users as like some amount less than the base rate, which makes sense. It's like incentivizing users to hold that new stable token, and then paying a greater rate to the allocators who are managing the capital. One key thing that took me a while in the conversation to understand, but I think is really important, is that the allocator subDAOs, they're kind of like users of the current Maker system, except that they're basically, it's not like they have a bunch of individual CDP positions that are all like against different collateral. They just have one like omnibus position, or like one, big group position where they have just like a single balance of new stables that they've borrowed, and then they have all of their capital there to collateralize that. And so if like one collateral asset devalues, as long as they have enough value with like all the other assets that they have on their balance sheet, then that might be fine. And it's also not the case that there are like oracles watching the value of all those assets and automatically triggering liquidations like we tend to be used to in DeFi. Instead, it's the job of MakerCore governance to monitor the allocator subDAOs and see if their overall position is too risky, in which case, choosing to mint those subDAO tokens and sell them in order to add collateral to the system, or choosing to actually liquidate them, that's something that's a governance decision. And it might be a governance decision that happens pretty quickly in some cases, but it's not something that's automatic and Oracle-based. So then basically the allocator subDAOs, it's their, what they want to do is basically convince Maker Core, like, look, we have all these assets, they're worth plenty, so you shouldn't dilute our token, you shouldn't liquidate our collateral, allow us to keep this loan position, and as long as they can do that, they can continue to earn whatever the spread is between what they're paying in that base rate and the rate that they're getting on their capital, however they've allocated that. So they might allocate that to tokenized treasuries, or like, tokenized money market fund, or in this example, maybe Uniswap position that's earning like a good return, or what have you. It's also the job of allocator subDAOs to have front ends to allow users to actually interact with the system. So rather than a single unified front end, allocator subDAOs, kind of like in the way that commercial banks all have their own websites and apps and so on, you could sort of think of that as a little bit similar, where allocator subDAOs try to attract users and make a good user experience, and they get a reward in some way from Maker Core, depending on how many users they're bringing to the system and how well that's going. We didn't talk about the details of attribution and exactly how that reward works, but it doesn't really matter. In some way, they're incentivized to bring more users to the system, because everybody collectively wants there to be more demand for new stable. Like, however much demand there is for new stable, that just creates an opportunity for the allocator subDAOs to, issue more of it, and basically earn that spread, and then Maker Core is always earning the base rate. One thing that Rune said that it was pretty interesting is that, like, Maker Core wants to earn less than the allocator subDAOs because it wants its governance decisions to be simple and sort of like chunky or something, whereas the allocator subDAOs are going out and researching all sorts of little opportunities and like allocating the capital in a more detailed way. So Maker Core is all about scale. It's like, let's earn less, but do like an enormous scale and make sure that it's super safe. And then the allocator subDAOs are like managing smaller pools of capital and trying to earn a higher rate on that. And then let me think if there's one more economic mechanism worth touching on. I think there is one more that's important. Oh yeah, so let's talk a little bit about how new stable is intended to stay at the peg, which I assume we never talked about the denomination of all this, or whether it would ever be something other than the dollar. Is your intention for it to be anything different from the US dollar at some point, or?
I mean, the system can support that, but it would only happen if it was sort of necessary, right? So hopefully not.
So let's just say US dollars. Yeah. So basically, the basic mechanism that new stable uses in order to stay pegged to the dollar is similar to, for people who are familiar with like early Maker design, the idea of the target rate feedback mechanism. But basically, the way that it works is that if the new stable is, let's start with if it's trading above the peg price. So let's use like big numbers to make it easy to think about. Let's say it's trading at like $1.01. Then in that case, let me think about this. So Maker Core wants there to be more new stables issued. So it's going to lower the base rate. And if it lowers the base rate to the point where the base rate diverges from like a risk-free rate that's available out in the economy, let's say that treasuries are at 5%, and it lowers the base rate to, say, 4%, that's going to encourage allocator subDAOs to borrow at 4%, and then basically go buy those assets that they're yielding 5%. That's going to add new stables into circulation. When those new stables are added into circulation, the allocator subDAOs are going to be like selling them into the market for those other assets. That will bring the price of new stable down. And Now let's look at, let's say that brings the price of new stable down, but now it's trading at 99 cents. How does the system respond to that? Well, just in the opposite direction. So if Maker Core raises the base rate to say 6%, all of a sudden the allocator subDAOs are earning 5% on their assets, but they're paying 6% on their debt. And so they want to basically unwind those positions. So they go and buy a new stable out of the market and wait, hold on. Yeah, that makes sense. They basically take, their tokenized treasuries or whatever it is, convert them to USDC if necessary, buy a new stable with those assets, thus pulling the price back up, and then they're going to repay that new stable debt, so they're not paying that 6%. So basically, whichever direction the new stable has diverged from the peg, Maker Core can just adjust the base rate in order to incentivize expansion or contraction of money supply. Let's just leave it at that for now. So those are like the basic economic mechanisms at play. Now, last piece is the farming approach that exists. I guess in a way it's like it exists to bootstrap, but actually I think if I heard you correctly, Rune, the intention is for these tokens to be continually expanded over the course of time. Basically 50 million subDAO tokens per year would be issued, having every 2 years, but eventually hitting a sort of steady state of 3.75% expansion per year. Is that right?
Yeah.
Okay.
So there's permanent emissions.
Cool.
Always. Yeah.
Cool. And so basically, so there's permanent emissions of the subDAO token. And even though these emissions here that I'm about to talk about are denominated in Maker, that's just so that we could think about them in the current terms. It will actually be in like the new governance token, which will have different tokenomics than Maker. So both the subDAO tokens and the new governance token that's intended to sort of over time supersede Maker. I mean, the Maker token and DAI token will continue to exist, but that will sort of take over the course of time. Both of those tokens, the new Gov token and the subDAO tokens, will have continual emissions over the course of time. And so when an allocator subDAO sort of gets its license, so to speak, part of the deal that it gets is it gets paid a fixed amount equal to 33 MKR per year for its internal cash. And then it's also the case that there's 33 Maker per year equivalent, again, in the new Gov token, that's available in farming rewards for the subDAO token holders. So if you're a holder of that, the subDAO token for that particular allocator subDAO, you can basically farm the rewards that exist there. Now, the last piece of this, like we mentioned a moment ago, is that the subDAO token itself is expanding at this rate that we defined, and that expansion goes to the new stable holders. So before, here we're talking about farming by holding the subDAO token. You can also farm the subDAO token itself if you're a holder of new stable. New stable, I should have said this at the beginning, is basically named to be determined, but like the stable coin in the system, which will eventually sort of supersede DAI. And so as a holder of new stable, you have a couple options for earning a return with just endemically to the system, apart from anything else you might be able to do with it, which is you can get the savings rate, the sort of new stable savings rate of whatever that is, or instead you can choose to deposit and farm the token for whichever subDAO or whichever combination of subDAOs you're most interested in farming. And so, sort of then zooming out, like part of the thought, actually, there is one last thing that we didn't mention, which is these two mechanisms right here. You might wonder, why does the new Gov token itself, like how is the value distributed to those token holders, or how is value eventually distributed to the subDAO token holders? Let's talk about that. When a particular allocator subDAO has, some conditions are met. In this case, we typed net worth greater than 30 million USD, but whatever, it could be something else. Basically, it uses assets to accumulate tokens, to accumulate like the new Gov token and the subDAO token of its own, and basically put those in LP positions, which basically adds liquidity in the system and sort of stabilizes the value in a sense of those two assets against one another. And then it actually burns the ownership of those LP tokens. So it doesn't hold those LP tokens for use later where it could sell them. It sort of permanently locks that capital up in the LP position. It's not exactly locked up because people can trade it back and forth, but like, the LP token position itself is locked up forever. So that means that the sort of circulating supply of the new Gov token and of the subDAO token will be going down. Those tokens like still exist, but they get more and more of them would get locked up in LP positions. Less and less of them would be held by people who can like choose to market sell them. And then similarly, there's a similar mechanism for Maker Core where when some condition is met, for instance, surplus buffer greater than 50 million DAI, the same sort of thing happens, but Maker Core accumulates new Gov token, a new stable token, here called Maker and DAI, and puts those in an LP position. And I assume, Rune, we didn't explicitly say this, but I assume sort of the keys are thrown away on that as well. So you're basically accumulating the new Gov token and the new stable, and that sort of can't be seized and put back into circulation. Is that right?
So it's actually slightly more complicated than that, but initially it can be simplified as that.
Okay.
You can think of it as that.
And I think that what you just said, I think is like a good caveat for pretty much everything I just said. I think as we went through this, in many cases it was like, well, it's a little bit more complicated, but hopefully this helps people get sort of the high level picture so that when they read things or see things about those more complicated mechanisms, they'll have something to hang it on. So that's my 10,000 foot summary of the new Endgame proposal.
Yeah, I think that was really great. Actually, that was also pretty useful for me to hear how you summarized that. And it's crazy though, right? That this thing is still also, that's just the interim mechanism. This is not even the neural tokenomics. So,
yeah.
But yeah, like one day there will be some diagram that really shows that, like those I used to do originally.
Yeah.
And maybe one day some LLM will figure out how to explain it simply.
Maybe.
But for now, this is pretty good.
Maybe it's worth 5 more minutes of you just commenting on top of that, and we can edit those together. So if someone watches that summary, they can then hear your kind of take on like, yep, that's pretty much right, but like, here are like 5 examples of things that, will change over time or complexify over time that are useful to have in mind to supplement that summary.
Well, one thing I want to add, actually I just didn't really add this elsewhere, but I think there's one thing with like the subDAOs and the interaction between the subDAOs and AI tools, right, is that all of the governance systems and the AI tools that Maker Core builds for its own Maker Core needs, which is very vast and handling all the complexity, the subDAOs gets to sort of free ride on that, but they get to sort of use that for more creative stuff, kind of, right? So they can do something like text to business model if they feel like it, right? Where they can be like, we want to do some brand new thing and we'll just put it into the AI tool and it'll just make it up for us. And I think that creates a lot of interesting possibility for like innovation, but also for ways for like a community to sort of express itself and not needing to be so dependent again on like an authority or a leader or something in order to try to do something a little bit more advanced, but you can actually have a more decentralized kind of direction to it. Then there was, I forget what it is. There was like there was something where I was sitting like, oh, I would add some comment there. to that part. But now
It's getting pretty
I don't
late.
remember what part it was. Yeah, something with the yeah, with, I mean, yeah, obviously there's more to the tokenomics and sort of the interactions between the like, I mean, all the economic dynamics is just, the thing is, it's hard to even fully understand how these things work. We just know that if we kind of spell out all the different scenarios of like something like the peg and the target rate feedback mechanism and so on, right? I mean, that's the kind of stuff we've been doing for like 8 years. So we just know that it kind of equilibrates, even though the way it sort of ends up happening in practice probably doesn't look like any of the examples we use to describe it, to understand it, right? But rather what happens in practice is something, yeah, it's a market dynamic thing where like the market somehow gets ahead of the more
Right.
sort of mechanics of the process.
Yep, totally.
Yeah, I can't really think of anything else. I mean, I think it was great.
Cool.
And also, yeah, I'm like literally, my brain is like fried.
Totally. Yeah.
I've never done any. I mean, this is great. This has been like 5 hours, more than 5 hours.
Yeah.
But it's awesome. And like you said, the craziest part is we didn't even like cover. There's so much we still didn't cover, which is crazy.
Yeah. Turns out doing real things requires tons and tons of complexity. Cool. Well, thank you for taking the time.
This is why our rule set already now is 130 pages.
Wow, that's wild.
And it'll become like 13,000 pages by the time we start to use LLMs, right? like to like spell out the stuff. Will be a sight to behold.
Yeah, wild. Okay.
All right, man.
All right. Thanks.
Yeah, that was great. Yeah, like definitely a once in a lifetime deep dive on. Yeah, and it's gonna be awesome. Also, I mean, there's gonna be some people that will like listen to the whole thing and they'll be like super happy that we like went through all this stuff and got all the different aspects of it. So
yeah, totally.
Yeah, I'm happy we did it. It was great.
Yeah.
Thanks so much for like taking the initiative and yeah, only you could have done it. You know, like I said, there's just most people wouldn't be able to kind of like actually dive that deep into it.
Yeah, totally. Cool. All right. Well, yeah, thanks again, and keep in touch. I'll talk to you later.
Thanks a lot.
All right.
How do I do that recording thing?
Oh,
I have to like do something with it.
I think if you just, I think you can like end the call, but just leave your browser open until it gets to 100%.
All right, so I can just click leave.
Yeah, I think so.
The red button.
Yep.
All right.
Cool.
All right. Hopefully it works.
Yeah.
See you, man.
Ciao.
Thanks a lot.
Bye. All right. Thank you for watching episode 1 of Real Confusion. Again, I'm Nevin Freeman, the co-founder of Reserve, and that was Rune Christensen, the co-founder of Maker DAO. If you'd like to learn more about either of those projects, you can find the links in the description on the video. If you actually watch this whole video and you're interested in more episodes like it on other topics, well, you're probably not the like and subscribe type person. And also, the audience for this kind of video is probably small enough that even if everyone liked and subscribed, that wouldn't necessarily convince YouTube's algorithm to show it to anyone else, nor should we necessarily, because it's such a niche thing. But nonetheless, if you're still here and you've watched this whole thing, I would ask you, what is the worst that could happen from liking and subscribing?